Good morning, everybody, and welcome to Traders Corner's Investor Summit for September, Traders Roadmap to Success. This is my favorite time of the year. The hot dog days of summer are finally over with the changing of the seasons, and we're getting ready to shift gears and prepare for a new trading environment. On our panel today, we've handpicked 8 professional trading experts of the highest caliber, and they've agreed to share their most consistent and profitable trading strategies with us today in a free online educational forum. In today's summit, we're going to learn from a wide range of topics that include the Mount Rushmore of trading formations to how to leverage artificial intelligence into an automated strategy. Grab yourself a nice hot cup of coffee, because I know our first presenter just did, and today's show is packed with great information. Our first presenter has been a trader and trading educator for over 4 decades. He has over 1 million views of his 4-minute drills for traders found on YouTube. He's a former commodity specialist for PaineWebber and has managed extremely large trading accounts as a commodity trading advisor. Here to present the Mount Rushmore of trading formations is Mr. Norman Hallett of The Disciplined Trader. Welcome back to Traders Corner, Norm.
Da, 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 da. Good yawning, everybody. I'm going to give you the expression my father used to put a smile on everybody's face. Good yawning, like a yawn, not good morning. Try that on your family. They'll love it. All right, today let's get a little more serious here. Thanks for having me, Rob. It's always a pleasure to be on one of your lineups. And today I'm heading up the lineup. I appreciate the positioning. We're going to cover today at least what I consider the Mount Rushmore of trading formations. And does anybody know who, for my first question, does anybody know who actually picked the faces on Mount Rushmore? Anybody maybe in the chat? I don't know how many people we have here, but we should have enough to get one person that would know. White screen. I don't know what that means, Greg. I think, but I'm still looking pretty good on your end. Rob will let me know.
Norm, it means you're not sharing your screen yet. We still got the intro up.
Oh, let's see. I need a screen share. I need the ability to share. So usually it's a window that pops up.
On that note, I'm going to make myself the presenter and then you again, just to make sure. There we go.
Show my screen. I think that did it.
All right, that did it.
Thank you, Greg. You win the prize. I'm not sure what it is, but I'll figure it out. I'll give you the answer up front, since we spent some time now. Good, now, thank you. The faces of Mount Rushmore. Who chose the faces on Mount Rushmore? It was actually the architect designer, the guy who actually created. It wasn't some sort of a government official. They didn't ask the congressman. But I found that pretty interesting. But I think they have the right choices here. But today we're going to kind of superimpose each of these choices on Mount Rushmore to something that I think may qualify as far as formations are concerned. If you don't know who I am, real quickly, my background is creating trading plans for institutional traders. I did that for about 12 years. And one of my books is still online on Amazon. I've written several books on it. This is Rob mentioned the 4-minute drill for traders. If you Google 4-minute drill for traders, you'll see a lot of them online. They just kind of punch you in the middle of the face with some truths about trading. There are actually over 200 of them. And somebody looked through, one of my clients looked through all of those 4-minute drills for a lot of them and grabbed some quotes from it. So they made a kind of a coffee clutch book out of it. And this was a video of when I actually made a speech for one of the, I think it was the Traders Expo. Somebody filmed it and put it on. And this is what it looks like with the 4-minute drill for traders. But I spent some time with PaineWebber as a commodity specialist for them. Only lasted about 1.5 years, where it was too salesy for me. So I created my own shtick at Hallett Commodities, where I was managing, as Rob mentioned, high-end money, and that would put it through my own IB. So we did well there. A lot of pressure. So in the last almost 20 years now, I've really dedicated my direction on the mental and emotional capacities of traders. I think that's the missing piece for most traders. Most traders have a pretty good trading plan that would make them money. Listen, some are better than others, and it matches their personality so they can follow it to some degree. But it is the mental part that costs most traders, and that's what the disciplined trader was all about. Although recently, we were training traders to be very focused on their running their trading plans, and they had lousy trading plans, so we were helping them lose in those cases. So I decided to create what I call simple trading plans, of which I'll offer you one at the end of this little show that I'm doing. So I want to thank everybody for being up this early with me. It's not easy. All right, what are the qualifications for being on the Traders Mount Rushmore? Okay, the first qualification is that it must be proven for decades to result in positive outcomes when used alone or in combination. Okay, so whatever you think belongs on Mount Rushmore, it has to be it's got to be old hat. It has to be proven through decades. The second, it's got to be accessible in private on all professional platforms. That's a pretty easy one because they're getting more and more robust. And of course, it's got to be simple to understand and apply, which kind of eliminates GAN and some other things that I can think of. In fact, Elliott wave is a very I find it to be somewhat of an elusive analysis, kind of general. For instance, when in the Elliott wave, if something goes wrong and it's not the way you thought it was according to the waves that you drew, it's because some other greater wave was influencing the smaller wave. That doesn't belong on Mount Rushmore, in my opinion. I have learned that traders who keep things simple are traders that prosper in the long term. In the 80s, I ran a firm, one of the largest option firms in the country, and one of my duties was to make sure that everybody was trading as profitably as they can. And the ones that were on the bottom of the totem pole, I bring them into my office, and they're and undoubtedly, I couldn't even understand what they were trying to do. It was so complicated. Our job, and at that point, I would say, pick your favorite 3 or 4 indicators a process and use those, eliminate all the others and see how you do. Always worked out much better. So simplicity. And I'm going to show you a lot of charts today. And it's going to be like you're looking over my shoulder at how I'm thinking. I'm going to kind of think out loud. I'm going to do it a little bit differently today. Think out loud on how I apply these Mount Rushmore equivalents. So I want to know from you first, which formations do you believe belong on your Mount Rushmore? I'd love to see a few comments here. What trading entity? I mean, what formation? What are you looking for in a chart for you to start to get excited about something about to happen? Pullbacks, interesting. Pullbacks is a formation, yes. Pullbacks and then return to trend, I guess you're thinking. Possible. Okay, good. Let's since we are limited in time, some really good trend is very good, excellent. Okay, squeeze on multi-time frames. We're gonna have to we'll have to sit down, Rick, and talk about what that is sometime. But let me show you what I came up with, and there are no wrong answers to this. So here's what I thought would be what belong on my Mount Rushmore. The first is double tops and double bottoms. Whenever I see a double top or double bottom, I start to get excited, because really what's happening? You make a new low in a double bottom. Let's say you make a new low for the day. Market rallies, comes back and checks that low, either pierces that low and responds back to the positive, to the upward move, or it continues down and you've got a trend that, say, continues. But when you test a bottom and it survives, that I find is a very positive thing. I mean, so positive that it's in my Mount Rushmore. I'm going to make a statement here that you may or may not agree with, and that is that I think that of all absence, the absentee in trading plans, what's absent in most trading plans is a plan for position sizing. I think position sizing is something that that is central to risk management. When I see a double top or double, well, in the beginning of the day, I say to myself, I'm either going to be trading 2 positions, 3, 4, 5, or 6. So I can, when I put on a trade, and I never add to a trade, whether it's going down, or I always start. I identify a great trigger, and then I put all my contracts in on that at the same time on a proven trigger. Then I can scale in or scale out. I never scale in, but I scale out as the market moves in my favor. But the idea of double tops and double bottoms, when I see those, I look to move from my minimum exposure of 2. Remember, I'm trading from 2 to 6 contracts in the futures market. I may go to 3 immediately. So double tops and double bottoms encourage me to take a larger position, not the largest, I need more than that. And again, we're going to look at some charts to apply some of this, but I wanted to just kind of point out the importance of position sizing. I think if you don't have a plan for position sizing, I really think that you should, and it really urges you to identify the triggers that are what I call A+ triggers. Okay. The second member of Mount Rushmore is RSI divergence. Now, you know, some would argue that MACD is a little bit more forward-looking, but I grew up with RSI, and I don't know if you know Hima Reddy out there. Hima Reddy, H-I-M-A, Hima Reddy, and she's got some free courses out there. So if you can Google her, and I'm sure she's been on one of these presentations. If not, Rob, we can try to get her on. But she is the RSI queen, and so I have an in-depth knowledge of RSI, not so much MACD. So I use RSI, and therefore it's in my personal Mount Rushmore. You need a momentum indicator, I think, in order to help you again with your position sizing and with whether you take a trade or not. Okay, and of course divergence. Rob and I, you know, when we're off the air, we talk about trading. I don't remember a conversation that we had that did not involve some sort of divergence of the momentum indicator compared to the price, and we'll take a look at that also. In any event, the third member of my Mount Rushmore is shooting star and hanging man. That's a single formation. I'm sure all of you know what that is, but I think the only thing I'll emphasize here is that it's probably the most misused of all of my Mount Rushmore trading formations. And I think it's because you need to see it as isolated. You need to see, say, the shooting star as isolated as it can be above all of the other trades. That's the most pure shooting star. The more the shooting star is within the grasp of the former candle, the less it's shooting. So same with the hanging man on the bottom. Again, we'll see some examples. And my fourth and final, of course, you gotta honor the trend. The trend is your friend, and it really is in trading. I think a lot of traders like to be the genius who picks the bottom or the top of a market and going the other way. I think that when I lost that love of trying to be the genius who picks tops and bottoms, my accounts really started to turn around personally. This was whatever, 35 years ago. But those are my Mount Rushmore formations, and you may have your own. Let's get into some of the charts, and we'll take a look. I like to see these Mount Rushmore candidates in combination if I can. The more I see them, the better I like it. Now, let's take a look. I think this chart is big enough for you to see this. Let's look at this right here. What market is this? This is 44. This is the S&P. Okay, and this is from last week, I'm sure, or I think a week ago Friday. I created these charts, but right here, this right here, this is your shooting star. And one thing about shooting stars is they don't have to be big to be to start turning a market around. You see another one here. Now, in the definition of a shooting star, you want to see a small body on the bottom end of the trading range, okay, this would qualify, of course, this would qualify. The head on this, the body on this is a little bit large, but still, it's got a nice tail, and this is a shooting star, another shooting star. And if you look down here in the bottom, although we had an equal price high right here, there was starting to be a slope in the RSI divergence. So whenever I see this, when it's equal, or when this is a higher price or equal price, and we're losing momentum, this is a time where you need to have your eyes peeled for your entry signal. And in our case, this is one of our entry signals right here on this unloaded gun. And you can see where I get in on the close, and you can see what happens. So this is a shooting star and shooting star presentation here. Let me look as we come down. The trend, of course, is down. Here is another. This is one of actually our loaded gun signals. This is one of our basic loaded gun signals. We have an indecision bar here, and then a movement through the 8-bar exponential moving average. This gold is the 8-bar exponential moving average, which I consider the most important moving average you can draw as a day trader. Okay, I mean, you can draw the 50, you can draw the 100, the 200, do all of that. But if you're looking for turnarounds, if you're looking for your highest probability of accuracy, then you really want to start utilizing the 8. Some consider it the 9. I like the 8 EMA. Okay, this is the 34, and it's kind of a guideline that I use in our loaded gun trading plan. I won't really get into that, but it can prevent us from getting into whipsaws, which everybody really appreciates. But here is a, now this is not a hanging man. Hanging man is something more like this right here. Okay, well, it's actually not a hanging man would be on the top, but whenever you see a long tail, it may not qualify for a hanging man, but it starts to get my attention. And then when I get a trigger, this is, had a short-term pop for me. So for scalpers, this would have been a nice signal for you. This is a bottom here, a bottom here. So this is a complicated double bottom that led to an eventual turnaround. All right, let's take a look at another chart. This is a double and a triple top divergence. So I call this happens to be a triple top that shows a divergence. As you can see, this is a high here, a high here, a higher high here, and another, and even a higher high here. So you're still looking at an upslope market, but look what's happening to the RSI. Not as steep as sometimes it can be, but certainly when you have your highest momentum in your lowest price point, then you got to pay attention to a descending RSI. So I'm looking for a place to short, and winds up, of course, to be after the third top made. This is too complicated to call it I would actually call it a double bottom here, because we did achieve the same price. And this right here, do you remember what I showed you before as a signal with a hesitation, what I call a hesitation candle, a small bodied doji or spinner, followed by a strong move through the 8-bar exponential moving average. This is looks like a revolver pointing up. This is the way the trigger is, and here's the barrel of the gun. This is one of our basic loaded gun formations to go long, and you can see it worked out pretty well. So, but I want you to kind of gaze at the charts that I trade off of. How simple can this be? Now, I'm not describing a trading system here other than showing you the trigger, but the most important thing I think in trading is when the hell to get out. I mean, you can get into they're both important. You got to get in at high probability times where you at least get the pop, and you have to be able to get out responsibly. Okay, the biggest dilemma for traders is, should I let a trade go when it's going well, or should I take the nice profit that it gives me early? So I suggest to all the traders that I coach to at least take two contracts. If you're trading stocks, 200 shares if you traded 100 share lots. Always take at least two contracts. Treat one as a scalp and one is what I call a runner. This way, you never get, you don't have that question of, should I stay or should I go? Should I take my profit here? That's very important, because you find yourself in that situation a lot, and you can remedy that situation by always taking at least two positions. So in this trigger right here, if I were to take two positions, I would have measured my scalp right in here. I can't get into everything, but I would have taken my scalp here, and I would have let the other one go. The other one would have been out here. So I wouldn't have been in to the very peak, but I would have had a nice scalp here, and I would have had a nice exit right here. But look at this. Here is a this looks like a shooting star, right? And it did follow through, but this is not a shooting star. Why? Because it really, this is not a run like this. Shooting stars have to be at the end of a trend run, and a hanging man needs to be at the bottom. And we'll see some of those. See, this is again, what it is a candle with a tail that is relatively long, that challenged the low. What is it? You can't call it a hanging man. It has to be at the end of a run. Okay, so again, triple tops and double tops, they belong on the Mount Rushmore. You can't really you cannot really trade unless you honor the trend. Rob, are you there? Is this a 45 minutes, or do I get an hour here?
45, Norm.
45. Okay, great. So we're good. So here's a trend in a shooting star. This market, I'm back to the S&P. This is the EMINI S&P. Love this contract. You know, it's probably the best contract to be trading for traders. It's the most volume. It's the most consistent, and you know, it gives you some nice runs. But look, we've got a beautiful trend here, and you can see. Look at how the trend is stays on the north side of stays on the northern side of the 8-bar exponential moving average. Okay, this is why this is called the golden mean, I guess they used to call it. Now you see the 34 here. This stops us from getting out to, and for instance, when you come to this part, you may say to yourself, holy smoke, should I be getting out or in? The fact that you are still within this Fibonacci EMA, the 34, you stay in the trade. So even though you had some pops below, you would normally, you may want to stay in this trade. And there's other conditions I can't go through. Please don't trade based on what I'm telling you here. I'm only giving you bits and pieces of a full trading plan, but I just wanted you to see how respectful one should be of seeing a trend hug an 8-bar exponential moving average. So here is this is a shooting star right here, and it's a really nice shooting star. Remember, I said it doesn't have to be big as far as a shooting star is concerned. It doesn't have to be a big tail. Bigger sometimes the better, but it doesn't have to be. I mean, you can count this as the end of this particular run, this gigantic run, and it did. No, it did finger the top of a run, or you could have called this a run of which it fingered. But at the same time, it gave us a double top, which happens often to big long runs. You should kind of be aware of that. When you have runs of this size, sometimes it invites a double top where the market starts to come down, and then most people are now considering it just a correction. I think somebody mentioned it in the chat, corrective action to a continuation of a trend. But you wouldn't have been in this once that second long long wick appeared. You've got an equal top. You've got an RSI that's descending again. The RSI divergence is, so we've got this as far as our Mount Rushmore is concerned. We've got a nice Mount Rushmore piece here, and we have a double top. So here we have 3 of the Mount Rushmores in one trade. What would I be doing? And this is a signal. This is one of our loaded gun signals. So we would have been short right in here, and with a very nice risk parameter up here if it made new highs. But look at this, it really came down nicely when you have all of your Mount Rushmores in order. So the double top, the divergence, and and featuring a small but deadly shooting star. Okay. I will say one thing that, you know, years ago, actually I think it was 2011, I held my own extravaganza. It's the only one I've ever done because it's just too much work, to tell you the truth, where I invited, there were 100 people that came to this particular venue and a hotel. I think it was a Trump Towers in Miami. And what happened was one of the speakers was Steve Nissen, who calls himself the godfather of candlesticks, and he may very well be. I consider him the guy when it comes to candlesticks, and he always told me that when you see, didn't always tell me, he was up on stage, and part of his presentation was that he says that most shooting stars like this will retrace at least 50% before it continues down in that direction. And look, he was right here. I mean, it did retrace half of the range of this candle. And here it even looks like it retraced almost half, if not half, of this candle. So something to keep in mind. Expect some sort of retracement when you go short on a shooting star. Just kind of a side note. I'm opening up my brain to tell you what I'm thinking of when I'm trading. So I'm looking for a place if I wanted to be a counter trend trader to get short. But you know, I'm really looking to ride a new trend. And this is a nice trend developing toward the end of the day. All right, let's keep going. I've got about 15 minutes left. Here is a trend and a double top. So you've got the trend here. Again, I want you to see what's happening. This is an 8-bar exponential moving average. Look how nicely. Now, of course, if I made it a 2-bar exponential moving average, it would even be. I mean, the shorter the count that you're dealing with when you're looking at a moving average, the closer it's going to hug. But still, 8 bars is a lot of time, and when you see it running like this, you're going to get a nice continuation of a trend. And look at this, beautiful. We have, I'm not sure I'd call this a double top. I mean, I guess it is, but don't know why I made it like that. But I guess this is the double top I was talking about. Yeah, this is a top here, a check here of the double top featuring. See, this is a really nice shooting star. It's probably the second best type you can see. The best type is if this little body was really at the top here and the tail was even taking more people out, because anybody who's looking for a correction and a continuation of this trend, this came from a trend, a little correction, and now you want more, is going to look to be, you know, a buyer at new highs. And so this small amount of trading really shut out a lot of people, and as the market goes in the wrong direction to the longs, they start to bail, and that turns the trend around. So here is again, this is one of our loaded gun signals, and boom, we're down. We're in here. We take our scalp here. Remember, I said we always take on 2 positions. Scalp here, and then you're following this down to this area. There's no signal here for us, but there's another short signal of the loaded gun. But I just wanted to show you what it looks like to have a double top and then this shooting star. And as far as the decelerating, this looks like this right here, this RSI read looks like about the same. So you don't have any RSI indications here. So really got to respect the trend. You want to really stick to a trend. when you can. Again, one of the best ways I've found, you say, well, where do you put in your stop when you're climbing like this? I like to put the stop in at 3 or 4 bars before, and you actually would have been out here, but back in here. So you want to preserve. That's the toughest thing to do in trading, is to preserve at the same time you're letting something be all that it can be. And I think these Mount Rushmore ideas can really help you do that. All right, a double top, double bottom RSI divergence. You've got your double top here, which is perfect. This is one of our loaded gun signals that you would have gotten your scalp in, and you would have broken even on the second position, the way we do it. But you've got a nice run here. You got a top, and look, you've got a slightly descending RSI. Slightly descending is okay. I mean, it gives you a little bit of a hint that it's not. The continuation may be tough to come by, and it certainly did here as it failed to reach on what it tried to be a third test of this high, which never happened. So you come down, and 1, 2, 3. 3 bottoms, or if you want to call it 2 bottoms, featuring a couple of tails. Love the tails. Again, I don't know that I'd call this a hanging man, but it's got too big a head on it. Maybe it's who is that? Maybe it's a Shaq who has a big head. This is Shaquille O'Neal hanging man. So, but really kind of worked out. This is a loaded gun signal to go long, and you would have had your continuation here. So just want to point out that the slight RSI divergence, certainly you have the highest here and this is actually pretty good divergence, because this is where the high was in the RSI, and you can see the deceleration and the acceleration here. It's looking for a turn, but you got to wait. You got to wait for your signal. Okay, you can't just jump in. Hanging man, we got one right here. This is kind of a nice one because, see, it's the body of this is away from these. This one occupied a little bit of its body, about half. But the more the shooting star or loaded gun could be isolated, the more effective it is. So when this is happening right here, I always look back. Here's a trend that came down, and this was you got another nice hanging man here, very nice. And I'm looking back and I'm saying, look, this is testing another bottom. So here we've got a double bottom, if you look at it that way, and again a triple bottom followed by one of our loaded gun signals here. So you need to have your trigger, and our trigger would have been right here as we cross over the 8, and we would have been long here for this ride wherever it took us. Okay, and using Fibonacci retracements for trend resumption. I do that sometimes. Not going to get into that here. It's not on the. I did a presentation recently using this slide about the Fibonacci, and but you can see how when a market comes down like this, and I like to see it. This is one of the true Fibonacci numbers. I call it 0.38 and 0.62. These are the two. I don't know where they got the 50% from, and these others are called Fibonacci numbers. But the original ones are the 6.1 and the 3.8. Let's call it 6.2 and 3.8. And you can see how in this particular case you had a nice market come down, touch the Fibonacci level, and wind around it, gave you a double top at the Fibonacci level, and came down. So if Mount Rushmore had more faces, you can. There's a lot of power in turning around at a Fibonacci number like this, which it wound up doing. But look at this trend again. That 8, just beautiful. Beautiful thing, and this time the 34 is in the red. But the fact that these little pimples that came up that didn't cross the 34 with any kind of gusto, you would have remained in this all the way down. So I hope I'm giving you enough to confuse you, but I wanted to show you that here's a double top, and this is not a divergence because we have a lower low, a lower high here than here, and we have a descending. So you didn't get any help here. But it did, I guess I showed the continuation here. It did wind up continuing down. Okay, so a little bit, listen, one of my one of my recent customers, maybe actually this came in about a year ago, said your processes are usable by every trader for every trading style to guide each of us in creating your own personalized system. The tools have developed me. The tools have helped me increase my profit, win ratio, confidence, most of all my job satisfaction. And as a full-time trader, that's been the greatest benefit of all. You know, when you look at things when you're satisfied with your job, it's not a job at all. But you know, when you're struggling as a trader, and keeping things simple is really the way to trade. Get rid of all the crap on your screen. This is from Alan. He's a real estate developer who wasn't doing much trading several months ago last year, but now it's back to trading because the real estate market is tough. So he's got multiple streams of income. I'm not sure if you read this, but I'm now using Loaded Gun exclusively. I thought my problem was psychological, when in fact my system just didn't work. And I can't thank you enough. Peter's a great trader and was struggling on the break-even line, which I think is the worst place to be when you're a trader. You know, you look at your monthly statement and the bottom equity is the same as the top equity, and you got all these trades. I mean, why? That's a lot of energy for nothing. But it makes you think you can still do it because you're not losing, but you need that extra, that extra oomph. And Loaded Gun gave him that extra oomph. He cleared out his screen. He used the stuff that I use, the simplicity, and used 2 or 3 different triggers, high probability, always took 2 positions at least, so traded one as a scalp and one as a runner, knew how to follow a trade correctly. So all of that is, but I'm going to give you a bonus as I'm offering you the Loaded Gun Simple Trading Plan. And the bonus is one-on-one, unlimited one-on-one coaching for the first 90 days that you own it. You won't need it any more than that. As soon as you invest in the Loaded Gun Simple Trading Plan, you'll get an email with a calendar link that you'll be able to schedule your personalized one-on-one. Everybody that takes today, you're going to be working with me, okay? Through one of my assistants or me. In this case, it's going to be me. So I'm going to proceed to help you learn a little bit about, I'm going to learn a little bit about your trading background and advise you how to get a quick start with your new purchase. And as you perfect your running of the plan, I'm going to be there if you want more meetings. Listen, I'm confused about this. We get back on Zoom and we share our screens and I show you exactly how to tighten up the imperfection that you may have in the understanding of what Loaded Gun is. And again, I call it a simple trading plan because it's relatively simple to understand, okay? So let's keep going. I just wanted to make sure that you knew that I'm going to be there. We're going to be working together on this. You, me, and coaching sessions if you need them. The truth is, most traders have one session with me. 1 or 2 sessions is really all that the majority of traders need because it is simple and there are some questions that come up when you put yourself out on your own, and that second meeting really wraps things up. But after that, and to tell you the truth, I don't count 90 days. You know, if it's 180 days and you have something that you want to share with me, then we can do it then. I just want you to be successful, okay? And having a simple trading plan is the way to do it. So the Loaded Gun Simple Trading Plan gives you the core Loaded Gun trading plan, which is some of the things that I talked about today, but the basic system, how to get in, how to get out, how to defend, okay? That's what the core videos are about. I'm going to give you all the nuances. The nuances are something that is unique to me, not to me, but to what we do. Because I spend so much time with the mental and emotional issues of traders, I know that some trading plans and some elements of the trading plan are more favorable than others. For instance, my accountant has the patience of a saint. I mean, he can wait and wait and wait. Some don't have patience. A lot of traders like me, I don't have a lot of patience. So I like a trading plan that that fits me. And we have some nuances on how to allow you to get into a trade earlier than those that have the patience and still be in a good position. Or so the nuances are things that help you to tailor the basic core Loaded Gun trading plan to who you are. It's very, very important. And there's not much I can get to it right now, but I will say that the core Loaded Gun trading plan is really where you want to spend time, of course, and then you want to adjust it based on these nuances, these tweaks based on your personality. So they're optional changes you can make, and it really helps you to stick to your trading plan, because again, you know, the mental and emotional part, sticking to your plan, you got nothing unless you stick to your plan. And then we have monthly get-togethers. The last Wednesday of every month, usually at 4 o'clock, all of us get together in a meeting on Zoom where we have all our little boxes. In fact, that 34 RSI that I showed you, 34 EMA that I showed you, that was contributed by a guy named George Fee, who is a concert pianist when he's not trading. He's a retired concert, I mean, of the highest order. I'm talking, you know, on some of the grand stages of the world. He is in our club, and he came up with he showed me this 34, and I said, wow, this. And so I tested it. And I didn't accept it for 6 months, okay, because I don't like to, you know, sometimes you do a new thing and it works when you the first couple of months, and then all of a sudden it doesn't work. I need more than that. So that 34 really was a good defender for us. Really, also when it's when the 34 was to my back in a trade, it's hard to describe what that is. I would adjust my position sizing. But again, these monthly get-togethers are a chance for all of us to talk about what's working for us, what they're maybe a little confused about, and so on. And you know, we've got a lot of sharing the wins is really what I like to talk about, to encourage the new people to just stick to the darn core trading plan and not start jumping off it. And of course, I'm going to give you the unlimited one-on-one coaching for 90 days. Okay, but here's my personal guarantee. I am so confident that you're following the loaded gun simple trading plan will result in you getting funded by a prop trading firm. I'm very much into prop trading, and whether you're prop trader or not, of course, this is going to be a great plan for you. But I'm speaking to prop traders out there here. I'm so confident that by following this trading plan, you're going to get funded by a prop firm, so that you're risking their money and not yours, and yet still receiving 90% of what you generate. That's what prop trading is about. Just share your trading experience with me, and that you followed the simple rules. And if it didn't work for you, not only will I refund your money, but I'm going to help you reimburse some of your loss by giving you an extra $500. Okay, that's how confident I know that if you follow the rules, you're going to do well in this trading plan. And if not, you get your money back plus. You know, I probably shouldn't have stuck this in for a general meeting like this, but I'm very, very hot on prop trading. If you haven't looked into it, you may want to email me at nhallett@thedisciplinedtrader.com, and I'll send you a paper I wrote on it. nhallett@thedisciplinedtrader.com. Anyway, here's my offer to you: the simple trading plan, the core, as I mentioned to you. We have the nuances that I've shown you, the optional rules that you can put in based on who you are as a trader. We have a Facebook group. I didn't talk about it because it's not really that active. I try to get it more and more active, but generally the monthly meetings is where all the activity is. So you get all of that in the loaded gun simple trading plan. Plus, I want to work with you. Let's do this together. I know it works. People who are using loaded gun knows it works. I want you to know that it works. So you can have as many meetings as you want with me. I did have somebody that just, you know, kind of made up a question and met with me every week for 90 days, and I didn't mind that either, because it really tightened up. However you want to use this, and you'll have email access to me. If you have a quick question about a trading plan or about trading in general, just email me, and I love to shoot little videos. I'll send you little videos answer to your question. So I'm really going to be here for you. Okay, so you've got the loaded gun simple trading plan, the core, the nuances, and the monthly meetings. You're going to get 90 days of one-on-one with me, and we offer it on our site for $19.97, which is a very fair price for what I'm talking about here. But I want to give you $1,000 off today for this. Okay, and it's good. This offer is good for the day. Okay, it's good for the day, but you're going to need a coupon code, and that coupon code is Rushmore. Okay, wasn't very imaginative, but if you go to thedisciplinedtrader.com/LG, as in loaded gun, simple trading plan, you'll see the simple trading plan loaded gun there. So you'll see the description of it again, and you'll see the coupon code near the bottom that in the shopping cart part. It's all on one page. I don't make you click a lot of pages and capture your email address like a lot of people do. You either want this or you don't. And that's what you got to do. Go to thedisciplinetrader.com/LG and use the coupon code Mount Rushmore. I think that wraps it up.
Norman, thank you so much. I loved your topic today, the Mount Rushmore of trading formation. And I have to give credit where credit's due. Great information. And now I see why your topic was named the Mount Rushmore. The formations look incredible. It's always great to have you on Trader's Corner. In the background, I found Hema, and I sent her an invite to present on our show. And over 1 million views on YouTube. We know that's an accomplishment. Ladies and gentlemen, Mr. Norman Hallett of The Disciplined Trader. You can find him at thedisciplinedtrader.com. I put the link, the coupon code, the everything in the chat box. If you're interested in being mentored by a professional trader with 40 plus years experience who can pass a prop trading evaluation with ease, then look no further. You can learn more by clicking on the link in the chat box. Thank you again, Norman. Appreciate the conversation before the webinar started. Always a pleasure. Please come back and see us again. Enjoy your weekend, brother.
Okay.
Well, ladies and gentlemen, that brings us to our next presenter, who spent 5 years at a grain brokerage in the City of London's financial district, which preceded an interest in commodity trading. In a U.S. review of the intraday Chicago futures market developed into EMINI Financial Index Instant AI program for beginners, intermediates, and advanced alike, it better levels the playing field with major corporate computer trading programs. 15 plus years of study and work finally resulted in the release of the DMIC 2059 proprietary software. Here to present breaking the code of the intraday E-mini chaos is Mr. Alan Fitterman of DMIC 2059. Welcome to Trader's Corner, Alan. And do we have the wrong screen up? Because I see your desktop.
He almost has as many icons as I do.
Oh, mine's covered. Alan, would you like to unmute yourself? There we go.
Okay. Can you hear me now?
I can hear you now, but we're looking at your desktop. Do I have to switch you so you can pick your other screen?
I don't know. Are you on screen two? Can you see the PowerPoint?
We're not looking at the PowerPoint. We're looking at the desktop. If you go to the top of the control box for sharing and pick the little down arrow on show screen, it'll let you switch them.
Okay. I'm looking for that.
The control box window that has sharing audio dashboard.
Oh, yeah. Okay.
Click the down arrow on sharing.
Click the down arrow on sharing. See where sharing is?
Yeah.
Yeah, click that down arrow.
Yeah.
That down
And the first option in that box is show screen. Click the down arrow on that and pick your other screen.
No.
Can you see that?
Go up to click that little arrow. Little down arrow.
Yeah.
Yeah, there you go.
Okay.
Now it should say
Sharing.
You should be able to pick your second screen.
Okay. Does that say sharing?
I'll tell you what, rather than doing that, why don't you move your PowerPoint presentation from the screen it's on to the other one?
Oh, okay. Good idea.
yeah.
I see it coming in. And now if you want to, hit the easel at the bottom we talked about to get into presentation mode.
Yeah.
Right.
We seem to have two screens still.
You might have hit the wrong one. If you go to display settings or whatnot.
Display settings.
All the way at the top toward the left.
Okay. Yeah. So which one should I hit?
So try that one.
Swap presenter?
Yeah.
Okay.
There you go.
There you go.
All right. So I'm okay to go now. Is that it?
You are. I'll be here in the background if you need any help. You're good for the next 41 minutes.
Okay. So let me first of all say thank you for attending today. And let me just read the disclaimer. Futures, foreign currency and options trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. The information on the STIMIC 2059 website is solely for informational purposes. Nothing on this website is a solicitation to buy or sell futures or options. No representation is made that any account will achieve profit or losses similar to those discussed on this website. Persons acting on this information are responsible for their own actions and choices. Past performance of any trading system or methodology is not necessarily indicative of future results. CFTC rules 4.41, hypothetical or simulated performance results have certain limitations unlike an actual performance record. Simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have over or undercompensated for the impact, if any, of certain market factors such as lack of liquidity. Simulated trading programs in general are also subject to the fact that they are designed with the benefit of hindsight. Okay, having read that, let's go forward to today's program. Today's program is about the proprietary structure, logic, and architecture for contemporary understanding of intraday EMINI chaos. Breaking the intraday code of the EMINI futures is something we'd all like to do. The proprietary HOD, high of day, and LOD, low of day indicators constructed to identify in real time when the last HOD or LOD is in place. We're going to look at time momentum and price momentum, exclusive intraday time and price meter, and how it works to recognize the instant GPS position of the market. And we're going to look at early recognition of trend days, non-trend days, and volatile days, and how to manage these different days. One of the things is the keys to defensible line theory and offensive line theory. So we're going to identify exclusive cross-market signals and the checks and balances by our proprietary times teams constantly monitor the market. Now, this was a specialty study based on the S&P 500, NASDAQ, Russell 2000, and Dow. And the software has also been applied to crude oil FDAX, the British pound, the Swiss franc, the treasury, and the bonds. And it adds the next steps to market profile, VWAP, value area, intraday wave theory, Taylor, Mandelbrot, and combinatorics. And it's for beginners, intermediate, advanced, and we have an individual support program for everyone. Now, it's aimed at a new and personal cutting edge, allowing you to be on a strategically improved level with corporate computers and on an intrinsically more level playing field. Now, chaos is defined as dynamic systems whose apparently random states of disorder and irregularities are actually governed by underlying deterministic laws that are sensitive to initial conditions. To reach logic and structure in the futures markets, we need to recognize self-similarity, fractals, and self-organization. Small differences in initial conditions can yield diverging outcomes for dynamic chaotic behavior, as for example in many natural systems such as heartbeat irregularities, weather, and climate systems. Intraday futures markets need a multi-dimensional approach. Where do fractals start and end, and where are key reversals likely? How do we recognize time momentum and price momentum as the day unfolds. Volatility in contemporary intraday markets makes it essential structure, logic, and architecture are built into each chart. Older standard measures are set aside, being a poor match for current corporate computer systems. A majority of traders are projected to lose using rejigged older measures. We replace these older standard measures with proprietary chart indicators graphically visible. These proprietary indicators are based on many years of real-time research, and let's look at the essential elements of intraday analysis. Time has been the same since the market opened over 100 years ago. All prior research and market programming was influenced by time. Each new day, time sits on its own canvas and cannot escape. It seems logical that time's fixed canvas has essential moments in each day. By recognizing the intraday chaos pattern, we can project time momentum and price momentum on time's canvas. There are many combinations and structures in any day. For each new intraday market, whatever combination appears, an instant indicator is shown, encompassing the current day's context, character, and trend or non-trend. Will the market trend classic up or classic down, or be a non-trend doji day, or an extremely volatile day? Is a fast breakout rally or a fast sell-off projected? Graphic chart lines and panel indicators are remade every morning to fit the structure of each new day. We match the context and structure of the day and follow through during the day using our exclusive time teams as checks and balances. At any time of the day, the GPS program informs us where the market is and what the GPS objectives are met. Chart examples below define the logic. Moving on to a recent chart, all the lines you see on the chart coming up are DIMAC 2059 lines. Now, let me explain this panel to you. The first heading is DIMAC, and the panel has 5 headings. The headings are DIMAC, ranges, versus island, orange time teams, and DIMAC up and down. And let's explain first.
Uh-oh, Alan, did we lose you? Everybody, I am trying to find him and get him back. It looks like his internet connection dropped because he is out of attendance. If everybody doesn't mind, I'm going to put it on hold for a second and I'm going to give him a call. Ladies and gentlemen, I apologize. Our presenter seems to has had his internet connection go down. I am trying to get him on the phone to make him aware and get him logged back in. Please stand by. I apologize. Well, I am having difficulty reaching Alan. I am going to try to come up with something. Ladies and gentlemen, my apologies for the technical difficulties, and we will be back as soon as we can. Alan, I see you're back. You want to unmute yourself and share your screen? I see you're unmuted, but there we go.
I think he sent me the link, but I think he sent me the presenter. I just logged in.
Let's try the other one of you.
I hear him.
I've got you logged in, and I've got the one with audio. I've got you logged in twice, and I've got the one with audio made the presenter. Are you presenting from a different machine than you're doing audio from?
You're talking to me?
This is Alan, right?
No, actually.
All right, ladies and gentlemen, I'm going to assume that Alan is not going to be able to get back on, and I am going to have a polite conversation with Mr. Tremper in the meantime. Steven, you're live. You want to unmute yourself?
I'm here.
All right. I apologize about the technical difficulties, but being the next presenter and in attendance, you and I are free to have a trading conversation to fill the time slot. Do you have any charts, anything? Do you want to talk politely about some trading related stuff?
I can share the screen and let me make sure I got the right one. I believe this. You see my mouse?
I do. I see your mouse and today's date. I see the splash screen to your presentation.
As you should. So that's what I was going to present in a half an hour. I suppose I could certainly jump ahead if you'd like, or I don't know what you want to do, just impromptu go through some things that I have. Basically, this presentation was going to be about, creating discipline, the three things that, I feel is important anyway. And again, without going through my orientation of who I am, I'm just one of you guys, I'm just a trader. I was a fireman, and on my off days, I started doing this because my wife said it would be, I could be a millionaire in 2 weeks. And so needless to say, I'm still working on that. But needless to say, a lot of these tools have been created because of me and the issues that I've had. So discipline manager being, the first thing, and not the oldest one that I had, but needless to say, it's probably the most common. And that's how I got involved with Ninja. And that was to, they asked me to be a vendor because there was people that apparently had the same problem I did. And if anybody's had the problem of, fear of missing out or FEMO or any of those kind of things, then you probably can relate. And that was an issue. And so I had to kind of get over that. And I think I have. Well, I can't say that. I know for a fact that I still have my problems. And then the other thing that we had is trade. And, I've come up with, I just get so fed up with, looking at screens all day long. It's I can't how many countless hours. And of course, when you go to the restroom or go get a cup of coffee, you come back and you've missed it. You've been waiting for it for hours. It just isn't moving. So you're like, oh, I'm gonna get some coffee. You come back and it moved. And it's like, you just get aggravated. Then you chase and oh God, it's just a nightmare. That's why I can't trade ES. It's just like watching paint dry, if you ask me. I've more adrenaline rush, so I need the NASDAQ. In any event, then it came that I needed to monitor what you're doing. You just can't haphazardly just go in and out all the time. The brokers love that. But so that's how this presentation kind of be, basically just creating the discipline and your rules in essence, and then setting up your trade. And what I have is I had trade setup set up, or logic, if you will, rules. And then I'm like, there's got to be a way to automate this because I can't, just sit in front of a screen. The whole purpose is getting away. So that's still a work in progress. There's a lot to it. This whole AI business is just, I've tried all kinds of, bots, robots, algorithms, whatever you want to call them. And it's just, there's just so many nuances and all the conditions. You could have a bot that trades a certain position and it will, win all kinds of money. You could take the same logic and it loses. So what's different? The logic is the same. It's not going to take a trade if this doesn't do that. And so you have one winner and one loser. Well, what's changed? The only thing that's changed is the market, because your logic hasn't changed. And so it's got to be dynamic. And that's where, kind of Helix came into. And because I had one indicator that was called entry zones, where I had a zone on the screen and it would kind of show me this is the area. If other rules agree, then this is the kind of area that I'm looking for. And then I had another one, which trade management, because I got tired of moving things around and because it's always changing. So I had a strategy, it was trade management. And when I married the two of those together to go towards this algo so I can, get away from trading, and I married them together. And so we're looking for a name, and the name Helix came about, and that's hence Helix. So, and since then we've added more things. So it's, Helix on steroids, I guess, but needless to say. And then the latest thing was, you've got to monitor it. And I've had I call it the status box. I've had that for, a couple of years, I guess. But ever since these prop firms have come to light, the hedge funds and whatnot, we could have a conversation on that if you want about this latest thing that's going on. But there's got to be a way to monitor your drawdown, because especially with your unrealized P&Ls, especially with NASDAQ, which will go way up, and then you have to give it some room to grow, and it comes down and pops you out. Well, it counts that. And so you've really got to monitor your margin or drawdown. You know, some people call it different things, but it's the same thing. You know, you've got to monitor that. And so I just added a component, a line item into the current status box that I had, not knowing that it would be a big undertaking. I thought it would be simple. But needless to say, months later and mucho dineros later, you know, it finally kind of got done. There's still some tweaks that we're still working on. But anyway, so that's what came. So that's basically how I trade. You know, you set your rules, what you're going to do and how you're going to handle it. And then you trade based on, you know, those rules and what your setups, et cetera. And then you monitor your status. And it's pretty much that. So that's this presentation. I can kind of get started on it and be slower and, you know, slow it down a little bit if I'm going to fill up a little time for the next presenter. You know, you kind of call a shot on that, Rob.
Let me thank Alan for being here. Apologize for the tech difficulties we had. If anyone would like to, you know, see the DMIC 2059 in action or visit the website, it's dmic2059.com. We hope Alan is able to solve his technical difficulties, and we hope he has a great weekend and that we get to see him again. But in essence of moving on, Steve, I would like to offer you the extra time. I told everybody at the beginning of the show we had a great lineup, and you are obviously no exception, being in the fire service for 40+ years, trading futures on his days off. He has a great presentation full of brand new cutting edge material. Steve is best known for the Discipline Manager on NinjaTrader. Ladies and gentlemen, create discipline, trade, monitor status is Mr. Steven Tremper of Tremper.com. Welcome to Traders Corner, Steve, and go ahead and proceed with your presentation.
Okay, thanks, Rob, for the kind words there. So I want to, you know, give you, you know, say thanks and give the opportunity to introduce these three things I just talked about: the Discipline Manager and Helix is the trade part of it, and then the status box, which is the status part of it. They're basically three tools that I've created as, you know, just from my time, the things that I need. All of my tools that I have on here are things that I've done for me, things that I've struggled with to overcome. And I'm just passing them on. A lot of things on my side are free. Even the community, under the community tab, you'll have we have the trade room, and actually it's really not a trade room. We don't call out trades or anything. We're just basically, if anything, it's more of a boiler room. We're just a bunch of, you know, guys are sitting there, and we're just waiting for the market, and we talk back and forth about, you know, what it's you know, what do we think's happening, and obviously it's quiet if it's busy, and we just get different opinions, and we're just talking because it's a lonely game. You know, I'm down in the basement, the trade cave, so it's lonely down here. I don't have any windows, and but it's fun to have be attached to other people, like-minded people, and be able to overcome that. So I've shared a lot of this stuff, and then we have the social hour in the aftermarket. So if anybody wants to talk, and I try to use that for technical support. If anybody has any questions, we could share screens, and you know, we help each other out. And I've called on other people we have the Skype traders group, and there's other people in there, and you know, that's pretty much 24/7. I'm not in there all the time, but somebody's in there, and I can't tell you the times that we've helped each other with you know, how do you do this, how do you do that, or I'm having issues with this, that, and the other. So basically it's kind of turned into a technical support help group, which I'm thankful for, because it helped me just yesterday actually with my Gmail, which has nothing to do with trading. In any event, so today's summary, I just go over we're gonna, as I mentioned earlier, we're gonna be talking about the Discipline Manager, and it just mandates enforcement of your trade rules. Everybody has rules, but you know, as we're all human, rules are meant to be broken, and this just kind of puts a little pressure on that. And then there's Helix, which I talked about, and that's the trades, and that's the manual or automatic. Manual is how I trade right now. I couldn't imagine going back to clicking buttons the way I used to do it. Now it's just kind of all set in stone. Once I click go, it's pretty much takes it. And, you know, of course, you always monitor and whatnot, but you can move your stops and targets, etc. But needless to say, it's all predefined, if you will. And then what I'm currently working on now, and there are some that are done currently, some setups. There's multiple setups in there, but the one that I'm working on right now is just one of the setups, and that's my favorite, and that's what I'm working on. It's not done yet, but it's coming. There are a couple other setups in there, and in the settings, you just get to pick the setup that you want to run, and then you could tweak your own. It's a lot of settings in there. I'll go over that briefly. Now, these three indicators, and then the status box, obviously, last one I just talked about, as far as, you know, up-to-date status of where you're at as far as your numbers and your money. You gotta protect that, especially with you know, drawdowns and these funding firms that have come into light. But these three tools, I've had a webinar on the Discipline Manager and Helix. I never did one on Status Box. And what I'm trying to do is just combine them. So I went into the presentations and I've spliced and edited some different screenshots. So I'm gonna go through all of these to kind of, you know, make use of my time, and so I'm going to just touch on it quickly. So if there's any questions, by all means, you know, we can go back at the end. But this is just more of a brief overview, and there's trials on there, and so you can, you know, download, play. But you know, Discipline Manager has a lot of settings. Helix has a lot of settings. Status Box kind of easy, but the other two are difficult, and so there is some learning curve there, and you don't have to be a coder or anything, but you have to kind of know what you're looking to do, and I'm there to help you. So without further ado, as he mentioned earlier, I'm just me. I'm the CEO. I do marketing. I do this, do that, do technical support. I even clean my own office. You know, so I'm everything here. Been in the fire service 30 years. Retired in 2019. I started learning prior to that, you know, on my off days, and then basically when I retired, I basically live in the basement. And now I just trade futures, and I've played around with options and Forex and all that. And after failing with all those, I just found futures to be more my style, if you will. So that I don't foresee going off that and moving around. I still have an options account, you know, and I still have a Forex account, but I really don't do anything with it. And I still struggle with the psychological side of, you know, the emotional part of it, especially when it comes to money. So, I mean, you're not alone, and that's where this is all has come to be. And actually, that's how, you know, Discipline Manager was originally started, because I just needed, you know, some help. So I'm not going to go through all these, because at the beginning of the video, if you've already seen this earlier today, if you're been in the presentation, if you're watching on the video, you're going to get it. But long and short of it, you can pause the video and read all this that is required by the government. But actually, with Discipline Manager, if anything, it stops you from trading. So I really don't even need to do disclaimers or anything, because it doesn't take any trades. If anything, it stops you from taking trades. And the way I look at it is, the Discipline Managers, you got to think of your company as you are the boss. You're the CEO of your trading business. And even if that's just you or your whole family, or however you've got it, it doesn't matter if you have $100 or $100 million. You are the CEO of this business, and everybody falls under you. So what you do as a CEO, you delegate your rules. You've come up with some rules, and you delegate the rule to your Discipline Manager. And the Discipline Manager is the one that's going to, you know, monitor your trading employee, whoever's trading for you. And in this case, 90% of you probably watching, you are the employee. So not only are you the boss, but you're the employee. And it really has to be a fine line between separating that. You really do have to separate that. So what I mean, though, is that let's say you're trading in the heat of the moment of the day, and you get out of line as the employee. Well, the Discipline Manager has to come in and say, hey, you know, I'm just having a bad day. You know, let's take a break. Let's get out. Let's stop it and come back tomorrow. You know, somebody needs to do that. And if your spouse is, you know, trading with you, then that is one Discipline Manager that'll probably say stop, or take your profits and stop, or whatever the case may be. But then when all said and done, you look at your week on Friday or Saturday morning, or whenever you do it over the weekend, and you're in this quote unquote meeting, And you want to change the rules a little bit because, you know, you've evaluated some and you tweet, you want to get in earlier, later, whatever it might be. You want to maybe give it a little bit more room, so you have to up your prices a little bit, or maybe you want to add a contract, etc. So you come up with these new rules, and then you give it again back to the discipline manager then for the employee to follow the following week. But what you don't want to do is you don't want to do it in the heat of the moment where you're under pressure and you just got back from getting your coffee and you missed a trade. Now you're chasing, and it just sets off. Or you get the infatuation. It's like how many times I've done this. I can't tell you how many times, and I'm sure you guys have too. Is, you know, you win just a winning day. I mean, you just can't lose. It's like taking money from a baby. And so you're so confident. You're like, I've mastered this. I'm it. And then the next day you get smacked down and you're back into where you were. So the discipline manager cannot help you with your psychology, but it will help you with your discipline, and that will lead to a healthier psychology. I thought that phrase was a good one. So some of the setting, the rules, the discipline manager is designed to allow you to set up your own daily or weekly drawdown limits and your goals too. So both your limits and how much you're willing to give up, and your ante, if you will, and then how much your goals are going to be. Now, if your drawdown limits are hit, and you're done for the day or the week, depending on, you know, which it might be, but you're done and you can't trade anymore. Now, there are warnings on there, so if you prefer to have a warning, you can get a warning that, you know, pre that halt. And like the circuit breakers, that's how they come to be. So it's like 15 minutes. So you hit that warning, it'll pop up and say, you're done for 15 minutes. So go get some coffee. By that time, the trade, maybe, you know, it cooled off a little bit. The trade has long, hopefully, moved itself out of this area that it's giving you problems in. And now you could, you know, look fresh and start all over. You still have that halt set there, but at least this way you're coming in with a new mindset. So once your daily or the weekly goal is hit, then one of two things can happen. You can continue to trade, but never giving back, you know, more than whatever percentages you want to give back, or you know, in a dollar amount fashion. Or if you say no, I want to be done, then you would say 0 in there. I don't want to trade anything. I'm not giving any percentage, so it's 0. So you're done. So if you try to take the next trade because you maybe just got popped out a little too easy, you get the thing saying, oh, you hit your goal, congratulations, and you go, yeah, but I want to finish this trade, and then you hit the button and it says no, you can't do it. So that all depends on your rules. And I'll go into the settings, you know, briefly here in just a second then. And that's what we call it. So if you do want to continue to trade, that's what we call our dynamic drawdown limit, and that's based on how much. So if you have $1,000 drawdown limit, I'm sorry, $1,000 goal, and you've hit your goal now, so you made your $1,000, or micros if it's less than that, obviously. But let's say you hit your $1,000. What do you want to do at $1,000? You just want to be done with it, or do you want to continue to trade? So let's say you put 50% in there. Well, you'll be able to continue to trade until that 50%, which is $500, is breached. Once you breach that, well, then you're done. So at least you're not going, you know, at least you're not ending the day on a total loss. And the same thing goes if you put 0 in, or put 100%. So you make $1,000 and you're willing to give all that back. So basically you give it all back and it stops you from trading. You basically had a scratch day. I might have had fun, but you know, I ended up not doing so well. In any event, that's up to you. If you say 0 drawdown limit, then obviously then you're done. It won't give you anything to draw down with. And then, you know, as I said earlier, optional warning boxes are displayed that'll let you know when you breach something if you want the warnings. Okay, so here it's not an indicator. This is placed on your, it runs kind of in the background. If you want to pull it up, you can pull it up. You don't have to have it on there, but I kind of like to see the second half of the screen. It's a two-parter because they wouldn't fit on this monitor here. So in any event, right here, you can see this is your accounts. A lot of people don't realize that they could do multiple accounts, and you should. If you're, obviously, you could set your rules for sim, and you play around with it, or playback. You know, if you want to set your rules for playback, you put your, you know, select playback in there, and you play with your rules, and you take some losers, take some winners, and see what happens, and mess around with it. And once you've got your settings the way you feel are comfortable, then you could, you know, record that as a default, and then go to the next, you know, you could use this drop down and pull up your real account and then apply those rules to that account or accounts, depending. So this is what I was talking about, your drawdown warning. And if you don't want to have a warning, 9999, we'll just suffice that, and you'll just never hit it. Your halt is 1,000. Trailing stops, if you want to have that trailed up. So as your price goes up and ratchets up, then this $1,000 ratchets up with it. And if you don't have that check, then you'll have $1,000 to play with. But if you hit your goal, which is down here, let's say it's $1,000. If you go to $999.99, you can come all the way back down. So basically $2,000 or $19.99, and you get popped out at that halt. But if it trails and you go to $9.99, you'll be out at a penny. So you could highlight that's a default on there. Daily, man, I don't know many people that use that. $9.99 will just kind of zero it out more or less. And then as I said earlier, your goal. And here's your warning. So you've hit your goal, and now what do you want to do? Do you want to, in this case, you're willing to give back 75%. So you're willing to give, you'll end the day at $250 if you get halted out. But at $500, if you lose $500, now again, this is also based on commissions, and it's based on, it depends if it's based on realized when you closed or intertrade. You know, there's some switches down there, right here, I think, right there. In any event, so you'll get a timeout warning at 50%. So you'll have a 15-minute, I call it timeout because it's kind of like a kid, you know, that's how I remember it. And then a goal too. So once anytime you want to change a percentage, then you can change your goal. So now you've reached $1,500. So you've moved up, and now you're at $1,500. Well, you don't want to give back 75% of that. Now you're only willing to give back 25%. And you don't need a warning because you're going to monitor it, or it's really not that much anyway. So in this scenario, you're just moving up, and those are the two levels. So the only rule of thumb would be is that if you want a new goal, your second goal, when you're ready to change your percentage, because if this goes up too high, you don't want to give back that big percentage. And then the same theory for weeklies. And then as I mentioned earlier, include unrealized, and that's kind of dangerous because that'll whip around, especially with NASDAQ. That'll pop you out intra-trade. And then you have your option if you lose a trade. Let's say your first contract comes off and you're losing. Does it want to take everything off, or do you want to leave that last run around with the hopes that you'll bail out? But you could end up losing more though too, so you got to watch that. The second part of the screen then, as we go down from here, is your stats. Now, if you want to, like I've done before, is I take this window and I just shrink it down. Really all I care about are these three. I want to see what my peak is and my balance, that kind of thing. And then you can set it as defaults. Obviously, if you have one account that's minis and another account that's micros, then obviously that's not going to work. But you could set that as default and change them. And if you want to export the file, if you want me to review it, I'm more than happy to. People send me it puts a little TXT file on your desktop, and you can send it to me, and I'll tell you what'll happen after you set your rules. And then you can decide if that's what you really want to happen or not. I'll tell you what's going to happen, and that may or may not be what you want. So anyway, in essence, that's what you're doing, is you're protecting yourself from with your personal trading manager. And you're the boss, you hire the manager, and then he manages the employee, which is you also. And with all the brokers and trading platform data feeds, not to mention the thousands of trade rooms, indicators, robotic, algorithms, et cetera, it just comes down to you've got to keep your most valued asset. Anybody know what that is? It's the almighty dollar. You've got to protect that. So moving into that now brings us then to Helix. So you've got your discipline set up. You know how much money you're going to allocate for this play day, and you're ready now to set up some programs, so indicators and whatnot. So you've got your moving averages on, and you got all this business, and you're ready to do it the way you want to do it. And so Helix is, as I mentioned earlier, I have entry zone. It's an entry zone indicator, and the trade management strategy that we're married together, and that's how the name Helix, technically it would be a double helix, but I don't like the double part of it, so I just call it Helix. And so there is options for manual, and it's been like that all along. In essence, manual is always going to be number one. It's always been number one, and now we're kind of moving into the auto. We're trying to take that picture and automate it, so you can go in the auto mode. And the options are still available for either way. The rules would be the same. The question is, do you want it to automatically do it, or do you want to do it manually? And at the beginning, you're obviously going to do it manually, but as you feel comfortable with the automatic mode, you can flick it to or automatic. Your trade management's all going to be the same. It's all the rules are the same. The only difference is how it gets executed. And once it's executed, then it manages your position based on the rules you prescribe in the trade. I call that the trade management, the stop settings, because there's numerous layers of stop settings that you can put your settings in there as far as how big and what you want to do, etc. Move to break even and all that business. So well, here you go. If a picture is worth 1,000 words, then a 20-second video has got to be worth much more. And here's the status box real quick. Now this is timed off. Now this happened to be a day, this was May 30th. I took this video a while back ago because it was one of those beautiful days. I made the goal in 8 minutes. So I ended up going back on playback to record it for this video, or actually some other webinars too prior to this, but I still like this video. It's on my YouTube channel. In any event, so this is it. I use a Ninja Ranko. It happens to be 21.3. It's a NASDAQ. This is VWAP. And so this is what happens. So it's timed off right now, but at 9:30, whatever I think it's set for, 9:35, I think, or whatever it is, I have it set for. It's going to go off, and 8 minutes later, you'll see this ratchet up the realized P&L. It just ratchets up, and then it stops trading after $1,000. So I'm just going to get the video, and there's your picture right there. So this is what happens in the automatic. See, I've just activated it into the active mode, and now the timer's off, and now it's ready to go. And it follows my magic, settings that I have in there, and it does what it does. And now obviously this is fast motion, but the bottom line is it's 1,040, and it said no more, I'm done. And that was all done in 8 seconds, but that's fast forward. Actually, it was 8 minutes. It was 20 seconds, but it represents 8 minutes. So, that's here. I'll play it one more time. So it's paused right here in manual mode. I switched it to auto mode, and I switched the pause off. And now I'm just waiting for the timer to shut off. There it does. It follows the logic that I have in there. It does what it does, and then it stops at the predetermined level. And that's pretty much about it. So I love that video. So there's the picture. That's the Helix, and there's the two versions as far as the auto mode and whatnot. So let me switch over that. There we go. So as I mentioned earlier in the settings, though, there's numeric groups that came from the entry zones, the numeric groups. And when I say about that, it's 1, 2, 3, 4 kind of group 1, group 2, group 3. That gives you settings based on what your chart is going to display. Right? EMAs, your entry zones, where colors, any audible options that you want, plots, and you have all kinds of choices as far as what the screen and the indicators. If you want to put some indicators on there, it does all that, what's built in. And that will, turn them on or turn them off, and then measure however you want to do. There's, an array of things. Then the alpha groups going to, like group A and group B's, talks about the trade management. That's the stop management part of it, the quantities, and, your target stops, Excel and trailings, etc., whatever you want in there. And then the buttons that you saw down there just determine the auto mode, manual mode, and then if you want a dedicated direction, you could do that too. And then obviously pause if you're going to go away, or you just news. There might be some news, so you just hit pause for a few minutes and then unpause it when it settles down. So that's those groups. So like in the first numeric groups, the EMAs, you have some choice. There's a total of 4 EMA combinations in there that could be required. Now, what I say can be required, you can turn them on, turn them off, and you could set them for whatever EMAs you want. You can see here that this is EMA 1, EMA 2, EMA 3, EMA 4, and then VWAP I have on also, which is another switch. But anyway, and then I have also the high of the day, a little shark teeth that I call it. That's the high of the day. So you could turn all those on, all those off, and there's no trade zones around all of those if you don't like trading around those areas for different strategy. There's one strategy in there that does not trade into the high or the low of the day, so it'll mandate that and won't trade if need be. It also has spreads in there. So for instance, if these spreads are getting too tight here, you can see they're just too tight, and if that doesn't meet your rule, it's not going to take any automatic trades. Now you can do whatever you want in the manual mode, you know, which we're in manual right now. But if in the auto mode, if you want to say, no, I don't want to take that if it's a spread. On the other hand, you could say, oh, this is just too far, you know, for me. You know, there's a minimum and maximum distance of spreads. You could say, ah, too far. I wanted to retrace a little bit. The other ones, as I mentioned, was the no trade zones. It's this one down here. I have that construction orange. And again, you can change colors and all that. But this is for VWAP. There's one around. That's just an accident waiting to happen around that. Then there's the big one here is EMA 4, which is going to be your biggest one. I don't know what this is right now. I don't even remember. And then the high and the low day. If you have them on, which these two are not on, but if you did have them on, they would paint this construction orange. And anytime the price got in there, it's not going to do it in the auto mode. In manual mode, you can do what you want, but in the auto mode, it's just not going to take it if it can't do it. If it can't, it's just getting too close to it. So those are all things that we've just had to program in there. On the alpha side of it, the entry trigger, you know, these are the actual triggers. You have your quantities in there and whatnot. So here's the entry trigger. And right, for instance, here, and this is the manual mode here, and I've clicked on there. It's in active, and I said the bar active, so the up bar. So what it's doing is it's waiting for an up bar, and it'll take me in. And you'll have offsets depending on what your parameters are. If you want them at all, or just as soon as it breaches, it could just go in, market order, you know, whatever you have in there. But the point of it is that so it's going up, you know, like I want to continue this up, but only on a pullback. So you can even click it down here. Let's say it breaches the high of the day, and you saw up bar, and it's just waiting for the down bar. Well, now it's got the down bar, and it will create the entry trigger, and it'll chase it down. So if it comes down until you turn it off anyway, or until it trips. So it comes down, it's chasing. All of a sudden you get an up bar, boom, you're in. So it'll just chase it automatically, or until you turn it off. Once you turn it off, once it trips, then it'll turn off for the next time, which will be a manual push button. So that's it. Yeah, so once price breaches that entry trigger, then the order is placed based on whatever rules you have inside. The alpha group, this is trade B, trade management. This is the big one. This is, there's a lot to do in here. This is just one, the pivot trailing stop is just one of the things that is in the trade management group. We obviously have move to break even, and you've got your, you know, your ATM strategy type situations, whereas, you know, if it gets the 40 ticks, you know, trail by 20 or, you know, whatever it might be. But this one is a little bit more dynamic. And so this one happens to be set for 50. So basically it consists of three things. It needs so it's coming down in your direction here, and it needs to have a trigger of, and as I said, 50. So it has to breach 50 ticks. And then it has the next component is the resumption. It has to resume 50 ticks in the downward manner. So we don't know where that 50 ticks is, but then once it comes down, it's going to trip 50, and then it's going to move the stop. So let's say up the top, you're coming down here, it went 57 ticks, and it came down and met 50 ticks. And once it hit 50 ticks on the resumption, boom, the stop goes there. Then it goes down, 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 down. It hit 50 ticks or plus, in this case, 66 ticks. It went up there, and then it resumed 50 ticks, boom, that stop moved down to here. You know, higher highs, higher lows kind of thing. Then it comes down here, but you notice here it's not meeting that. It's not meeting, it went 49 ticks, so it didn't qualify, and it's not going to move that down there. So it's going to keep going, going, going. Now this, it meets it. So this went 83 ticks, and then it resumed 50. So this then jumped over to here, and now it just keeps stair-stepping down. Now, the other part of the trade management would be the, you know, once it reaches so many ticks, I don't even know what this is right now, but once it reaches, you know, however many points you're looking for, then you could tighten that up. You might not want it to be like that. There's two levels. You could make it pivot stops a little smaller. So now if you get a pullback of, say, maybe 20 ticks, and then a resumption of, say, you know, 20 or 18 ticks or something like that, you want to protect yourself, so it'll move it down faster on a smaller retracement. And the other option you have in there is just ratcheting it down tick by tick by tick, like you're currently familiar with the ATM strategy. So this is just one of the few, and there's going to be more. I'm working on a dynamic stop, which if you check that, it will just, you know, and regardless of what you have on any of the stop magic, it's only in one direction. So if you have something turned on, but the stop is already moved here, it's not going to move it back. I don't think I want to do that. It's going to stay here, and if it qualifies to put it here, then it'll just move it down, but it just won't move it backwards. So that's the trade management part of it. Once your rules are created, there's the manual mode, and I think you saw it a little bit in the video here. Here's the auto mode. Right now it's paused because there's some news or whatever. Maybe you're not ready, you got coffee going. So you just pause it, you're ready to go. All you gotta do is click that button, and assuming the timer's not on, which it isn't. And then over here in the manual mode, it's ready to go. So all you have to do is push these buttons. You can do buy market, sell market, or you can do on the up bar or down bar, whatever you want to do, just click it. And all the management that you've already predetermined is in there. All you're doing is waiting for this here. Now, if you have an offset, let's say you want to do a trigger, let's say you want to do it on an up bar. So you click on an up bar, but your rules are, so here's a zone that you're looking at, but now you're in it. And so now you say up bar, all you're waiting for is an up bar. Now, once you've tripped and breached that up bar, then there's settings in there is what do you want to happen? You just want to get in, or do you want to have an offset, and have it come back a few ticks, or do you want to have an offset going the other way saying, okay, we've tripped, and now I want a few more ticks. I want to see it go through. You're getting, confirmation costs money. So if you're going to wait a little bit to have it really push through, that's fine. But if one might not be in altogether, or two, you'll get in, you just won't get in at that perfect spot that you kind of wanted to. So those are all things that you decide as the owner and the CEO of your trading business. That's what you need to figure out. The other latest thing that we have is what I call the chop box, and everybody kind of sees this. And so now it's just internally, it's just in there, and you can plot it. You can plot all the pivots in here if you want. If you don't want a cleaner, you can turn them off, doesn't matter. You can turn it on, turn it off, whatever, you can change the colors. But the point of it is it recognizes a chop box. And what we've looked at the RSI, the ATRs, the choppiness index, and all kinds of other things that we've played around with, but it all comes down to basically pivots, and what it's doing. And so everybody's seen it. It just fiddle farts around there for a while. So we have a setting in there that if you're within a chop box zone, it will only take so many trades. Now that's right now being programmed right now, because that's one component still missing, but it's be done probably within a couple days. But needless to say is that you could say, when you're inside of a chop box, only allow one trade per direction. So if it happens to be a long or happens to be a short, you're okay to do that, but only one time. So if you decide to go long right here and it just can't do it, then for whatever reason it gets stopped out, it won't do it again. It has to break and breach this area. Once it breaches this area, one way or the other, then it'll just resume back to its normal, whatever the settings are. Now, if there's no settings that happen to set up, then there's nothing to worry about. But I can't tell you how many times setups set up here. I mean, you and I aren't the only ones looking at this area. I guarantee you other people are looking at the area. That's why it's doing this. Whether they're trying to get out on a stop, whether they're trying to take a target, whether they're trying to get in, doesn't matter. We're all looking at the same area. So if your rules happen to be where it takes an up bar right here, it'll do it the one time, but unless you have your stop down here, I suppose, then you'll stay in it. But anyway, it'll only do it automatically. It'll only do it once or twice, or however many numbers you want to put in there. So how do you get Helix? Finishing up on this one, Helix, you just go to the download file. There's 10 free days on that. This is the version that we're working on right now. A lot of people that are using this new web version, this whole Trade business, these are the same versions. People are going to this because they have the number. Oh, it's a higher number, so I didn't get the higher number. Well, they're the same. They're the same thing. It's just that this is for signing in when you want to. Every time you launch NinjaTrader, you have to sign in to the dashboard. Your vendor or your license ID is no longer kept on your platform. It's kept on your dashboard. And on this version, the desktop version, it's kept on your your license version is under your help on your control center. Regardless, the programs are identical. The only thing is that how you sign in. So if you're somebody who trades on your phone or was a CQG or something like that, then you want to use that version. I think you have to use that version, because if you're trading with like TradeObate or something, you have to use that version. But if you're just trading like most of the people that I talk to are trading with the typical desktop, then this is what you need. You don't need to have that whole sign in and dashboard every time. When I click on my Ninja, it just opens up and I'm there. I don't have to go sign in anywhere because it's on my local computer, just kind of like the app. In any event, that's enough on that one. And then here is a little video if you want a little overview on it. Now here's the 20-second video that I just showed here. If you want to see it again, you can check it out. There's another video, short video, and just basic introduction. And then there's video there. And then if you go to that video, now this video, it'll take you to this page. And this just breaks it all out for you, because there are a lot of settings on here. This is not, this is not really for the faint of heart. I mean, there's a lot of things in here that you have to, decide and figure out. It's not, if you think you're just going to turn it on and let it run, it's not going to happen. But this is a full video, it's like an hour and 50 minutes, but I've broken it down by the time. So when you click here, it just takes you to that area. So if you want to understand a little bit more about the higher time frame synchronization, click that, boom, it takes you to that section of the video. Now here I've added some video supplementals that are relating to this, the manual mode. So I put it in orders. Like right here is another supplemental that's on that pivot trailing stop that we talked about. So here's the trade management. If you want to learn about that, it's probably the most common. A and B. A is where the triggers are and how many quantities, and your offsets, negatives or positives, etc. That's all the entry triggers and how you want it to trigger once it meets your criteria. And the trade management is how you want to handle it once you're in, and scale out or whatever. And then just extra stuff. So as I said, that's that was done back in 2022 on that video. So there's a lot more added. I really probably should do another video, but it just takes a while. I will do it eventually. But that's what social hours for, and there's all kinds of ways that we could do live technical support versus this email and back and forth. The only problem is I do get a lot of inquiries from people who don't speak English, and I can mess around a little bit with the Google Translate, but sometimes that email might be best for that. But if you are, and there's also people that are from different countries that are bilingual, so don't be afraid to come in. There might be somebody, I'm guaranteed, or some of you probably, that will speak your language if you're coming from another country. Anyway, so this video was done a while ago, and I've added a group G, which I don't have on here at all, but group G is the setups. So each setup, and when I talk about a setup, it's the actual entry, what creates the entry. And so I have setups. I have setup 1, setup 2, setup 3 is the one I'm working on. I have setup 4. There's setup 9. We jumped to 9 for other reasons, but anyway, so there's different setups in there. So if, let's say, you've got a setup and it consists of moving average 1 crossing moving average 2, if it's a Tuesday at noon, whatever the rules are, we could put those in as a setup. So if it's a Tuesday at noon and the moving average is crossed, boom, it'll go long or short or whatever rules are set up in there, and we can call that setup 8, setup 9. Or not 9, but setup 10, 11, 22, it doesn't matter. We could call it a setup. So then when you go into all these settings, you can go into group G, which isn't here, and you can say, I want to run setup, 16 or whatever it might be. And that is going to trip on these conditions, whatever those conditions are. Then your rules are still the rules. Your trade managements are still going to be the trade management. Once you get in, how do you want to handle it? And those are already predefined here. And if you decide to do it manually, then you don't even need those setups. You can just hit go, and it's going to follow your management. But for the auto mode, it needs to know what your setup is. If you're doing it manually, you are the setup. You say go up or down, and the trade management then takes over. So anyway, enough on that. But that video's long, but it's if you want to go to a certain section, it's there for you. Then once you've got that going, the next thing is the status box. So now you've got your trades going, you've got your rules, you decided how much money you're going to kind of allocate to this play date, and now you've got your rules and Helix all set out. Or even if you're not even using Helix, let's say you're just doing your bot from wherever you got any of these other providers that are here, and they all have good material. So let's say you use one of those, you still want to manage your dollars. I mean, you got to manage it. So what the status box is just this tool that you saw here, and it just tells you what it is. It says how long you've been in this trade. You could turn any of these off, and then your ATM strategy. Now it comes from here. So the ATM strategy is just letting you. So a lot of time I don't have this on because it just wastes too much space. So I have it plot up here. Now you can turn it off if you don't want to see it there, but you can have it there. And then your MAE and your MFE, all those statistical datas. And then this is for unrealized P&L. So your unrealized P&L, the reason why it's there is because let's say you're running this particular account. Let's say this is playback, and this is your playback account through your broker, and you're running NASDAQ on this chart, and you're running ES, and you're running crude, and those are in trades. And so the unrealized is going to show here. It may or may not, or it might be a combination of all that's going on in your account. That's the unrealized. The instrument account is going to be here. That's this particular instrument, which is NASDAQ, because it's on this screen. If you want to see what the instrument is on your ES chart, you'd put it on your ES chart, and so on and so on. So the instrument P&L is based on that. And then this is the new line, that AP, which is called your account peak, and that keeps track of how high your account has gone, because there's where your drawdown starts. So as you start going up and ratcheting up into your account, then you have your peak, and from there you've got your margin of how much you're allowed to play with. So with all these prop firms, it's very important to monitor your available margin. I call it drawdown, but it's the same thing, margin drawdown, because the computers, they don't tell you that. I mean, it's just too hard. Or you could do it. You can go sign into your other broker account and do the math on it and the calculation, but it just gets old, and it's hard to do. And I needed to see it, in my face. And not just this either. If you notice, I don't even have dollars on there because I don't even like it, because it doesn't show commissions. So it's not a true number. I've asked Ninja about doing it, and they've come back and said it's not planned right now. So in any event, there's no commissions in there. It doesn't tell you anything. This is based on commissions, assuming you have your commissions set up. You do have to set up commissions, because if you don't, then it's obviously not going to show it. But it's very important, especially with micros, very important that you have those commissions in there, because they ratchet up, and so that will give you a bigger difference. And that's based on the realized P&L. So you got your unrealized here, and if that gets realized, it'll jump down here to realized. But the account peak, you have your options of using unrealized or realized. Now I know it gets a little kind of confusing on what's what, but with all these prop firms, they all you have to know how they're calculating, and that's why it's so important here to know what this number is. So these, as I said, these can be turned off if you don't want to see any of them. Your spouse is coming in, so you might want to hide it or something, but whatever. But the ATM will show up, statistics, unrealized, the instrument, and then your accounts peak, more important. And as I said earlier, the values are going to show net P&L if the commissions are established. So that's the big one right there, and that's what's and if you're into statistics, it's going to show you what your statistics are for the day. Then getting started. So it's kind of easy. Download the file, and for the specific page that you're looking for, whether it be Discipline Manager or Helix, you have to go to each one of those pages, download the file, and play with it. Turn it on, install it like you normally install anything, and then try it on. It's got an automatic free trial on it, and nothing's really needed. I don't need anything for the free trial. Once you decide, to go further past that, I do need a third-party license ID, which there's a little video. It's really easy to do. It's like a 1-minute video if you don't already know how to do it, but then it can be reset. And that's all we need to do for that. So you would just go to Tools, go to the webpage, obviously, Tremper.com, and then go to Tools. And under Tools, you'll see all the playthings that I have here. Now, some of these are like the targets on it. Some of these are free. Volume slivers free. I mean, you can look at them on your own. But anyway, these are the strategies. This is my first strategy I did. But you can go into, these are the 3 we're talking about. So you would go into those 3, and then once you get there, you would, of course, read all that stuff. If you want to receive updates on any one of them, I would suggest clicking up to receive emails. And this one is just going to give you specific to discipline. I try to, I try to keep my emails to a very minimal, because I hate getting inundated with my inbox. So if there's an update or something specific to Discipline Manager, I would send that group that have opted into that. If you want to receive all emails, on all these indicators, then you can just go ahead and that. And anytime I send something out, it goes to all. But anyway, so getting here is your 10-day trial, and then there's your file right there. Now, if you want to, go further, you just click on that button right there. And I can't. This is a picture, but you would just click on that button right there, and it opens up a subscription kind of thing. And then the Helix, same kind of thing. Here's the file. I showed you the screen already. You go in here. You can read some videos and learn about it a little bit more. You can go into here. If you want to understand some of this stuff, you can. If you're an A-type personality like I am. Status box, same thing. Here's your download file. Then you go down to here. There's the overview video. And now, importantly, is you kind of watch this, because this changes. So anytime, again, for this one, this is the receive emails from the status box. So if you're interested in the status box, anytime I do an update, you want to come down here and find out what that update consists of. Obviously, this picture is taken a while ago. That's really about it. With all these rules, in place, and you've executed some trades, you've really got to keep a close eye on your available balance, and that's where the status box is coming from. And it doesn't matter whose balance, it doesn't matter if it's a prop firm or yours. If it's yours, it's even more important. But with all these prop firms, I had to shrink this page down because there's so many of them. They've all come to light. And for us, the best part, about competition is that we as traders get the benefit of that. And they're always battling and back and forth with discounts, etc. And so the discount code page is something that I started a long time ago, just to kind of keep everybody in the know on this. And they're constantly changing. All these firms are trying to compete for your business. So, and there's a lot of them, and you can't see it on here, but some I'll put on here, which I feel is very important, is realized or unrealized. And I'll say, what's their split? Everybody wants to know what the money is going to be, but I think it's more important to deal with realized or unrealized. And if you notice, there's only a few that are realized P&L. If you have any questions on what the difference is, you can go into the discount code tab, and this is an older, this is an older slide, you can see, but they're always changing. But if you want to receive emails for discount codes, you would click this one here. But if you're interested in, read my little take on that, and you'll understand the difference between realized and unrealized. And you have to know how your firm does it. Now with the your own personal account, through Ninja or whoever you have, AMP, whatever it might be, whatever you have available in your margin, whatever money you got in there, that's how much you're going to have to play with. But with these prop firms, you have limited, and it even tells you right here, realized, unrealized, realized, etc. And you kind of read that. So it's important that you have to be in the know as far as how they're calculating that money, because it's really important. And I've come to the realization that you need to you really watch out your size, especially with NASDAQ. And with these, if you're only gonna work with these. I deal with like a $50,000 account, so $2,500, and that's not a lot of money. So one contract is what because of the big swings, so the swings and the stops that are required. Anyway, so today what I'm doing is the discipline manager has been around for quite a while, and so that I charge a subscription. I don't like these. I never did because I've bought in so many of them. They're sitting on a shelf somewhere, or on a shelf of my computer, I should say. I've bought in so many indicators that I've used that I don't use, whatever the case is. But it's just gotten to be to the point where I don't even want to do it anymore. Thousands of dollars for these indicators, and just to try out in 7 or 10, 30 days or something like that. So I'm more of the added that your life is nothing more than a subscription. Your phone is a subscription, your car payment's a subscription, your mortgage is a subscription. If you stop paying any of these, then you're not going to have it. It's simple as that. So as long as the price is a manageable number that you could deal with, what are we talking? A couple ticks, just take one trade, and that's it. Make a couple ticks, and it'll pay for it. But if you're able to have a smaller number, then and you don't feel like you're kind of getting gypped, if you will. And the way I look at it is, sure, I'll give you the trial and all that business, but if you've had it for a month and you're like, yeah, I don't like this, do you really feel that you got taken advantage? It's $34.95. So I don't think I personally feel better. I don't feel I took advantage of anybody. If you didn't like it, I'm sorry for that, but it is what it is. So the regular price is $49.95, but until Wednesday, I'm gonna put this on for 30% off, so it's gonna be $34.95, and that subscription will just stay that way until you turn it off, and you control it. It goes through PayPal, so you go into your PayPal dashboard and you go under your subscriptions and you just stop it whenever you're ready. Just stop it. No hard feelings, and you control it. With Helix right now, we're still, I'm charging $19.95. I was charging $0 for quite some time. I mean, technically, I don't charge anything for Helix right now because it's still, I feel it's not where I want it to be just yet. It's good enough, but not that good where I want it to be. So I don't even have a price on that right now. I don't even know what I would price it at, to be honest with you. But everybody in the world wanted it for nothing, and that's why I came up with beta maintenance, because then it separates, it just separates the people who are just, not really interested in it. Because I'm more than happy to spend all my time on it, but I mean, come on, you got to put in something to the game. So I just added that monthly maintenance fee, and that'll eventually stop. But at this point, I don't know what I'm charging on that. So that's that one. And the status box, that's free right now. I've turned the trial period all the way to the end of September, and quite frankly, I probably will move that until October 15th. Because I'm kind of waiting on a few other pieces and some additions that I want. So it's, again, not, like 90%, but not 100%. So, and again, I'm not sure what this eventually will go away, this beta fee kind of thing, or I'll put a small beta fee back on there. It was $9.95. I'll put a beta fee back on there again. But through September right now, it's nothing. So if you have a trial, or if you've had a trial and you want, and maybe you've had it in the past and you want to extend it, you will have to let me know, manually, because I'll have to do it. I'll have to turn you on internally with the Ninja system. If you already had it, if you've not had it, then just download it, and it'll just get you through that time. Other than that, so this for Discipline Manager, as I mentioned earlier, it will cancel out. I'm going to turn it off on Wednesday, and what we do here for that is just go to contacts. We do need, as I mentioned, I do need your third-party ID. There's a little video on that. Under, we go back to any of the pages that has down at the bottom under videos, it has a how-to. It's about a 1-minute video. Basically, go to your control center and put in Tremper as the name, and it has to be case sensitive, a certain capital T, and you put in whatever you want. Now, some people, I personally like, I mean, you can put in whatever you want, but you can't double up your numbers though. But I like what it is. I like to call it what it is. So if that's a Commodore 64 or a Tandy 1000 or office computer or bedroom laptop or HP 360, whatever it might be, I like to do that way. It's, if you ever call or if you want to tweak or you want to change it, you know exactly what machine you're dealing with when you've identified it like that. So that's how you would get your machine ID, and then from there you just, you know, this case sensitive thing I was saying, it has to be like that. So again, control center, third-party licensing, Tremper, and then you can just do whatever you want. I'm kind of aging myself there when I say Commodore 64 and Tandy 1000, because that goes back a ways. Some of you might realize that. And then in the contact form, as I showed just a second ago right in here, you would need that number in there, and just give us that number with your name, rank, serial number, and all that, and we'll get you set up. So other than that, I think that just gives a brief overview. And if anybody has any questions or comments, you guys are more than welcome to join our. Now, Discord, to be honest with you, is new. I'm new to Discord myself, so I still don't know how to navigate around it. Skype room's been going on for a while. There's a couple hundred guys, or I think 100 and something guys in there, and gals too. Mostly guys though. That just, you know, help each other out. You know, chit chat. Hey, anybody have any, you know, good things for that, or studying, or anybody have, you know, anything regarding trading, trade like-minded people, you know, kind of thing. So you're more than welcome. Those are all free, just a social, one big trader social gathering. I wanted to call it happy hour, but, you know, we took a little vote and everybody said social hour. I did a little poll and everybody said social hour was better, but I still like happy hour. Anyway, those are all found under the community tab. Rob, I don't know if there's any questions because I'm not looking at the chat and I don't even know where to find it.
If you hit the little down arrow next to questions, or yeah, next to questions, it'll populate something. Not a lot of relevant questions have been asked because I'm looking at it, but if you would like to open the floor and answer a couple, that would probably be amazing.
Yeah, that's what this is all about. I'd be happy to. If the other presenter would like to come in a little early, I don't want to take all their time, but I'm more than willing to white screen. I hope my slides was coming over.
No, your slide. No, that's the very beginning. You want to scroll way down to the bottom of it.
Okay. Oh, okay. I'm scrolling down here. Okay, I'm seeing it
You're
now.
getting asked, is it only for Ninja? Do you have any professionals using any of these?
Yes, I don't know where that is. I see a whole bunch of chats here, so you can help me out, Rob. But yes, it is for Ninja. This was, you know, done long before you know, Trade-Evade or whatever, they merged with that or bought them out or whatever the case. Then I did have my original, my very first indicator was done in Ninja 7, and then I had to get that converted over to Ninja 8, and from that point forward it was 8, and 8's going to be it. I don't have any desire or question on again, these are for me. I'm not really, it's not like I'm trying to sell thousands of copies. I made these for me and I trade with Ninja, so it's on Ninja. Now we can get that done on another platform, TradeStation or whatever. If you would like to pay for that, I'd be more than willing to, you know, deal with the programmer, and I'm sure my programmer would be more than happy to take on that thing. But you're going to need, you know, some deep pockets. So anyway, another question you said was about Ninja. What was the other one you said? Professionals. Yes, I have. There's a couple people that have. I don't know if they're legally called hedge funds or, you know, traders or whatever, but they trade for other people. So I know they are. They have multiple copies because they run them on multiple machines, and I do know they're in the business to trade people's money. So I don't know if they're officially called hedge funds or, you know, brokers, or I know they're not brokers, but whatever. But the answer to your question is yes. And I've asked them on the conversation, actually not that long ago, and that was, you know, has it ever, you know, what do you use and how do you use it and how does it work? And what they do is they just have it running in the background, and the bots pretty much take care for it themselves. But you know, if they're running at night, and sometimes they run them at night, different markets, different customers, whatever the case may be. And I had another guy was running it at night too, and I says, well, has it ever helped you out? And he says, yeah, there's been times that, you know, we come in and it's off, you know, it's not doing it, and we don't know what happened. You got to investigate why, but you know, that's fine. So it's kind of like more of a security blanket, if you will. If things get out of hand, especially with all these bots. Now, the one thing I'll mention about discipline manager bots, and that is if you or your bot is using a market order, there is no suppression with Ninja right now. I know that there's tickets in, it's been in for years, and it's not obviously a high thing for them. But the moral of the story is that if you put on an order, it will stop the order. If you put it, let's say you put a limit order here, and you've breached your goals, you're not going to trade. It'll take it off in a millisecond. You put it on, it comes right off. On a market order, so now you think you're going to be faster than it is. So now you say, okay, well, I could beat this thing. So you click you put a market order in, and it takes the order, and then a millisecond later, it comes right off, and all you're left with is possible slippage and a commission. And you're like, well, wow, I must do it faster. So you click the button, it goes market order, and it comes right off, and you've got another commission. It takes you maybe 2 or 3 times to realize, I guess I can't do that. So if you have a bot that is taking market orders, then if it doesn't get shut off, there's a component in there that sometimes shuts off the bot. Like if it gets stopped externally, it'll stop the bot. But if your bot has that on there that it won't do that, it'll just keep taking market order. It'll see that it's flat, take the market order. Then just discipline manager will take it off. Your bot says it's empty and it's flat, so it can take an order, throws in a market order. Discipline manager takes it right back out, and you can just ratchet yourself, and the broker's just loving it and laughing. So you have to watch out for that. So that would be the concern that you have, because there is no way right now in Ninja to suppress that, according to them, and that's where we're at. So as far as the professionals, you got to watch that. What else was on there? I think I covered that topic. Is that mine? What are the periods on these charts? What are the time frames and candles? I think that must be for the other presenter, right?
If you check the time that they were asked, I believe those were asked to Norman.
Oh yeah, okay. So I'm
I think you've got all the questions though.
Okay.
And,
well, I'm right on time then too, so that works out really well.
No, you're about 5 minutes early, but I think we can cover it. But Steve, as always, I love having you on Traders Corner. I love your programs. We want to thank you for being here. And ladies and gentlemen, if your emotions are getting in the way of your trading, Mr. Tremper at Tremper.com has the solution for you. It's called the Discipline Manager. You can learn more by a link that I'm going to put in the chat box, or you can visit him at www.Tremper.com. His tools have been a game changer for so many traders that struggle with overtrading and many other emotional issues that we commonly face. Thanks again, Steve, for one, filling the time, and two, making our audience a great generous offer and joining us today. I wish you a great weekend. I hope you enjoy the rest of it, and we look forward to seeing you again here on Traders Corner.
Thanks, Rob.
You're very welcome. Ladies and gentlemen, our staff at Traders Corner sifts through hundreds of pro traders to bring you the most credible and qualified to participate on our shows. And up next is a trader who has a very interesting background. He's a professional trading consultant who started studying the Drummond Geometry methodology privately with Mr. Charles Drummond in the early 90s. He was a member of the Mid-America Commodities Exchange and has written about market profile and other trading methodologies. In the course of his research and the technical analysis, he dived into the psychology of trading and developed practical expertise in the field of hypnotism. His experiences in this area led him to self-hypnosis tapes, which coordinate with the Drummond Geometry methodology and lessons. He was born and raised in the Eastern United States and has lived and studied in Berlin, Vienna, Jerusalem, and Shanghai, as well as the US. His undergraduate education was at the College of Worcester in Ohio, and his graduate education is from the University of Chicago. Here to present Drummond Geometry, making the market's hidden structure visible in NinjaTrader, is Mr. Ted Hearne of Drummond Geometry. Welcome to Traders Corner, Ted, and welcome to Traders Corner, Scott, who will be helping Ted today. Scott, you might want to unmute yourself. We can see you, but we can't hear you.
Is that better?
That is much better, sir.
All right. Yeah, Ted is joining us here in a second. Not quite sure what hung up on his computer. But I'd love to give you guys some background on Charles Drummond and Drummond Geometry. And this goes back to Charlie Drummond, who is an individual trader, probably starting in the 70s and 80s. According to Ted, made somewhere north of 9 figures, trading on his own capital. And in one of his books, he talks about how he controlled, I think it was the pork belly pits for a day by just going in and going out with these huge numbers of contracts. And everybody's paralyzed by their own fear. And then when they saw the market start to move with a big trade, then they would jump on, and then he'd wait, then he'd reverse it. And he talks about how he kind of toyed with these folks because he understood the energy of markets so well. And that's the fascinating thing. So what Drummond Geometry looks at is the energy flow. And my background is studying and practicing Zen Buddhism in Japan for 10 years and being a Zen priest. I've also used Drummond Geometry since about 2003. And so very familiar with the energy flow and understanding that markets tend to get a long way away from where they're happy, and they want to return to that happy spot, maybe to gather more energy to push on, or maybe they get so far away from that middle spot that they end up reversing, or they trade in congestion for a period of time. So you could have for instance, you could have a daily trend run as very strong, but it's within monthly congestion, or a weekly trend within monthly congestion or quarterly congestion. So the methodology of Drummond Geometry is to take these time periods, say a weekly time focus, add into that a daily time focus, a monthly time focus, maybe look at quarterly and yearly support and resistance, and project all this information onto the chart. And that is starting to make this hidden market structure visible. So if the market in a daily fashion is moving very strongly upwards, you might know where it's going to terminate because of the weekly and the quarterly areas. There are these things that we're going to talk about in the presentation called Drummond lines that give us these uncanny turning points that aren't visible to the average trader. So when you construct your charts, you're looking at multiple time frame analysis, these lines that project time into one bar in the future that show termination points, and you're understanding from the setup of what you're looking at. You're looking at a trend run, you're looking at perhaps a trend reversal, you're looking at congestion, and within congestion, you have congestion action up and down between defined areas, or you have a congestion exit. And so this is the underbelly of Drummond Geometry, is to talk about all these different things and then place this information on your charts. And then with NinjaTrader, one of the things you get is you get some really outstanding graphics that can make these charts and these indicators really sing for you. So that's what we like to get into. And I'm just going to check and see if Ted has arrived. I don't know if you can see him, Rob, or not. Are you hearing me, Rob?
I'm sorry, what was that?
Oh, I was asking if you found Ted.
We're waiting for Ted to join. Is there a chance you can get a hold of him and get him with us?
Yeah, I've been pinging him furiously here for the last couple of minutes. Okay, he just said in a moment, so I don't know what happened on his end. We were practicing this a little while earlier to be seamless, of course.
Hey, the trials of a live show. Sometimes you run into tech difficulties with a presenter and have to fill the time, or sometimes somebody's internet connection drops or gets a little choppy. We do what we have to. Yes. You've got my attention, though. I believe this is the first time I'm seeing your presentation, and hypnosis has worked for a lot of things with a lot of people, whether it be quitting smoking, losing weight, whatnot. So I'm very interested to see in how it can be applied to trading and help solve some of traders' emotional issues, primarily FOMO, or when to take targets, when to cut losses, things like that, and maybe not use an automated strategy with something like Tremper's indicators, but to use a manual strategy that you've kind of been programmed to stick to make sure you don't break your rules.
So that's an excellent part about what we're teaching with Drummond Geometry is how you're a trader on your own. And you know, there's many people out there. There's many different styles. We all have our own fears. We all have our own greed. We all have our own energy surrounding why we make the decisions we make. Call it our conditioning, our belief structure that contribute to whether I jump into a trade too early. I can't let the trade run until I think it's going to terminate. So I get out way too early and leave a ton of profit on the table. And these are the bits and pieces of us as individuals trading. And the idea behind the Drummond methodology, the Drummond community, is for each one of us to individually do that. And we start looking at these indicators, for instance, I can't tell you how many different software combinations there are to how you would form your chart. But because we're all individuals, we all have our own trading styles. This is how you have to deal with this. And we do this through one-on-one, through talking and looking at your trade style and how that software is going to make you the best trader. And here we go.
Absolutely. And I'm going to assume that I should switch Ted over to the presenter.
Yeah, everybody's kind of looking at me, so
and you guys can run with showing us this Drummond stuff.
All right, thank you very much.
Go right ahead. And Scott, if you want, up there. No need to turn his camera off. You already did. Go ahead, Ted.
Can you hear us, Ted?
Ted, we're looking at you, and we got your connected to GoToWebinar screen up. If you want to switch screens, and the first heading of the control box is sharing, if you click the little side arrow to make it point down, the first one shows screen, and it'll give you the option to switch. Or if you struggle with that, you could always move your presentation over to the screen that has your web browser on it. I do like your office, though. It's a nice bookshelf in the background. All right, Ted, it looks like you got the right screen up now, but we're mute is all the way to the left of the control box, and you are unmuted, so you should be able to talk.
Are you hearing us, Ted? I don't think he's hearing us.
Oh.
Okay, I can hear you. No, can I hear
We heard that.
Apparently I can hear you and you can hear me.
Ah, there you are.
So I guess we're okay.
Right.
Sorry about the delay. I think we're okay here, maybe.
I'm passing you the ball. Feel free to run with it.
All right.
Hey, can you see my screen?
Yes.
Can you see my screen? Okay.
Yeah.
Now I got to get you on the proper screen so that you can see the slideshow.
You had that up just a second ago.
I did. How interesting.
And
where do we have the share screen options here?
you're sharing right now.
Yeah.
We're looking at a file explorer with a lot of pictures. If you want a different screen, if you go to the control box and go to webinar, click the arrow next to sharing so that it pops down. And then there's like a play button that says show screen. Click underneath that and it will give you the option to change screens. Or if you struggle with it, you could just move the presentation, onto the screen that has all of those icons and the file explorer window open.
Okay, I have a sharing window open and but I don't see how I can pick the screen.
Can you just open the PowerPoint program?
PowerPoint program is open on the other screen. Here, let's just see. Hang on.
Slide it out. Change which monitor that the PowerPoint's on.
Yeah, I'm trying.
All right, now we're looking at all the slides. You just got to go into presentation mode.
Okay.
If you go all the way to the bottom right, the little ease, there you go.
Okay,
Go to
now,
display settings at the top. And swap the first option there. There you go.
Frozen. Oh, there we go.
Yeah.
All righty, we are in business. Okay, welcome all. Everyone in the world is liking disclaimers these days. The CFTC wants us to be good to you and say about that, so we're going to talk about that now. You've seen the disclaimer. Let's see, Drummond Geometry. It is a method of trading that has been around for 50 years. Generated by Charles Drummond originally, and has been developed by him over time. Charlie's a Canadian. He's a Canadian trader. He's in his 80s now. He's in retirement, really. Very, very independent man. Very independent guy. As an early trader, he, like a lot of us, got hooked up with a broker and started to lose money. And he said, you know, if I'm going to lose money, I can do that on my own. I'm not going to listen to brokers anymore. I'm not going to listen to anybody else. And he started to build a trading system, piece by piece, step by step, with only minimal reference to outside input. And without really paying much attention to anybody else for 50 years. And as a result, his way of looking at the market, although it builds on some conventional tools, some very simple things like moving averages and two-bar trend lines and so forth, it's a very original way of looking at the market. And it turns out to be extremely powerful because of the combination of elements that he uses. So we're going to take a look at that. I want to introduce myself as well. I'm Ted Hearne. I'm a trader. I've been working with the markets for 30 years. I live in the Midwest. I've lived in a number of places around the globe also, but I've been doing this kind of work with Drummond and Drummond trading and writing about it and studying it and helping develop the software for 30 years. So I'm a trader, I'm a writer, and I'm a teacher, and that's these things are combined in a way that I think can be very helpful for people now. I'm a senior guy myself, and I'm finding great pleasure in sharing this information. For many, many years, for several decades really, we've been operating as a not quite private, but a very closely held methodology. And it's still closely held because you have to jump through some hoops in order to learn this. But we are, I'm getting great pleasure in sharing this now as I get into my senior years. Our basic structure is, our basic approach is, the market has structure. The market oscillates back and forth between these structures, and the structure determines whether it's going to rise or fall or stay in the same place. When you can see the structure, and when you can see it before the market opens, in other words, in the upcoming day, in the upcoming bars, if you're intraday, to see the structure, and you see where it will be in the future, and you know the market direction, you know that before it opens, you know, your life as a trader gets much, much easier. Now let's look at the problem here. This is the problem that everyone faces. There's a kind of conventional chart style, bar style. Everyone sees this. This is what you see as raw market data. This is what Charlie started with. It's what we chart, what everybody starts with in the beginning. It's difficult to know what's going to happen next. What's going to happen next? Because there's no context, no structure, no guidance, nothing to lean on. It's very, very primitive in a way. You can say, well, the market went down and then it came down and tested that again, but that's about all you can say. It's about all you can say. So we start to deal with this. By the way, is there a pointer here that I can use on webinar? Can you give me a little guidance about where a pointer might be? Okay, so let's take this to the next step. We begin to manipulate the charts, and the first thing we do is we make the bars fat. And we remove the open because we don't regard it as particularly important. The opening is pretty much where the prior bar closed in most cases, particularly in these 24-hour markets. So we are seeing a fat market. Now we begin to look at these bars. We can look at them in more detail. And as we do, we start to add a little bit of structure. The first thing we add is a PL dot. This is a moving average. It consists of the last 3 bars. I'll give you the formula in a second. But we find this as being something that is extremely useful for us in giving a little structure.
And this was originally listed term point in line.
Right. Yeah, the methodology was originally called point in line. Therefore, it's now called the PL dot method. I want to get a drawing tool here. I'm not sure how to do that. Can somebody point me to a drawing tool that'll work here?
I don't see anything on my side, Ted. I can't help you.
Okay. Well, let's just. Can you see my cursor?
Yeah.
Okay. Well, let's just go with the cursor here. The reason the PL dot is so effective is the short-term moving average, and it tells us a great deal. In a trend, it immediately turns down and pushes down. It tends to function as resistance. You can see that these bars are not exceeding the PL dot as it goes down in a trend. On the other hand, when it's in a congestion, is over here, the market will just go sideways, and the closes will be on either side of this PL dot. So it's a very sensitive 3-bar moving average. The formula is simple. I don't want you to necessarily get hung up on reading the formula here, but in plain English, it is the average of the last 3 bars, high, low, and close, displaced forward 1 bar. The average of the last 3 bars, high, low, and close, displaced 1 bar. Okay? So let's look at this. You see very importantly, you see here in the future, the bar that has not yet formed, our indicators extend into that future, and that's where it is.
So at this point, you've just added the envelope system along with the PL dot.
That's right. Let's go back and look at that here. I've added the envelopes. Okay, I found a pointer. Well, let's see. Okay, so we've added the envelope system and the PL dot to the PL dot. So now we're beginning to get a little envelope structure going here. The envelope is a very simple mathematical extension from the PL dot. I'm not going to go into that now, but it's extremely valuable because it gives us a measure of a constant. We're all about measuring change against constants, and this is one of the constants that we use. And we see that when price is going sideways, the envelope tends to contain it. And when it's in a trend, the envelope tends to break to the other side of the trend. So these are helpful concepts that we use, and we can begin to understand what's going on in the market a little better, because we can measure change against the constant now. Now, we also, yes,
also,
go ahead,
well, I was
Scott.
going to say that the constants are, there's always going to be an open, an open, a high, a low, and a close. And for Drummond purposes, the high-low close is the most relevant information. But that's what Charlie first developed, was this idea that there are constants in the market that you can count on there being a high, a low, and a close, and then building off of that. So go ahead.
Right, so that we can we can count on the envelope at all times. It's always there. Another thing that we use to generate support and resistance information is a series of 2-bar trend lines. And these, I thought I had an illustration up here, but you can see that in some cases the trend line might go from the top of this bar to the top of this bar and end up there where that green dot is. That would be a way of measuring resistance as the market develops in these 2 bars here. But remember, we know where these dots are before the market opens. We know where they are. If you look over to the right-hand side, you'll see they exist on the future bar. So knowing that these resistance and support areas exist in the future is a tremendous, tremendous help to us. So now we've begun to add some more structure to the market, because we have this invisible sense of resistance and support appearing through our tools on the past market, so we can study them, and on the future market, so we can trade against it. Very, very important. Now, we extend this structure somewhat by adding another 2 zones on top of the envelope top and envelope bottom. So this gives us a structure that price almost never exceeds. Almost never exceeds. So we always have a way of measuring where we are in the market. As the market gets down into the bottom of the envelope structure, it encounters support. As it gets up into the top, it encounters resistance. Very, very helpful to us. We know exactly where we are in terms of the resistance and support matrix. So now we've got 6 zones, and we add that. Okay, now the market's getting, the charts is getting a little messy, so we simplify it some. So we add some graphics here, and this is the same material, same information is there, but it is more astutely organized graphically, so that we can see it quicker and without fighting our way through tons and tons of lines and levels and so forth. Now, I guess it would have been helpful to show you this before we put the dots on, but here we have an example of these 2-bar trend lines that generate support and resistance. You see that take this one up here, for example, you see that it starts at the top of one bar and it goes through the top of the other bar, and then it ends where the next bar would form. This end here, that's the termination point, that's the active ingredient, and that's what we chart. We don't chart the line itself, because if we did them all, they would be incredibly busy on the chart. We wouldn't be able to see things. So there's a whole series of these 2-bar trend lines. They function in different ways in different market circumstances. We've got this sorted out and organized so that it's pretty helpful for you. We don't have to look at all the detail on it when you're looking at a chart. In a congestion area where the market's moving sideways, we find that if the trend bar goes from the bottom of one to the middle of the bar and then to the top, so you can see that these trend lines actually work well. This point here would be known before the market opens. So in a congestion, we say, okay, this market's going to oscillate up and down. We'll show you another example of that later on.
Yeah, when you start to stack up the Drummond lines, that the envelope top and bottom, or the higher time periods, now you can see how multiple times you'll get confirmation that something is unfolding, and it's time to pay attention.
Right. Well, I'm glad you mentioned time periods, because that's important. Now, this is a single time period, and everything is kind of added to this chart that we would normally use in a single time frame. You see there's a number of tools indicating support and resistance. I've added those dots in there. They're very small at this illustration because we don't want them to interfere with our insight. But this would be a single time frame chart. Now, you can trade from this chart, although your effectiveness is sort of like having one arm behind your back. You can trade from this chart and do pretty well, but we can do much, much better once we get a little, add a little more to this. Now, the next thing we're doing is very important indeed, because we're adding a second time period to this daily chart. We're adding a weekly overlay, and that weekly overlay is simple at this point. It's the envelope top, envelope bottom, and PL dot, but they're weekly. The weekly PL dot, the weekly envelope bottom, and the weekly envelope top. I think you can see that the dotted line is the weekly PL dot, and so forth. Now, look, for example, at this bar. Look how that, when it goes up, it stops exactly where the weekly envelope top is. Remember, we know all this before the market opens, before this bar occurs. We know where that is, we know where this is, we know what's going on. So it's no surprise to us when it gets down to here that it stops. It's no surprise to us when it gets up here, it stops. Wouldn't always do that. Sometimes it exceeds it, but the vast majority of the time, that's a reliable pattern. So time period overlays become very, very important. It turns out that support and resistance exists on all time frames, and that the higher time period resistance can be very influential in determining whether the lower time period stops at that point. It makes really good sense if you think about it. If every time period has its support and resistance, if you overlay the time period support and resistance onto lower time periods, then it's going to be very, very useful. Now, we expand this. Here's a second time period we're adding at the monthly, and I want to show you that you can see, if you examine a chart like this, that it moves within the envelope and outside of the envelope in very predictable ways. Very, very helpful for us. When we do all of these things, and the trade opportunities start to jump out against you, they jump out. They become very, very easily recognizable as you move forward. So by adding structure to the market, the invisible structure, this structure exists in the market, but we make it visible, then your trading becomes much, much easier. If you look, for example, on an intraday chart over on the right-hand side in the white box, you see those two bars. That's the area that is being shown to you on the light-colored chart in the middle, an hourly chart. And you can see the trade opportunities intraday as it goes back and forth and deals with the higher time period overlays, which are the lines and dots on the hourly chart. Very, very effective trading tools.
Yes.
Now, yes.
Oh, I'm sorry. Go right ahead.
Well, as we get into the more sophisticated levels of our software and we take advantage of some of the more recent tools that we have, we go to a slightly different style of charting, which, however, maintains the same principles, adding structure to the market, projecting it forward into the future, using time period overlays from one time period to another to add information to the trading panel and so forth. And this series of principles applied in an ever more sophisticated way lets us make finely graduated decisions about going long or short or trading the market. It's very, very, very productive.
And we talked a little bit about this when I was doing the intro when you were coming on, is that all of this stuff is contained within the charting software, and you have the ability to go in and pick and choose what makes sense to you. And,
right.
And again, with NinjaTrader, you can do some spectacular graphics along with that to make it your own.
That's all right. That's exactly right. Now we find that traders come in all shapes and sizes of capital and so forth. Some traders are options traders. They're very interested in long-term charts. Drummond Geometry works very, very effectively with a quarterly and monthly chart. So you can make predictions about where price might be 6 months from now or 3 months from now. And that's very good for options traders. Other people are stock traders, and they are managing their 401k. So this might be a trading screen. This is actually my personal trading screen that I use. I would focus on the two black charts on the left-hand side, which would be a 10,000 daily and a 2,000 bar volume, a 2,000 volume bar chart for detailed intraday trading. But on the bottom, I would have daily, weekly, monthly, and daily 60-minute, 15-minute, 5-minute, and so forth. So I'm constantly playing time frames and going back and forth between them for my intraday trading. Now, just to go back to the principles now, we're looking at a lot of detail, but let's get the principle firmly in our head. The market has a structure, but you can't see it. We make it visible so you can see it. And if you can see it, then you can trade it. Okay, now let's go dig a little further. Market structure helps us. We know where support is, we know where resistance is, and we know the upcoming market direction. Now, how do we make a decision about direction? We know it all before, we know all this, we know before the market opens. So just imagine if you sat down in the morning and you knew where resistance was, and you knew where support was, and you knew if the market was going to go up or down. That's a huge leg up, wouldn't you say? It's a huge leg up.
And that's not to say that every time we sit down and look at our computer screens, we know what we anticipate happening happens. But if you have an anticipation based on a solid methodology and something else starts to unfold, then you're wrong and you need to be out. It's very simple, right, Ted?
Yes, it is. It is, and it's very true. Of course, you can't. Let's just say the market is the most complex, one of the most complex activities on the face of the earth, because there are millions and millions of participants, and every one of those people has an independent mind and a way of thinking and different amounts of capital and so forth. That any one person can make a decision that will affect the market. If he's a big trader, has $100 million at his disposal, the market will move, and that's a decision by a single individual. You can't predict that, but in general, because we're dealing with the psychology of crowds, we can make predictions that are sensible. So we stop short of perfection, but it's very powerful. Okay, how do we do this? Now, let's see, what's the thought process going into it? We understand that we can do, we understand that we have structure, we understand that we can make it visible. Now, how do we set it up? How do we decide? Well, there's 4 questions we have to ask anytime we sit down and look at a chart. Where are we? What's going on? Where's the energy? What's pushing what? What's the energy? Therefore, what direction is next? Okay, so we start by higher time period analysis. Now, on the left-hand side, we have a 3-month chart. Each bar is 3 months. In the middle, there's a monthly chart. On the right-hand side, there's a weekly chart. So if you see on the monthly chart, the market has been heading up, but it's encountering some resistance. So the last bar is down somewhat. That would be from this week. So these are current charts. On the monthly chart, we see that retracement in the last couple of months play out. The market hit a peak. It went down to retrace the monthly back down to the quarterly envelope top. And it came up again, but now it's going sideways. So this resistance up here is still strong. So the market went up, down, and it's going sideways. It's not going crazy, screaming high north at this point. On the weekly chart, we see what that looks like. The market has had that wonderful run up during June, July, and August, and then there was a dip, right? And then it came back up, but the market is really going sideways. It's not screaming up further, it's going sideways. Okay, that's important because we have encountered significant higher time period resistance. We go to a little finer detail. Here's our weekly chart on the left that we were just looking at. And now here's a daily chart. Okay, where are we? What's going on the weekly and the daily? Well, on the daily, we see that the market has screamed north, came back down, came back north, and is now going sideways, right? The last day was still testing top and bottom. So it was still testing support down here and top. Well, because we know that a trend north is not imminent because we see the resistance on the higher time period, then we see that if it's not imminent north and if there's support resistance, it's still going up, but it's encountered resistance. So it's basically caught between the weekly envelope top and the weekly envelope bottom, right? That's where it's oscillating. So if we're at the weekly envelope top, we're up in that neck of the woods, the next day is apt to be what? Where is the energy? Well, we see our analysis has shown us that these big gray ovals, that's the resistance and this support at the bottom. We see how we're caught between those two elements and the market is beginning to oscillate between them. So the next direction, my friends, is likely to be down. It's not likely to go through the roof. It's not likely to go sideways because we still see oscillation. It's likely to go down. So that would be the analysis that we would sit down and do the night before. It actually goes very, very, very quickly because we're already familiar with the 3-month, the monthly, and the weekly chart, the daily chart. We're already familiar with those charts. So we just kind of take a look and say, yeah, I think we're going down. Right? Once we know that, then we set up our trading. Okay, so in the trade directions for the next day, this is an hourly chart of that same situation that we just looked at. The last day went from down to up and is oscillating up there. We predict from our analysis that the next direction is down. If all that's true, where do we put our orders? Well, we enter where the market is now. We have a first target at the level of first support. We have a second target at the left of second support. We put a stop above the resistance on the high end. It's not brain surgery. Once we know the direction, once we know where support and resistance is, once we know where the energy is, once we know what's going on, once we know where we are, trade placement's easy. Okay, what happened? Okay, this is Friday's market. Friday's market. You see there's the last two bars, it's Thursday and Friday. Well, we knew that we were going to go short up in that area, right? Enter short, right? That's the area. You see where we were on Thursday. Here's the plan. Enter short, target one, enter short, and we went down. You know, I took profits early. I couldn't let it run because it was going down pretty strongly, but I didn't. So I took profits at the in the 1545 area. That's a nice trade. But look at the range of the bars in the last week. All of those were nice trades. You could have done this every day. You wouldn't be perfectly successful every day, but it's pretty good. Pretty good.
Can I jump in for a second?
Please.
One of the things I wanted to point out is that on our website, drummondgeometry.com, there's a button you can go to where we've done a number of seminars that are free to view. And it talks about the PL dot, it talks about the envelope and congestion trading. And then we get into what's called the Holy Grail. And that's the latest thing that's come out. And we saw a little picture of that earlier. But I don't expect this is easy to digest right away, but you can go there, go back to our website, and you can view these seminars, and that'll help put the pieces together, I think, to make all this start to stand out, and you'll see the simplicity and the power in it when you start to get a little tighter grip on the methodology.
Thanks. Yeah, I think you're exactly right. There's a tremendous amount of information on the website. Well, let's just say this is the website, drummondgeometry.com. We wanted to say that if any of you are so inclined to dig in a little deeper and you want to buy a course or you want to get some software, we'll give you a discount because you're so good to listen to us today. We appreciate it. So there'll be a coupon. The coupon will say Trader's Corner with no apostrophe, all one word, Trader's Corner. And if you have any difficulty with that coupon, let me know. This offer is good until the middle of October, so we're glad to do that. Now, I want to give a little word about what our approach is, basically. You know, we're not really a mass market software vendor. We're not interested in having 10,000 customers because we couldn't handle it. And that's not the way we were built. We're more of one-on-one coaching, one-on-one personal relationships with people. We know all of our customers. We talk to them. We're a little different than the mass market software guys. We have a series of graduated courses that we've put together. Some of them are very, very good. We have an active YouTube channel. You can search drummondgeometry.com. The specific address of YouTube is on the website. We have a series of very innovative software tools. You've been seeing me use them here in this presentation. We are interested in the markets because it is a way for us to gain personal freedom and personal independence. This is a very rare commodity in today's world. Independent thinking is rare. Freedom is rare. Independence is almost non-existent. We find that the markets and this way of thinking that we've applied in Drummond Geometry leads us in that direction. We have very strong psychological resources. You know, Scott, who's been chipping in here, Scott's an ordained Zen monk. I have a lot of psychological experience dealing with my own psychology and others, through my counseling with traders. So we have an understanding of what it's like to trade the markets and how to get free of your own self as well as other outside sources. We mentor some traders. So it's a rich body of information, but it's not mass market. So you're not going to find $10.99 to get you salvation in life. It's not going to happen.
Yeah, the point I want to stress is we don't know how you want to trade if you're potentially looking at this software program. So get a hold of us and we'll set you up with a one-on-one and we'll talk about how you trade and what's appropriate for you. And we also, be aware that, there's a commitment to this in terms of you have a body of knowledge that you have to get familiar with. And so I say it's not a shortcut. It's something you can immerse yourself in for great benefit, but there's no shortcut.
But that's right. Interestingly enough, we have a huge body of knowledge, but as I get older, I find that we learn how to simplify it somewhat. So you're getting the benefit of our long years of experience as well. That's more or less what I have to say today. Thank you for listening. It's a privilege to be able to speak with you. It's a privilege to be with you today, and I appreciate it. Give us a call if you are interested in this.
I will go ahead and say thank you, Scott, and thank you, Ted, an ordained monk. No, that took me a little by shock, but I can understand how, the spirituality, the discipline, all of that, applied would be helpful. I was very curious to hear your presentation and very intrigued about leveraging self-hypnosis and that of the group versus individual, how it's more predictable and it can be leveraged into trading in such a profitable way. With so many traders suffering from emotional issues, your system and methodology sounds incredibly useful. Ladies and gentlemen, if you're interested in breaking the intraday code of the EMINI and Financial Futures Index, S&P 500, Dow Jones, NASDAQs, Mr. Ted Hearne of Drummond Geometry has a solution for you, and you can learn more by clicking on the link I put in the chat box. I did also put the coupon code in. You can find Mr. Ted Hearne at drummondgeometry.com for more information. Ted, thank you so much for making our audience an incredible offer. Scott, thank you for offering our audience the value that you did, and both of you for so much for being here today. Great presentation. I hope you guys enjoy your weekend and everything thereafter, and we hope you come back and see us again.
Thanks so much. We'll look forward to it.
Yeah,
Appreciate you.
Thank you, Rob. Thank you, everybody, for attending, and look forward to hearing from you.
Right.
Keep an eye on our YouTube channel. You'll get.
We'll see everybody on the other side. Bye-bye.
Be well, gentlemen.
Thank you.
Ladies and gentlemen, at the top of the show, I did mention we had a great lineup, and next up is another extremely gifted trader who actually got their start studying music at the Berklee College of Music and Boston Conservatory. He began trading stocks in 2001 and learned the art of futures trading. He's been trading for over 20 years and now is considered an expert teacher and trader of the news. Here to present, can you really make money trading 10 minutes a day, is Mr. Leigh Goldstein of 10-Minute Trades. Welcome back to Traders Corner, Leigh. It's nice to see you again. Leigh, can we check our mute button? I am going to guess that Leigh has stepped away for just a minute because we're starting dead on time.
Can you?
I got a blip in. Leigh, are you having bandwidth issues, or is it me? There you go. That's better. Leigh, are you present? I am going to step away for a second and see if I can get a hold of Leigh.
Testing 1, 2. Can you hear me now, Rob?
I can hear you now. Thank you. Thank you.
Sorry about that. I guess I had a mic failure, so I'm sorry about that.
Hey, no, the trials of having a live show.
Yeah, I've only done this, 8,000 times. You think I could have a working mic? That's not asking too much, is it?
9,000. No.
All right. Well, thanks for inviting me, Rob, and the introduction. I guess I should get started before I run out of time. Thanks, Rob. Okay, everyone, I want to thank you very much for listening today. And I always see a lot of people that are in our trade room when we do these events. It's always great to see everybody because it's nice that you all give us support, which is great. So thanks everybody for being here, all the members that we know and love. So thanks again for supporting us here. So today I'm going to do a very traditional webinar, or traditional messaging. Not going to do any selling at all. And I'm just going to talk about our system and what it is to be a 10-minute appointment-based trader, and to go over exactly what appointment-based trading is. And then I'm going to show at least one type of event for each type of setup that our software can support. So I'll do it a little bit differently than I normally do. Rather than just show some random trades, I'm going to try and organize it a little bit differently. So, what we do is we trade by appointment. And, it's always interesting when I come to these webinars and I do listen to a lot of the other presenters and mentors. And I would tell everybody there is nothing that is more important than mastering the psychology. I think that anybody can learn to work with software. Anyone can learn to put orders in. But if you can't master the psychology of everything, and learning how to deal with success and failure and struggle, then you'll never, ever be able to trade well. It's the psychology that is, it's not 95%. I think it's 99% of everything that we do. And if you can master the psychology, learn to forgive yourself for failing and having a bad trade, leaving the bad trades behind and moving forward very quickly rather than dwelling on them, and learning not to overtrade, to be patient, all of these psychology factors are going to be 1,000 more important than the specific system you trade, because there are a lot of good systems out there. I mean, obviously there's none as good as ours, but there are other systems that are very close to being almost as good as ours. So what's going to be the difference? The psychology. So, I wasn't really even planning to say that, but it's just something we're always talking about in our trade room. And members are always saying, well, what about the slippage? What about, liquidity? And, all that stuff matters. But if you can't master the psychology, then you will never be able to trade well. So that's my my little bit of a message for today. And what I want to talk about is the way that we trade, and what we call it is appointment-based trading. We literally make an appointment with the market. My name is Leigh Goldstein. I'm the trading director at MinuteTrades. And I think it's probably only fair to show my real self, so you know that I'm still the same person, still here, still kicking.
Leigh, double check your mic again. Leigh, we lost your audio, brother. Leigh, are you having an issue with your internet connection? Ladies and gentlemen, I'm going to apologize again. It appears like today is being a bad day, and we're having multiple issues with multiple presenters. Stand by for just a minute. I'm going to see if I can get Leigh on the horn or in another way and get him back to the presentation. All right, I got a message to Leigh, and we at least hope to have him back. Okay. Well, ladies and gentlemen, I was able to get a hold of Leigh. He will be back momentarily. I'm not sure what happened, but he told me he would be back on in just a minute. So I'm wondering if his computer accidentally rebooted on him or something. But for those of you that don't know, Leigh is an expert trader of the news and by appointment and stuff like that, that really allows you to schedule just a few minutes out of your day to take what is very profitable of trades based on market news data coming out. But I'm waiting to see Leigh step back into the room virtually, and I'm going to hand it right back off to him because he is the expert on this. All right, Leigh. Nice to have you back, sir. Leigh, just for the record, you're still muted. If you would unmute yourself. Leigh, can you hear us? I've got your screen up. It's got a bunch of icons and a couple windows open, and you are not yet unmuted. I see the screen change now, Leigh. We've got the time and date up. It looks like the Windows splash screen. Were you logging out and back in? I just got a message from Leigh. He says he'll be good to go in a minute. While we're waiting for him, does anybody want to type a question to me and get an unofficial answer? Wendy, indeed, we love technology. When it works for us, at least. And every now and then we have these hiccups. And when you do things live, it makes for a little bit of tech difficulty. And for me, it's a little embarrassing because I like things to flow smooth. The Mount Rushmore was Norman's presentation today. And I forget which ones they are, but I remember him using RSI, multiple time frames, and a couple of the things like Hanging Man and Shooting Star to try to pick out tops and the bottoms. My Mount Rushmore of indicators. I do like multiple time EMAs and them to cross in the direction that I am going to take the trade. And I've got a couple other proprietary things that I cannot endorse or mention on the show because I have to remain neutral, but when they are all in agreement, I do catch some big runners. Now, I remember one of our chartered market technicians too. I'm not pulling his name out of memory, but he talks about RSI and not buying something that's oversold or selling something that's overbought, but selling something that fails to get overbought or buying something that fails to get oversold, because you catch a bigger move in the direction that's intended. Just to answer the frequently asked question, yes, our webinars are recorded. You should get an email with a link following the presentation's completion after the recording's been rendered. They will also be available from the website at a point in time, and you are free to check them out on our YouTube channel. And now that I see Leigh back in attendance, I'm going to go ahead and promote him to get back into presentation mode. And Leigh, if you would like to unmute yourself. I can see Russell Brand on your screen.
Yep, give me a second because nothing's on my right. I have to set up, so sorry.
Hey, take your time. I was just fielding questions and being personable, which kind of comes a little less than naturally to me.
All right, 30 seconds, I'll be ready. I do apologize. Nothing, sometimes technology just screws up. Nothing you can do about it.
The trials of doing a live broadcast, and the 9,001st time was the time that we finally had a tech difficulty. You do pretty well, my friend.
All right, I'm almost there. So, it's not quite as simple. Rebooting is have 30 different programs I have to get going to do this. So, okay, you should be able to see my screen now. You should be able to hear me, and I think I should be able to get started now. Looks like everything's working.
I think you solved all your issues. Loud and clear.
Okay, thanks, Rob, and thanks everybody for your patience. I just want to put your questions up so I can see them, and then I'll be ready to go. All right, so I was saying before I got rudely interrupted by myself that we trade a method called appointment-based trading. We make a literal appointment with the market, and we trade on a weekly schedule. So let me start by giving you an example of what I mean. Just letting everyone know that it is possible to lose money trading futures. We trade futures using the NinjaTrader platform. So please remember that everything we discuss is for educational purposes. I'm not a financial advisor, so please, if you're going to trade carefully, understanding it's possible to lose money. Okay, so the method that we use is called appointment-based trading. And very simply, every Sunday, we send out to our members a weekly schedule, and I can actually show you our current weekly schedule for this week. And we call our weekly schedule the WMM. And in fact, everybody that's in this room, I started to say when I first got here that I was not selling anything today, and that is the truth. I'm really just going to give out a whole bunch of free things for you. So the first thing that I would love for you to take for free is if you go to our website, www.10minutetrades.com, the number 10minutetrades.com, and just agree to watch and take the video, How to Find 10-Minute Trades, will automatically put you on our weekly schedule so that you receive every Sunday a free copy of our weekly schedule. And our weekly schedule is useful for any trader, even if you don't trade events. It's very good to know what's going on in the market, because let's say, for instance, you're an oil trader and you don't know that there's an oil inventory report every Wednesday at 10:30. Maybe you're a new trader. You're just not, you're not privy to all the news reports that are coming out. Well, if you're in a trade Wednesday at 10:30 and you don't know about that oil trade, the market is going to move possibly dramatically when that news is released, what the oil inventories are. So you want to know what the news, the important news of the week is, whether or not you're appointment-based trading or a news trader or not, just to keep yourself safe. So that's one great reason why you might want to go to our website, 10minutetrades.com, opt into the video, How to Find 10-Minute Trades, and we'll send you the schedule. And if you look briefly at the schedule this week, there are some major important events coming up. We've got Wednesday, the FOMC statement. We've got, like I was saying, the crude oil report every Wednesday at 10:30 is always important. Our schedule also shows our members. On the leftmost column is the actual time of the event, and then the next column where it says room opens, that's actually when we are in our trade room. So you'll see that we're in our trade room 30 minutes prior to the FOMC statement, 1:30 p.m. Eastern time on Wednesday. We have a Bank of England official bank rate statement this week. There's natural gas storage report on Thursday. We actually are going to get up I'm going to get up 3 in the morning on Friday morning to trade 2 events, the European French Flash Manufacturing Services report and the German version of that report. And then we'll finish out our week with the United States, the US version of that report. So these are events that we feel will move the futures markets. And whether you're a event-based trader or not, you want to be aware of these events to keep yourself safe while you're trading the markets, okay? So that's the first free gift that I have for everyone today. So one thing you might be saying to yourself, why do those events move the markets? So what actually triggers an appointment-based trade? So it's really very simple if you think about it. So here's what we do. We bracket the market, all right? Now the markets are closed today, so you can't really show a moving market on a Saturday, but this is an idea. This gives you an idea of what a chart looks like, obviously. And in the center here, where this red little candle is, that's the current price. And these X's are orders that are above and below the current price. Some people in the old days used to call this spike trading, bracket trading. So if you could see, we're creating a bracket, we're putting it above the current price, and we're putting it below the current price. And what happens is an event takes place. For instance, the oil report, all right? I happen to have a video of a recent oil report, I hope. Let's see if I can find it. And what's going to happen is when that oil report is released, it's going to move the market. It's going to make oil, the price change, and it's going to make it change enough so that what will happen is it's going to move the market through those brackets. All right. This was the breakout trade, and you see how the price of the market shot down through our brackets. There's our brackets. Now, this was a replay of last Wednesday's oil report. I was not able to be in the trade room for I had an appointment. I couldn't monitor the trade room. So I replayed the trade, which is actually an awesome feature of NinjaTrader. It has a playback function where you can replay previous moments in time, which is a very powerful feature in a platform. Most platforms do not support that. And think about that. If you're wanting to learn how to trade news and events with a platform like NinjaTrader, you can practice trades because you can download data for a previous event and make believe that event is taking place all over again. So that's what I did when I came back from my appointment. I loaded the crude oil data and I replayed the trade to see what happened. Those X's are the orders that I was showing you. We bracket the market, the news comes out, it created this move in the oil futures. It actually burst through my bracket, hit both of my targets, and then the other thing that we're showing our members in our room, and this is one of the major reasons why our members spend time with us, because we have software that helps us to trade these events. So in other words, you saw the weekly schedule, we're making an appointment. We come into the market, for instance, Wednesday at 10 o'clock, 30 minutes before this oil event takes place. We have a breakout trade, which is the first event that you saw. right here, a breakout means, very simply, we put orders above and below the price. The news comes out, the market explodes to the downside. Even though that's a replay, I can tell you definitively that would have been a winning trade to the downside. Then what we do, we have a reversal setup. And there's quite a few trades that we take right after the news, and our software can support a reversal trade. So here's the thing about using software. Here's the reason why so many different mentors, so many different educators have their own software. When you're dealing with platforms, there are automations that you can add to a trade. So in other words, you could trail your stop. You could put stops on the chart. You could put your targets on the chart. You could move your stops if your target gets hit. All of those features can be taken care of by writing an ATM program, automated trade management, ATM, which is complicated, can be confusing, and very difficult. Our software is a super ATM. Instead of having to learn how to write an ATM, our software lets you just plug numbers in, and you can tell the software, put a five tick bracket above and below the price. So it helps to semi-automate the trades. It will do this reversal setup. So our bracket trade ended, and then we teach our members oil. We have traded this report. I've been in this trade room for 7 years trading this oil event. We know that after all this time, all these years of watching oil, there's a very high probability that within the first 4 minutes after the news report, the oil storage report, there's going to be a change in direction, possibly multiple times. So we teach our members how to do the breakout trade, and then we have another setup called reversal trades, and we teach them how to look for levels on the chart and look for an oil opposite reversal trade. If you look and see how simple our charts are, all that we have on our charts are some very basic free indicators that are included with the platform. We have highs and lows of the day, the pivots, and an indicator called the VWAP, volume weighted. It's a volume weighted profile for looking at orders. This red line here, the importance of these lines and levels on the chart is if you have enough people looking at a pivot, that's why a pivot is important, because enough people look at it, they put their stops above and below it. So a pivot or a high and a low of the day acts as a magnet for price. And what happens is the price does certain types of behaviors constantly around these levels. And that's how you can learn how to do reversals, breakouts, breakthroughs of all these different levels. But that's one of the other things that we also teach our members. Breakouts, which are really is our DNA trade. It's how our company got started, just trading explosions of price. Then we added reversal trades as well. So that's two different setups. So what triggers an event? It's the news and the change in the news that occurs when an event takes place. So let me even be clearer so you understand. So for instance, how do you find an event, right? How do we find our events? If you go to forexfactory.com, forexfactory.com, yes, I know it says Forex, but Forex, futures, stocks, data, as long as you understand what the data is, can move markets. So the fact that it's Forex doesn't really matter. We know that we can use this particular calendar, look at a week in advance. For instance, you go to forexfactory.com, click on the word calendar, and then you have a week in advance of events that you can scroll through, and they're rated by color coding. So in other words, British GDP is red. That means red is a high impact. There's a good chance that GDP in the United Kingdom, Great Britain, is going to move the British pound, or for us, currency futures. The British pound currency futures is what we would trade. US core CPI, that's an event Wednesday, 8:30. That event is going to move, you can figure that that event's going to move many different instruments. So what our job is to find the best instruments to trade that offer the best opportunity for profit, because it's going to move gold, it's going to move the ES, it's going to move the NASDAQ futures. We spend a tremendous amount of time studying these events and coming up with the most reliable instruments to trade with the best setup. So we find our events by using a variety of different calendars. ForexFactory.com, investing.com is another great calendar that we use all the time. They have also a weekly news calendar. You go to investing.com, just click on next week, and this is a review of everything that's going to take place in the market, everything that they think is important, and then we filter them. And that's how we come up with the events that we want to trade. Plus, we also look at the Fed calendar, because we want to know when extra Fed reports might be released. We might look at the agricultural calendars, which are not usually on some of these mainstream calendars. In other words, not everybody trades the agricultural instruments, soybeans, corn, and we do. And the thing is this, there's really not much difference between trading the corn futures and trading something you may have heard of, gold futures. The key is we find an event that's going to move the market, and we trade that event because it's going to give us an opportunity for profit. And we want to find the best of those events. So this week we had what we call a challenge, and we spent 5 days teaching people that weren't familiar with us all about our system. And then we spent 5 more days, it was a 10-day challenge, going into our trade room and actually teaching them to trade the events that we trade. And we started this week by trading the WASDE report. The WASDE report is a news event that is actually a grain report. And I want to show it to you because this is a real live trade that we took in our trade room as part of our trading challenge. We have another important piece to our system. There's actually 4 elements that make our system complete. The weekly schedule, which is free, MinuteTrades.com. We have our DMM, Daily Market Mover reports. They are subscription products, very reasonably priced, that a member can receive every day that there's a trade, an event that we think is important. The day before, we send them the Daily Market Mover report, and it explains how to trade the event. This yellow line that you see here talks about the size of the bracket, what time you're going to put the bracket order on your chart, what the stop is, and possible targets. We started our challenge this week with the WASDE report, and it was just a fantastic way to start our challenge. This is a real video of the real WASDE report that we traded this week. Now, if you notice, our orders went on the chart. I was live. That's my real account. And here's how the trade took place. The news came out. It exploded that fast. In a nanosecond, we had a $925 profit. That's how fast it was. Our orders went on the chart, and a nanosecond later, the news came out, and it was so fast, it was a nanosecond trade. It was less than a second that we made $925. But the best part of the trade was that every member that traded that report with us, live real money, every one of them made money as well. One of our members, Roz from Kenya, she's actually trading with us from Kenya. She made $1,192 on that trade. It was the biggest trade she ever had. She's a new trader with us. She actually got started with us about 3 months ago when we had a different challenge. We had a 5-day challenge where we taught our system, and she came and took our 10-day challenge as a refresher. And she made, no joke, $1,192 on that WASD report. The key is what we are teaching is how to find the events, how to trade the events, and how to trade the best, most profitable events so that you have the greatest opportunity for profit. That's what we do at 10-minute trades, trading by an appointment. We finished our challenge with a report called the NOPA Crush Report. No one's ever heard of this report. I had never heard of this report until one of our members told me about it. He said, hey, there's this amazing report. Take a look. It trades soybean oil. I didn't even know there was such a thing as soybean oil. And do we care what we're trading? No. Do we care what the news event is? No. What we care about is that it's a news event that is going to move the market. And what I was starting to say before when I started showing you these trades is what creates the market movement. It's the difference between what's expected in the news and what the news actually is. So for instance, it's real easy to see with an oil report. Okay, so if you look at a Wednesday crude oil report right here, this line, at 10:30, they were expecting -2 million barrels. So they were expecting less oil to be in storage than a buildup. In other words, there wasn't a build in inventories, there was a usage of inventories. What happened was there was 4 million barrels. So instead of there being a negative amount of oil, there was more oil than expected. That's called the offset. So for instance, if there's a jobs report and they're expecting 100 jobs to be created and 1,000 jobs are created, that's a positive offset. And that might also be very good for the economy because more jobs are being created. In normal times, that's considered good for the economy. So you would be trading the NQ and it would go up. Will it do it 100% of the time? No. But most of the time, good news is going to make the NQ, the ES, the YM, the indexes, they're going to go up. Another reason our members love hanging around with us, though, is we understand a lot of the nuances of trading the news. We understand that in today's environment, sometimes good news is bad and bad news is good. We've got the Fed raising rates, and they really are looking to slow down the job market. So if the job market's too hot, that might actually be considered bad news. These are the things that we're teaching, we're discussing in our trade room, and constantly going over as we trade these market moving events. So I said we had 4 different elements that make up our system. We have the weekly schedule, we have the daily trade report, we have our software, and we have access to our trade room. All of those elements make up a complete system, the 10-minute trades trading system, okay? Our software, it does allow us, let me see if I can, I'm gonna pull out of my events and I'll just quickly load my platform here. It doesn't take more than a second. Our software semi-automates trades. So in other words, if you're trading, give me 1 second to just concentrate on my password. If you're trading fast moving events You don't want to be fumbling around with the mouse trying to get orders and brackets on the chart right before an event's going to take place. You want to be able to have some aid, something that's going to help you to put your orders on the chart. And that's what our software does. It's a strategy that installs inside of NinjaTrader. You just right-click the chart and our strategy loads. And then inside our strategy, you just have to, we teach you to enter the elements, the numbers that allow the software to adjust the trade. So we have different trade types. We have breakout trades. We have range trades based on time. A lot of our earnings trades work with range trades. Breakouts, range trades, reversal trades. Those are just some of the types of events that our software can trade. And then the final piece of the puzzle is everybody comes into our trade room and we show previous videos of the event we're trading so people understand how it might respond. We're showing everyone how to input the elements of the software so they can semi-automate their trades. It's a complete system that we're teaching people, trade by appointment. The beauty of it is we don't have to sit in front of our computers all day waiting for setups. We know at 10:30 on a Wednesday, starting actually at 10 o'clock, we're going to go in the trade room 30 minutes before the oil report, and we're going to prep for that event. So that's what we do at 10-minute trades. And I just, unfortunately, my technology problems have stopped me from showing you some great things that I wanted to show you. But also, what we're offering today is on Monday, we're going to be having an event, and it's going to be free. We want to offer you to come to our free class all about appointment-based trading. And also, we want to offer everybody that's here, everybody that registers, a free week in our trade room. So let me give you the information for that. Like I said, I'm not selling anything today. I just wanted to offer everybody this little gift, a free class on Monday about appointment-based trading. And I have to shoot through my charts, unfortunately. We also have something called family money trades. Family money trades are trades just like it sounds, trades that we would only take if we were trading our own family's money. Those are the best of the best of the best. And every week, there's at least, I would say, anywhere between 1 and 3 family money trades each week. This week on the weekly schedule, we've got 2, the early morning trades, the French manufacturing and the German manufacturing trades are the family money trades this week. So how do you get a free week in the trade room? All you have to do is register for our class. Go to www.10tlc.com, okay? www.10tlc.com. Also, if you don't feel like registering for a class, we don't want to make you do anything you don't have to do. You can send us an email, help@10minutetrades.com, and say, hey, please, I'd like to take part in your free week of the trade room. And it is this coming week. But why not go to the free class on Monday? You'll learn something fantastic about appointment-based trading, and you'll get a free week in the trade room as well. So www.10tlc.com. And let me show you a couple of different types of trades that we take in our trade room. So we came up with a really great way to trade earnings, selected stock earnings, trading futures. So in other words, one of our favorite stock earnings trades is Amazon. On Amazon, we are trading not the stock, but futures. So let me show you. And we trade Amazon literally every quarter. Last quarter, we made $1,100 trading Amazon. You can see the candle. If you can trade this kind of a move, and you can get into the move when there's still room left in the candle, right? This whole area is potential profit. That's why we made over $1,000 on that trade. Now, let me show you that trade in real time. I think I've got a couple of minutes left. I'll show you a couple of real-time trades. We have done a tremendous amount of research learning when Amazon releases their earnings. We know how to set up this event. We put our orders on the chart, and then Amazon earnings came out. There's that exploding candle. And it wasn't even that fast last quarter. That made us $1,105. And it was about a 5-second trade, if that, 5-second trade. We also have what we call specialized reversal trades. One of the most popular events that we trade with specialized reversal is consumer confidence. These are not events that were 10 years ago. These were all events, July, August, September, all of our most recent trades. This was consumer confidence. We have a setup called the trap trade. On a trap trade, we anticipate the market we're trading is going to change direction. We're going to go short when the market goes up. We're going to go long when the market goes down. If we're trading a trap trade, on this particular CB consumer confidence, we actually traded the breakout. You can see it exploded down, but notice also that that price action, it shot down and then it went back up. That is what a trap trade does. And I just want to make sure I show you the right event. It was actually the next month that the trap trade was profitable. Here's the same event. We noticed in July it had a very big reversal and we traded it. You know, this has been a rough day. We still are trading it as a breakout, so I apologize. I don't know if I'm going to be able to show you the trap trade today because I don't have time to go through all my my videos. You're going to have to trust me when I tell you that we traded the reversal on that trade. I want to show you one more thing because I've got 30 seconds left. The last event that we traded in our challenge with all of the members that never traded with us before, never watched us. I did not know this could have been a horrible losing event. We did not know it was, there's no guarantee it would be a winner. Yesterday, we went into the trade room 11:30 in the morning and we traded soybean oil. And this was our final event in our challenge. You're going to notice our orders are going to show up on the chart. We're bracketing the price. There's my orders. The news comes out. It's only going to be a couple of seconds. The price explodes to the upside. It's going to be about 2 seconds from now. And we traded that burst to the upside. Every single person that traded that with us in our trade room made real live money. That was our live account. So everybody, www.10tlc.com. Free week in our trade room and a free class on Monday. I want to thank you, Rob, for having me. I'm sorry about the technology issues today, but
hey, I'll thank you for being here, Leigh. Technology issues happen. It just so happens that when they do, it has to be multiple in the same show.
exactly. So thanks for having me, Rob, and I'll see you next time.
Hey, every time I hear your presentation, I love it even more. You know, no more sitting in front of the charts all day waiting for a setup. You know exactly what time an opportunity will present itself, and with 10 minutes, your trading session's over. Very smart on how you trade the news as a catalyst to drive the price significantly up or down and leverage your software to automatically enter the trade on the correct side of the market via the proprietary bracket strategy. Incredible. Thanks again for being here, Leigh. We hope you have a great weekend. Ladies and gentlemen, Mr. Leigh Goldstein of 10minutetrades.com. You can learn more by clicking the link. I did try to put everything in the chat box, and that will be all for Leigh. And at the top of the show, I mentioned we had a great lineup, and next up is another extremely gifted trader and software developer who became interested in day trading as a college student. He started out by using NinjaTrader out of curiosity to test his ideas, and now has over 14 years experience with programming on the NinjaTrader platform. He's actively day trading futures focused primarily on the NASDAQ NQ. He's most passionate about futures trading, but remains committed to building the best day trading tools. He enjoys connecting with his clients and bringing their ideas to life. Here to present NinjaTrader to the next level, Find Your Edge, is Mr. Joel Wyse of Affordable Indicators. Welcome back to Traders Corner, Joel.
Hello, everyone. How do I sound?
You sound almost as handsome as you look.
Oh, thanks a lot, man. I thought I would add the picture to the presentation today. I don't know if I sound great, but you guys can hear me, so that's what I wanted to double check. We'll get rolling. Thanks, Rob, for the intro. I always appreciate hearing you read that.
Always welcome.
All right. Well, we're gonna hop into it. I suppose just so I can be aware of what's happening here, I have until about 3 o'clock, so let's get rolling. My presentation today is titled NinjaTrader to the Next Level, Find Your Edge. And I hope that today I can help you guys do that. So I'm just going to show you real quick. Let me see if I can get this rolling. Here's a picture of my office. This is literally where I'm sitting right now presenting to you guys. Bought this, renovated it. Super fun project. Won't get into the whole thing, but yeah, this is where I'm at today and every day of the week, working on software, trading futures, and doing my thing. So I have a few questions to get started here. I want to ask you guys, and I see a lot of my customers in here today. I see Greg, I see Bruce, Brian, Andrew, Joe, thanks for being here. Patrick, thanks for being here. But I do want to, and a lot of my customers maybe are familiar with the chart trader that I'm going to offer today, but I'm going to start with some questions. Would it be helpful to eliminate most of your trade execution mistakes? Yes or no? Have you, I know I have you missed a trade entry because the signal bar closes and you hesitated to place your order? Somebody in the chat, yes or no? Tell me if you guys have experienced this. Have you missed a trade entry because price is moving too quickly to get the order in? Yes or no? Next, have you missed a trade entry because you looked away for a moment as the setup was forming? Looked away, lost your focus, come back, and the trade's gone, right? Have you ever found yourself, next question, in a trade with the wrong number of contracts? Not great. Lloyd says, hell yeah, just yesterday. Wrong number of contracts or without exit orders. So you're in a trade and you're naked, no exit orders. Why does this stuff still happen to us? Lastly, or a couple more, do you struggle with trade exit decisions, such as determining the best target and stop loss prices? So I'm gonna hopefully help you guys with some of this stuff today. The last thing I think you guys need is another trading method, another way to enter, another way to exit, right? We have so many options for this, and I can give you some things for that, but what I want to give you today is some execution tools. I want to show you my execution tools for entry and exit. So this is what I'm going to propose here, is that most traders are at a major disadvantage. Day trading is so much easier with the right execution tools. So as you guys probably already know, or if you don't, I'm just going to tell you, all of my products are built for the NinjaTrader platform. And I just want to quickly say a few things about that. I love NinjaTrader. That's not in the slides. I want to be clear about that. But the chart trader has not changed in over 12 years, all the way back to 6.57 and now 8. It's the exact same chart trader. The right-click trade entry covers up the chart window. The trade entry and trade exit options are very basic. Therefore, new features and innovations are needed. So a few pictures of this. You guys have seen the right click. When you right click to place an order, it's covering up all your bars. You can't see the price action. Here's the DOM. I won't even get into it. I don't know how people trade off of a DOM. Why would you not trade off of a chart where the action is happening, where the data is printing, where you're actually watching to make your trading decisions. You want to trade off the chart, right? So I have a solution for you. And I'm just going to remind you guys, the way I see this is that trading is like shooting an arrow at a target, right? Or as some of my friends have been trying to get me to buy a gun and go to the gun range, right? And get into that thing. Ready, aim, fire. So in trading, ready is identifying the trade, right? You're identifying the trade in the chart. Where's the trade at? Aim, you're making your plans. So you're doing your entry type. What is the entry type? Could be market, could be limit, right? Could be stop limit, different entry types. What price? And then you're planning before you get into the trade, where's my stop loss going to be? Where's my profit target or targets in plural going to be? So ready, aim, and then fire. Fire is your trade entry. It happens, you put it in, you're into the trade, and then your trade management. Once you're in the trade, what is your plan to get out of the trade? And I believe today that every single person in this presentation can benefit from the enhanced chart trader. This is my suite of execution tools for both entries and exits, and you can build the perfect chart trader configuration based on your trading plan and your needs. So let's get into it. I'm going to go to the charts here in a moment, but my enhanced chart trader, again, I'm just going to leave that up there. It's a suite of execution tools for both entries and exits, and you can build the perfect chart trader configuration based on your needs and your trading plan. This starts with what I call the basic chart trader tools, and I'm going to show you this in 30 seconds. This consists of click entry buttons, limit entry buttons, exit order display features, break even buttons, attached to indicator trade executions display, the bar counter display, and an updated profit and loss display. So let's get into it. I'm in market replay today, you guys. This is, I believe, Thursday or Friday's price action, one of those days. Actually, it's Thursday. So this is my chart, which I will get into as I have time, but these are some moving averages, my key levels confluence indicator, but I just want to compare. On the left is NinjaTrader's chart trader. On the right is my basic chart trader tools or the enhanced chart trader. So let's go through these 8 points real quickly and see the difference. The enhanced chart trader that I built on the right side here has the click entry button. So to place an order, I'm just going to click. So if I want to sell, I'm going to hit sell, and then I'm going to click the chart. My order is in. Okay, super simple. I can hit close all to cancel. Compared to on the left side, where I want to place the order, I have to right click. Now I'm having to move my mouse down and decide sell limit, sell MIT, click. You see the difference? So here I can choose limit or MIT actually. You can choose the order type, stop loss, stop limit right here. So if I want to buy, I buy, right? I want to buy below, buy. There's no thinking about, oh, what order type do I need? If I want to buy, click buy, click the chart. Sell, click the chart, right? Second, limit entry buttons. NinjaTraders are locked in, right? I can only buy the bid. These are the 4 options, that's it. The limit entry buttons built into my chart trader have several different configuration options, including being able to buy, bid, ask, either way. Being able to adjust the offset. So I could say, I want to buy at the bid 4 ticks below the bid, right? So you can configure these limit entry buttons and customize them. Ninjas, again, locked in, no configuration of those. Exit order display features. Let's take a look at a trade. So I'll just go ahead and go long. Don't really care what direction, that's not the point. We're going to compare the exit orders. You can see here in my chart trader, you can see the amount of currency in the trade. So you can see you're gonna, if it hits, you'll make $400. You can also change this to points. So if you want to see the number of points, like 20 points, you can see that as well. So as I move this down here, I can see here's a 300 so on and so forth, right? So the differences here, you're able to see, and you have another cancel button here and here. All right, so I just canceled those, which I should never do. Talk about execution errors, we'll just close that. So that's the exit order display features. Break-even buttons. Again, Ninja, nothing. Basic chart trader tools. I'll just tell you guys right now, 95 bucks. I'm going to cover that at the end of the presentation, but 95 bucks, what you see right here. Get started with my enhanced chart trader. Break even. So if I'm in a trade, we'll have to wait for this, but anyways, the break even button goes both directions. If I hit this, I can actually scroll my mouse to change the offset. Break even +9, break even whatever I want. +4, -4, okay? We're looking, this trade is literally, yeah. We'll just do break even -25. Click the button, stop loss jumps, right? So I'm at break even where I'll lose 25 ticks if it hits. So that's the break even button. Again, fully customizable. It will move either the target or the stop, which is cool because if you're actually down in a trade, you want to move the target to get to take your break even if it comes back to that area. So that's the break even button. Don't know if you guys saw this, but there is a break even button right here as well, right on the entry line. Attached to indicator. The fifth thing that would distinguish my chart trader from the Ninja chart trader, if I want to attach to a plot. So let's say that this is going to totally drop to the pivot point. But let's say I did want to sell the 50. I could click sell and the feature is off, so we got to turn it on. Right over here, attach orders, click in this button. Now it's on. I'll hit sell click and I can hover my mouse over any of these plots. So here's order flow VWAP, which Leigh mentioned in the previous presentation. I've got some 5-minute EMAs, the 5-minute 20, the 5-minute 50 EMA in this chart. These are crossing. These are my 1-minute 50 and 20 EMAs. I can click on the 50 EMA, click, order is attached to the plot. All right, immediately we're attached, 50 EMA. As these bars close, that order is going to stay in sync with the EMA. Let's compare this to Ninja. If I want to attach an order, I have to right click, sell limit 1, orders there. Now I have to right click on the order, go through the menu, attach to indicator, properties. Then I have to select the indicator. Now, if I've got a bunch of indicators, I'm going to go through all plots that are literally irrelevant for the situation and select the plot. So anyways, it's not very practical to attach an indicator to a plot using their chart trader. Next, trade executions display. Can't totally demonstrate this. I didn't have to take screenshots, but this is showing you these little executions we made, how it displays. It's showing the currency. Each of these trades I lost 50 bucks because we were just doing test trades to demonstrate this. But it's going to show you the time that you were in the trade, 40 seconds. I was in this trade for 40 seconds. You can see that right here by hovering your mouse. Went long one contract, lost $50. So you have a really improved execution display versus you guys probably know about Ninjas and how it looks. I'll just show it. This is what you get. Can you make sense of that? Now, again, if we had trades, it wouldn't look that bad, but it's showing irrelevant information like the entry price, which we don't care about. What's more relevant is the target. We hit target 1, how long we're in the trade, what was the total profit of the trade. So I've updated that. Next, the bar counter display. You can see the countdown in the bottom right corner. Something that you need to have when you're trading on a chart. You want a countdown, right? Or if you're trading tick or volume or range, this counter that I put in here is built in to detect the chart and automatically count down based on what chart type you're using. It's built in. Lastly, and there's probably more I'm missing, but the profit and loss display. So up here, you can actually toggle. You can see here as I'm clicking, upper right corner, I can toggle between showing my P&L with commissions or or without commissions. So without commissions, with commissions, or I can even hide my P&L. Some traders don't want to see it. They don't want to be distracted by it, right? So P&L can be hidden. Ninjas, nothing, right? You're over here clicking it, not a single change. I think you might be able to turn it off, not even sure. Also, you can see here how it says NQ. You can toggle here between all, NQ, all. If it's all, it's going to show P&L for all trades. NQ is only going to show P&L for NQ trades. Now, I've only traded in this playback connection, NQ, so we're not seeing a difference, but this is really neat because now you can separate your charts and see for each instrument separately, what is your P&L? Guys, sound like an Atlantean. How do you say that? Yes, I am from Atlanta, Gary. Guys, chime in with some questions if you got them. But that covers the basic chart trader tools. I'm going to keep moving through some more features. There's a ton of features that I've built into this, both for entries and exits, that I want you guys to see today. And hopefully, like I said, I think everyone can find at least one way that this is going to improve your ability to execute and avoid those execution errors that so plague us, just like Lloyd said in the chat. So let's look at my advanced exit orders. So each time we move through these tabs at the bottom, and I'm just gonna, again, drag this over and we're gonna cover up NinjaTrader's chart trader because there's really nothing to see. I just showed you guys that I've rebuilt this and you can now totally do away with that chart trader. Today, the last day you use that standard NinjaTrader chart trader because this is exactly what each of you, I think, will want to have at the end of this webinar today. So I'm going to show you now advanced exit orders management. So this is recently built in. Now we have a few more things on this chart, a couple trailing stops and things, but I want to show you first of all what you can do with this. So back to the PowerPoint real quickly. This is one of my modules for the chart trader. So there's a bunch of modules or products that are all built into the enhanced chart trader. The enhanced chart trader is one indicator of the platform with lots of different options built in. All right, so with this you can do ATM strategy planning, and this is what I was telling you guys, where you can confirm your stop loss and target orders on pending trade entry orders. You can also adjust stop loss and target orders before the trade entry is placed and filled. So I'll leave that slide up, but I'll say, as I was talking about ready, aim, fire, when you're aiming, you're able to pre-plan your trade before the trade is ever executed. This is something that you cannot do on the platform as a standard feature, and I'm not sure I've really seen this anywhere else. Initial, you also have options to do initial stop loss and profit targets based on the ATR and high-low, so you can adjust those as well. So similar to your standard ATM strategy, you have a few more ways to customize your initial stop loss and profit. Trailing stops, fixed, ATR, high-low, any indicator, and exit on close. So you configure this feature where you can get out when a bar closes in the directions. Like let's say you're long, you can get out on the next red bar. So let's take a look on the charts. To pre-plan your trades, you can now, and with these trailing stops, it's a little cluttered, but I'll do my best to kind of make this clear. Let's drag this over and just click on this eye. What that does is that launches our plan. So let's say that I want to sell. Let's say that I'm going to sell at yesterday's close. All right, yesterday's close right here, and then I'm going to drag my profit target down to the pivot point. I can plan this and say, hey, I want my stop to be above the 50 EMA. So I'm not going to give it much room. So I can now begin to see my trade before I ever take the trade, right? And then I can click, let's say I want to start the trade, right? I can move the order. This isn't the real order. This is the plan. When I hit place sell, this becomes a real order. And then, let me see here, why There. And now it becomes a real order where I can again see where my stop and I can see where my target is going to be when this entry is filled. So this moves around again. I'll move it down. I'll change this. You can keep changing these. This is going to have risk reward on here too. So I can see I'm risking about 11 points to make 25. In my brain, that's easy. I'm like, oh, that's 2 times. 2.23 times reward versus risk. All right. So I'll put the risk reward in there. That's going to happen, you guys. But as I get filled on this, I can see that I have the exact target and stop that I pre-planned for this trade. Trailing stops. I'm going to go through this quickly, but you can select and configure your own trailing stops. Brian, are you still in here? No. One of my customers, I built this for him, the burger trailing stop, these red and blue dots. So let's just go ahead and get short again so we can demonstrate this. I'll turn on the trailing stop. Did you see how it jumped to above the parabolic saw? Select burger, it jumped to right at his red dots. You can also select the 50 EMA. It's going to go up to the 50 EMA, or we can do fixed, ATR, high, low. So there's all sorts of trailing stop options. And again, with these 3 at the bottom are custom configured. So you could put any indicator in here as a trailing stop. So that generally covers advanced exit orders. Let's keep moving through here. The essential tools includes the planning. So again, when we were planning the trade right here, and we're able to move around our targets and stops before we enter the trade, click place sell, order goes in. That is included with essential chart trader tools as well. What's also included is one-click entry. So you can see this blue bar on the side. As I move my mouse into the bar, order pops up. Now I'm able to quickly place orders and place several orders. And that's one click instead of 2 clicks where you're clicking sell, moving your mouse, clicking on the chart. You're able to place those simply by moving your mouse to the right side and clicking. One-click order entry. And then lastly, the essential chart trader tools. So there's basic, essential, and professional tools. 3 levels kind of that I've defined the way I've laid this out so far. Essential tools also includes position sizing. So with size on, you can see for this example, I've set it to $1,000 if I'm going to sell. All right, with size on, as I change this, you can see the number of contracts beginning to change. 4 contracts, now 5 contracts, now 6. So the number of contracts for this trade can vary as I'm adjusting this. And look what happened to the real pending order as I dropped it, right? Drop it, quantity changed to 4 for the real order. So this position sizing is available in essential chart trader tools. You're sizing your position based on the amount of dollars risk or percentage of the account risk. You can also click to, I'm going to turn this off. You can also click to quickly change your ATM. So rather than having to select an ATM from the drop down, now you can set your favorite 4 ATMs, and with a few clicks, you can swap between them. Essential chart trader tools. Moving on, a few more features I want you guys to see, and then I'm going to close this out, hopefully answer some questions. I feel like time is quickly going here. Rob, if you could hit me in the chat. Do I have till 3:05 or 3? I would really appreciate that, man.
You technically have until 3, but feel free to run a few over because the previous presenter did.
Yeah, that's what I noticed is we went about 5 minutes over. So, all right, I'm going to show you guys Renko entry. So this Renko entry is very powerful. I'm actually working on forming a partnership on that now. You guys use Renko bars. I'm just going to go ahead and hit sell. What this is going to do is trail up the order until a red bar occurs. So it's automatically going to trail. I'm going to speed this up. You see how with every green bar that closes, this order is going to move. Speed it up a little bit more. And then it's going to get you into the trade with no slippage as soon as a red bar forms, right? So for those of you that trade Renko reversal bars, this is a powerful feature, right? Because what's your alternative, right? You're just waiting until you get the bar, then you're clicking the market button. I mean, these are potential major issues for trade entries, right? So you can see here perfectly when this bar closed, we are in the trade. I didn't have an ATM selected. By the way, a feature in here is that you would force an ATM to be selected if you want to configure it that way. So then you would never have a problem with forgetting your ATM strategy in that way. So anyways, we're in this trade, red bar closed. I won't continue going into that, but hopefully you can see the value here of, hey, if I get a green bar, this is activated. Next time a green bar closes, right here, it's trailing down. Next time a green bar closes, I'm going to be in this trade right there. Same thing with range bars, right? With range bars, we know that we have a known close. We have a close that we know where it's going to happen. We know when it's going to happen based on the size of the bar, et cetera, et cetera. So let's say I want to take a red bar. Next time this red bar closes, order is already pending at the perfect spot so that when this bar, 32 range NQ bar, closes, I'm going to be pulled into the trade. So that's for range bars, Renko and range. Various types of Renko bars too, this will work with. Bracket, Leigh just talked about news. So here we can configure a bracket entry. So a couple ways we can do this. We just set it up on our own. So when we click this button immediately, based on where the last price was, and this may, yeah, bracket now. Bracket now, I gotta slow this down. We're going at 4 times speed. Orders go in immediately above and below the last price versus at the close, this is for news, right? So you can see here where it says, kind of like what Leigh talked about. Bracket entry orders will be submitted 2 seconds before this bar closes. OCO is disabled. So what this is going to do is as it counts down, when it gets to 2 seconds, the order is going to go in, which gives us order placement before the bar closes, clearly before the news event comes out. And yeah, perfect for trading news events. Let's see if this works. We are on playback. Yeah. So you see how the orders went in 2 seconds before the bar closed. Bar closed. We're ready to take the breakout trade in either direction. Another feature, closed bar entry related to signals. So here I can actually enter on the next up bar. So if I hit this, when this bar closes, if it closes green, I'm going to be pulled into the trade. Can also configure it to be red. So now I'm looking for a down bar. Next down bar, I would be long. Or any bar. Just if this bar closes, when this bar closes, get me long. Same thing here. When this bar closes, configured like this, sell 1 market on bar close. Sell 1 only if it's a red bar or only if it's a green bar. And I know I'm going through this fast, but I just want to cover everything for you guys. Looking here, this is the signal entry. So just like close, if I were to hit this, it's going to highlight the signals. This is a stochastic indicator, but it's got buy signals. So once this is pending, it's going to be waiting for the next buy signal. When the next buy signal occurs, it's going to get you long. So this can be integrated with any system that you're using. Just reach out to me. I'll help make that happen. But literally any system that you're using, if it has a plot output with the signals, you can configure this so that you can now use this as a semi-automated tool to get you into your trade. Cool. So we made it through all the charts that I have for today. I probably only showed you half or less than half of the features. built into this, but I just want to give you guys an offer here on some pricing. Joe, yes, I'm gonna show the copier. Thanks for bringing that up, man. When you talk about execution mistakes, I have built a trade copier. I'm offering you one of the best prices. In fact, it is not one, it's the best price I've ever offered my trade copier product today. So we'll get to that. So let's jump back to the PowerPoint real quick, and then we'll come back to the charts and finish with the PowerPoint. Right. All right. So for normally priced at 195 is the basic chart trader tools. Today it's going to be 95 bucks. And just to remind you, I started my presentation off with this. For only 95 bucks, you're getting this, all the features listed here. We went over this on the charts themselves, and the break even attached to the indicator plot, right, where you're trailing your order, the improved executions display. I'm jumping around the list, but I love this stuff. I think it has a ton of value for you guys as far as just giving you a great way to get in and out of your trades, see what's happening, see where your targets and stops are at, how much will you make or lose on your targets and stops, etc., etc. $95. The advanced exit orders management, which includes basic chart trader tools. So if you purchase any of the additional features, they always include the basic chart trader tools. Normally $495, today it's going to be $295, but this is where you can plan your targets and stops before you get into a trade. I showed you guys that. Hopefully it was clear. You've got your initial stop loss and target, you've got trailing stop options, and the ability to configure exit on close. That is going to be $295, 40% off, along with other options. So as I said, there's like a bunch of different products built into the enhanced chart traders. The idea of this is that you guys can build your own chart trader configuration based on what you need, based on how you're currently trading, maybe even based on what other trade room you're in. Like a lot of people trade Renko bars, right, or range. These entry tools are awesome for those bar types. So let's go through some of these again, right? Remind you guys, we went through closed bar entry, right? Entering on the bar close. Price-based entry is what I call it for Renko or range. Again, similar to closed bar, but if you wait till the bar closes on Renko and range, you're going to get some slippage. That's why we get those orders in before the bar closes. Nathan, yes, and I've had people ask questions and then say later, I didn't get back to you. So yes, I'll be happy to adjust your price if you've already purchased basic tools. I work with people on that, right? So let me know, just reach out to me. Thanks, brother. I appreciate the positive feedback. Chris Madden, thank you. I hope this is a fire hose, man. I'm going through so much content. I'm watching you guys in the chat, but if I miss your question, I'm giving you permission now. Call me, reach out to me, email me, right? You don't want to miss anybody. And we have 8 minutes left here, so let's keep moving. Price-based entry orders, bracket entry orders, signal entry orders. Each of these is going to be $295 today, 40% off. We've also got iceberg or time slice. There's more stuff I'll show you in a moment. The account dashboard. So that kind of wraps up the chart trader for now. All right. So we're going to keep moving. You guys can look at my website and see more about the chart trader features. The account dashboard, which I just finished, continue to add features, but it includes 2 parts. Each part is $175. The first part, trade copier. Second part, the risk manager. All right, 2 parts. I'm going to exit the presentation and show you guys this right now. And as a bonus, I'm going to show you my Apex accounts. So pay attention. All right, I have two PA accounts right now. One is at 55,500. The other one's at 58,000. Both of these accounts I've pulled $2 grand from. I'm waiting on the payouts. As you guys know, with Apex, they had an issue with deals. So I'm hoping. Well, not hoping, they've been approved. I'm gonna get 2 $2,000 payouts for a total of $4 grand. Also, at the end of the day, Monday, I'm gonna request 2 more. So I should get another $4 grand from these 2 accounts. This is trading the NASDAQ, all right? Here's my evals. I've got 6 more evals funded and just waiting for the 7-day requirement. And I'm working on 4 more, trying to get to 20 as quickly as possible. So my copier, I'm gonna spend 2 minutes on this and we gotta keep moving. But basically it's not placing orders. There are videos, Lloyd, on the YouTube channel. If you missed that, reach out to me. I'll get you the right place to see videos on the copier. You know what? I'm not even going to cover the copier, but basically it's going to keep your accounts in sync. If you've ever been using other copiers and you find issues where like you're not, you know, you're out on some accounts, you're still in on some accounts, the orders aren't syncing up, you're in a short when you thought you were in a long, none of that. We're done with that because I've solved that in this copier. All right, it's always going to keep your positions in sync at all times. We're not placing anything but market orders on the follower accounts. It's all market orders on the follower accounts, keeping the position quantities in sync. All right, so back to my presentation real quick. I'm going to give you guys the coupon codes. Thank you, Gary. Tell them to buy the copier. Gary Williams, thank you, brother. Hit me on Skype. He says just buy it. Bonuses for this weekend. This weekend, guys, if you make $295 in purchases, I'm going to give you my best MA's trend and best ATR indicators for free. With these indicators, I'll show you on the chart in a moment. You can plot any SMA or EMA in any chart window, and that's multi-time frame, all right? With that and with the ATR, which I use, which I really can't get into. But the ATR is a great way to vary your risk and your reward based on how the market's moving. All right, you don't want to always use the same size target and stop. You want to vary this based on how the market's moving. And lastly, this weekend, I'm just going to throw this in. Working on this while Leigh was presenting, but I want to give you guys 50% off my key levels confluence indicator. So that's a bonus for this weekend. Let's look at that. So this key levels confluence indicator, you can see on my website, but it does, and a lot of these things you can also get for free, but what this does is it shows you looking back. So I can see here I've got a zone, the low from 7 days ago, the high from 14 days ago, and yesterday's high, right? Do you think yesterday's high had an influence on Thursday as to what happened here? Look at that, bounce, market open. We chopped around, where did we hit? Yesterday's high, and then we tanked. Do you think the 20 EMA matters? Here's the best EMA. So these red areas, this is the 1 minute area between the 20 and 50. This is the 5 minute area between the 20 and 50. These are easily plotted using the best MA's trend. And multi-time frame especially, what's cool is you can put these on range and Renko charts, right? So if you wanna follow the 1 minute EMA, on a range or a Renko chart, put this indicator on and you're doing it, right? You're not having to add data, and you guys know the process to try and put multi-time frame indicators on charts. It's not a great process. This makes it a lot easier when you're tracking EMAs. And like Leigh said, people are watching these. That's why the market responds. All right, so take a look at the pivot point, yesterday's close. Take a look at my key levels confluence indicator. I'm gonna give you guys 50% off on that. Those are the bonuses. And we're gonna wrap up on time. I'm gonna go to the special offer. Thank you, Charles. Thank you, Lloyd. And here we are. Rob, if you could, back to the presentation. Last couple slides. I do have testimonials, guys. Go look at my reviews. If you're an existing customer and you haven't left a review, I'd love you to leave one, good or bad. I'm trying to build reviews, and you guys need to know the truth, because it's hard to know who can be trusted in this industry. So go check out my reviews. I'm accumulating more. I haven't really asked, but now I'm starting to ask for reviews and just start, hopefully build even a community of traders as well. So lots of things coming. Here's the final slide, you guys. I'm gonna pull up my website. This is the URL. Rob, could we grab this and put this in the chat? So
already done.
Awesome. You're always on top of it, man. I don't even know why I had to ask.
Hey, I try to do my best.
That's on me. So this is in the chat. You guys go click this link in the chat, affordableindicators.com/traders corner. All right. Coupon codes good through Sunday the 27th. And with the last couple minutes, I am going to pull up the website just so you guys can see it. This is the page you guys should be looking at right now. And reach out to me with any questions if I've left them in the chat. Charles, this answers your question right here, my man. This is the page. All the offers are laid out. Good through Sunday, Sunday the 17th. All right, I'm giving you these 2 free indicators with any $2.95 purchase. Here I've laid out the basic chart trader tools. Click these more information links to take you to the product pages where you can add a product to the cart. All right, so these are like basic, a little bit more, and then essential would be including even more features, right? Here's the detailed duplicate account actions, the trade copier, and the risk manager. Again, more info on those products right here. I quickly covered the key levels confluence, which I believe is the best support and resistance indicator in the industry. I'm going to continue working on it. I want to add like a 3 a.m. line because I think that's when Asia opens. Like the open at 3 a.m. overnight, I believe, has some impact on the day session. So looking at adding that, this is one of them I continue working on, 50% off. Here's the rest of the features. Each one of these is $2.95. So we went through this. You can click on these links to read about these. Lastly, the professional chart trader tools. If you like what you've seen, right here you can get every single feature built into my enhanced chart trader for one price. All right. And then I'm going to include with that the support and resistance suite, which includes that key levels confluence indicator and a few other indicators with the purchase of that professional chart trader tool. So you guys have the info. I know it's a fire hose. It feels like it is every single time I present. But man, I'm just so grateful to be here. Grateful for Rob and the rest of the presenters and all of you guys spending some time with me, whether you're interrupting like your college football viewing or whatever's happening on a Saturday. But man, just thankful. And please, please, please reach out if you have any questions for me. Call me or email me is the best way. There's a contact page on the website. Thank you so much. That wraps it up.
Hey, thank you so much, Joel. You make me want to switch to NinjaTrader because your indicators do look awesome and everything point and click. When you were asking those questions of, did you get in the wrong way? Did you buy too many or too few, too large or too small of a position? You were really hitting me in the heart, man, because I've done all of that. But thank you for making such an incredible offer to our audience today. Yeah. It's just amazing how powerful your tools and indicators are. The title of your presentation was NinjaTrader to the Next Level, and we refer to your tool set here as NinjaTrader on steroids. So, ladies and gentlemen, if you want some of the most powerful indicators and trades management tools available on NinjaTrader, Mr. Joel Wyse of Affordable Indicators has them available at a tremendous discount through traderscorner.net. Now is the time to transform your ninja into a super ninja. Joel, we've heard from a lot of your and our shared members how great your tools are. It's always a pleasure to have you here, brother. I hope you have a great weekend.
We are finished. I want to say thanks, Chris. Thanks, Hardy. Thanks, Lloyd. Thank you, Jeff. Charles, I see you guys in the chat. Reach out if you want to talk. And yeah, hope everyone has a great rest of the day.
Hey, good luck in your football games this weekend, and we hope you come back and see us again.
Yep, I'll be watching Ohio State. So thanks, guys.
Good luck. Go Buckeyes.
Yep.
Ladies and gentlemen, you're going to want to stick around for the last two presenters because our next presenter has been trading futures for 10 plus years, and he's been a proud customer of buy-side global indicators for 5+ years. Over his trading career, he's educated and mentored hundreds of both beginner and experienced traders, and he now educates traders on how to become more consistent using the buy-side global suite of products. Here to present how to analyze trend from perfect trade entry is Mr. Mark Conlon of Buy-Side Global. Welcome back to Traders Corner, Mark. Mark, go ahead and unmute yourself. There we go.
There we go. Yeah, Rob, thank you. By the way, Joel, that was a great presentation. I really enjoyed it. You've created some great add-ons for Ninja. Just wanted to put that out there. Today, I'm with Buy-Side Global. Thanks for joining us, and thanks for taking your time to learn about Buy-Side Global today. My name is Mark Conlon. I've been successfully using Buy-Side Global indicators for over 5 years, and now I'm a senior trader at Buy-Side Global. Hang on, I don't know, my slide didn't move forward.
You might have an option. There's a little check mark about lock the slide on the screen. There you go.
There we go. Yep, we got it. Okay, so let's get to the legal disclaimer first. This is for educational purposes only. This is not financial advice. Per FCTC Rule 4.41, these are hypothetical performance results. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown in this video. Please read the CFTC Rule 4.41 for further details. Please take this information down. Take a quick snapshot of it. I'll leave it here for just a couple seconds. Just so you know, normally when I do a 45-minute presentation, I keep 10 minutes at the end for questions. I have 22 slides on average on a normal presentation. Somehow we worked it up to closer to 40 slides on this. So I'm going to be moving, just like Joel, through a lot of material, but there's a lot of meat in it and there's a lot to help you. I'll move it along as quick as I can, but also give you that opportunity. So as long as you have that snapshot now, this is me. This is my little trading station, 50-inch TV above, 28 in the center, a couple of smaller ones on the side, little trading, quick trade on the desk there. And my background. I founded Conlon Financial Group, a registered investment advisory firm back in the early 80s when I was in my early 20s. I retired from the financial planning business and managing other people's money in 2002. So I'm now 63, so I've been retired for over 20 years. I've been trading ETFs for over 10 years, futures over 7, stocks and options. I had to put 30 in there because I just couldn't believe it's been 40 years since I've been doing that. And I've been using the BSG indicators successfully for 5 years, as he had mentioned and I had mentioned. The BSG indicators are the only indicators I have ever purchased from a vendor. I want to repeat that. I've looked at all the vendors. I don't want to say all I have hundreds of vendors. BSG indicators are the only ones that I've ever purchased. They are so outstanding, the way they operate, how consistent we are, and that's why I've got no Rob over time. I've worked with a lot of traders to transition themselves to become successful day traders over the last 5 to 6 years. And I have a fairly extensive background in creating trading strategy development, doing development, and also teaching methods. Okay, here's what we're going to work on today. You're going to learn about our trending program, how we stay out of chop through our detection strategy. We're going to work on what our indicators are, how they work individually, and how they use them as a group. We're going to show you how we've simplified our entry and exit strategies, our most consistent setups, and we're going to talk a fair amount about trade management during this. Why is trend trading more effective? When I first started, I took every trade there was. I would take them, I'd grab a couple ticks here, a couple ticks there. At the time they were trading TD Ameritrade, other places they were charging commissions. I was making them a fortune, taking every trade. And at the end of the day, I look and I go, you know, if I had just gone in and held a long time and understood better how to stay in, I'd be making I'd be making the same money without going through all the hassle of doing 45 trades. And I could just do 4 or 5 trades. So myself and a couple other traders got together and we started working on systems to become trend traders. We focus on fewer but more consistent trades. We have very specific rules we follow. We have a checklist that we check off during our process. And our goal is to identify 4 to 5 great trade setups during our trading period. Now, trend trading focuses on daily and current bias. So we look for where Where's the overall market going that day? We look for what we believe are the highest probability setups. We identify very specific methods of doing our entries, how we're going to manage that trade to get the most out of it, how we're going to, what identify as an exit, what identify as a target, and most important, staying out of chop. And I'm sure that everybody here has had the problem where you spent the whole morning building up $500 to $1,000 in profit just to take from noon to 2 o'clock, and you slowly think you could go, you know, I could grab 5 ticks, I could grab 3 ticks, I could grab a little money, and next thing you know, you've chopped your account down to absolutely nothing, and you're down, usually down at that point. Well, that's what we want to try and stay away from, and that's what we've learned to do, and we're using our indicators. Now, I don't want to waste your time going over all the reasons traders fail. We all know what they are, that they're real quick. You trade too much, you don't hold on to your winners, you hold on to your losers too long. You've heard it 1,000 times, so let's just move on. I've concluded that there are 4 reasons why people succeed in day trading. Number 1, most important, patience and waiting for the trade. I'm going to be pointing out the times that we wait sometimes for the trade. We're going to stay out of chop. Staying out of chop, that is so important. That's where you just get chewed up thinking you could grab a few ticks. You have to have a tried and true plan, and you have to stick to it and have the discipline. And you need to be willing to take the time to learn. Coming to these that Rob puts on are so important to just learn, looking at different methods, different ways people look at the market. It is so important to take time to learn. If you were trying to become a doctor, you wouldn't go in and go, well, I've read the book, I was hanging around for 6 weeks, I'm in, I'm going to handle this. You're not going to do that. If you're an auto mechanic, maybe you're a good weekend mechanic, but you can't go in and just start working in a shop just because you can, you know, change some tires and you could change the spark plugs on your car. There's a lot more to it, and there's a lot more to trading than that, and you need to take the time. Now, what does not work? Trying to mirror a moderator's trades. If all you're trying to do is follow the guy, you will always be behind him. You're always, he's gonna, by the time I make a trade, as I'm talking, I'm saying, here I'm looking at it, here's an idea of what I'm thinking of. When I make that final snap decision, I'm in, I mention it, it has to register in your brain, you have to take a few seconds. Next thing you know, you're in, but you're in 8 or 10 ticks after me. It goes up some, comes back, you get taken out. I don't get taken out being the guy leading the room because I was in 8 ticks earlier than you, so it didn't get my stop. It goes up, it keeps going, it starts taking off again, you jump in again. So you're in late a second time. Well, I'm still holding. At the end of the day, I go, well, I'm up 1,500, we had a good day, and you go, I'm down $500. I don't know anyone who hasn't been in a room and had that issue. So here's what I do. I guarantee you, if you try and just follow it, you're going to lose money. If it's just doing the entries and exits as they call them out, you're going to lose money. What you need to do is learn to identify them yourself, and there's a process to it. First, it's about risk management. You trade in sim, and you trade in sim consistently until you're consistent with it. Once you're consistent with sim, then you go to micros. Once you're comfortable with micros, that you've been consistent on those. Some people are good with micros in 2 weeks or 3 weeks. Some people are there for 5 months before they're comfortable and that they're consistent. Then you move over to the real contracts. This game is all about preservation of capital. The number of people I talk to who go, I blew up my account. A few years ago, I had a gentleman call me up. He goes, I hear that you've been helping a lot of people in the room. Would you talk to me? I go, well, yeah, tell me what's going on. He goes, well, I'm down about 25 grand. I go, yeah, since the first of the year, and this was July. He goes, no, I'm 25 grand today. You blew 25 grand today? And I just had to ask, I go, didn't you think at like 5 or 10,000, 7,000, you would have said, this plan isn't working? I go, what are you down overall? He goes, well, for the year, about 100 grand, and it just isn't working for me. And I'm like, well, yeah, I'm pretty sure. I'm happy you came to that conclusion, but it took you a little while. Preservation of capital is everything. So in our indicator package that we use in our trading room, there are 6 different indicators. We use the pro bars, the levels, trend cloud, trend strength, trend pulse, and the price markers. I'm going to focus on the 4 in the center, numbers 2 through 5, during this presentation because we only have so much time. The other ones will explain. Well, if you come to the room, you'll learn about them. So let's take a look. Our trend cloud, you'll see it right here. This is our trend cloud. It is not an Ichimoku cloud. It is a trend cloud that we've designed and developed ourselves, having several factors to make it work as well as it does. This is our trend pulse. You'll see the trend pulse has 2 different parts to it. Really, there's 3 different parts to it, 2 that we want to focus on. You'll have the 2 lines, one is a white dash and one is a green line down. And then you have the histograms. You'll see the histograms above, histograms below. You'll also see that there's a bunch of areas without any histograms whatsoever. And I'll explain that in just a minute or two. The strength indicator. We have a strength line. The strength line, you want that in confluence with your strength histogram. Now these are histogram, even though it looks sort of like a cloud at the bottom. I just fattened up my lines to make it look that way, because I like it to look more like a cloud than the line, and I can instantly differentiate what's happening with the trend pulse and the trend strength. Now let's take an example of how do we use our indicators to stay out of chop. Biggest problem that everybody I know has. How do you know you're in chop? Well, we've created an indicator that works fairly well at that. As I mentioned right here, where you had all those empty spots, when you have those empty spots, you're in chop. Period. Down here, you'll notice in the lower indicator, the strength indicator, you'll also notice that our lines are going red, red and blue, red and blue, red, yellow, blue. They're all just staying very tight together like that inside this green and yellow, green and red horizontal lines. You'll see that we pull back. What happens? We keep pulling back, but we're just coming down to these lines, little red, then right back to yellow. These are the indicators that we use to stay out of chop, and they work incredibly well. Now, let me just go through what you see on here. This is, I have other ones that you'll see real trades on, but let me just point out what the trade setups are. Right here, as you look down here, there are going to be 5 parts to the setup. First, you have the trend, the strength line, this blue, moving to the upside, getting stronger. Then you have the strength histograms moving stronger. You have a crossover of the white line up over the green. You have the histograms moving higher. When all of these line up and you have a wick, in this case, off the cloud, you moved, as you can see, you moved above this previous pivot, you have your entry. You have an entry opportunity there. This was a relatively short move, but you should be able to get 10 to 15 ticks off it. Now, what happened? You'll see that this started to roll over. Histograms started coming down, but we crossed over, but we didn't have we came down a little with the red, we popped up. We didn't have a full confirmation yet that we hit, everything was lining up. So we waited until everything lines up. We came up, we retouched the green line. Histograms were beginning to move here. Our histogram on the strength are moving down, and we're getting a nice long red line below the red horizontal line. All of these are lining up, and you notice there's a white dot there. All these are lining up to move, and that gave us roughly a 20-tick move. Now, I know we're focusing on trending, but this is giving you an idea. These 5 items line up. You have a high probability of that to work out. If you have the chop in here, it doesn't. If, for an example, you will see on the bottom, you'll see the histogram down here moving up, but the histogram is on the other side. We're staying down here on the histogram here. These are not in confluence. This is all about these 5 items being in confluence. Let me show you. When I say we use a checklist, we do. I have this checklist on my desk as I'm trading every day. What are the 30 and 240 minute charts doing? That's my first question. We're going to get to that as part of trade management in just a couple of minutes. I look for what is my strength line doing? What is my pulse line crossover doing? What are my strength histograms doing? What is the direction? What are the bias? My pulse histograms, what are they doing? Are we above or below our cloud? What are their targets, indicators, resistance, support could impact this entry? This entire part has one goal, well, has two goals, to get us into good trades and to keep us out of bad trades. Now, let's take a look here. You see the same trade. You'll notice that we were back here. We were in that chop, had that chop indicator with that we put the oval over. We had first, we stopped having these little red dots on the bottom on the line, moved up, pulled back. We started to get a little indication, but we really didn't get much higher than this area. So we weren't that interested. We're getting just a little bit of a move in the histograms. We had crossed over here. So it was looking like we're gonna get a move, but we weren't sure yet till we broke out of our chop range. Now it comes up. We're looking for it to come back and confirm by wicking off the cloud in this case. There was a wick off the cloud here, but you didn't have histograms. It could have just been one more time that you were gonna get chopped. It comes up, wicks off the cloud. We pulled back on our white line to almost touch our green. That's giving us a little last minute touch. And we have our blue line taking off the zero line in the center, the little yellow, taking off all at the same time. So we're back to everything lining up to what we want. You wait for the break above the previous pivot. You're in around 87.30, 25, 87.30, let's say. This runs up, it runs. Now you start seeing our indicators start to break down. You'll see that we're starting to cross over to the downside. That's an indication that there's a high probability we're done. We also have divergence, which you're all used to. So we have divergence here, and we had the reversal on the histograms beginning, but we had some empty spot. So we knew that this area here, we might get a little bit more movement out of here to the upside, might even get a little pullback, one more bounce. So we're not going to start looking at getting in just because they have the crossover, because we haven't gotten all of our indicators lined up. Once we have them lined up again, our histograms are to the downside. We're getting a bigger separation, and the white dash is moving below the green, bigger separation between those lines. We came down, came back up, wicked off the cloud, and you could either make the entry at the break down here, at the break, and there's another little wick right here, it's hard to see. You can make that break after we break these. We had a up, down, little move there, then a breakdown. You could have entered here, or more people would consider it more conservative. We have that debate all the time. You have your previous pivot, you break there, and you have a decent move to the downside for another 20 ticks or so. So between this move here, the two moves I showed you earlier, that all happened. In this case, it would have been my overnight trading. I do get up and trade at 3 o'clock alone quite often. There's consistency to it that I like for an hour or so. It kept us out of the chop. We had our long, we had our short. All of our indicators were in confluence and telling us how to do it. Now, those are the three indicators: the cloud, the pulse, and the trend. Now I'm going to add a fourth indicator, and this is how we know how far we expect the trade to move. We had an exit reason for right here, but overall for the day, the most effective target prediction indicator that I have ever seen, and this is the first indicator I ever purchased in my life and I wrote a check for. This is the best indicator. I would not trade without this indicator. You'll see, and I'm going to walk you through it in a second. There's a purple line here with a little shadow box around it. Green line here, little shadow box around it. Consider this your first target from the center, second target from the center. Okay, now they each have their own name. Let me move to our next slide. I put it on 90-minute charts so you can see it on multiple days. The daily target up is a pink line. Daily target down is the pink line. You could call that target 2, target 2 up, target 2 down. The green lines are the daily level up. So this is a target up, level up. Level down is right here. We give you one on each side of this. So if we're going to move to the downside, we have a target. If we start trending higher, we have our targets. These are incredibly accurate that we're going to hit them. As a matter of fact, and you'll see in a minute, but if you notice this green line here, this green line here, the green line here, the green line here. I went back over 47 days starting July 5th, the 47 trading days after July 5th through September 8th, and we hit this target or this target, the greens, 100% of the time, 47 out of 47 days. I don't know many indicators that come close to that, that are that consistent. Now, how does this work? These pop up at the beginning of the day. For an example, on crude, they turn on at 9 o'clock. If you're trading gold, they turn on at 8:20. If it's the stock market, the ES, they turn on at 9:30. You also had extended after hours ones that you can also turn on while you're after hours trading that are also very accurate. So here's the start of your trade of the trading day for oil in this case, and here's the end of it. These are static lines. Once they are there, they don't keep moving. They are targets that will stay there the entire time. The accuracy is incredible of how well these work. So think about what we're putting together. We're putting together how to stay out of chop, how to get into your trades at the highest probability trades, opportunities for entries. Then we're looking for what are the highest probability to be able to get the longest move for our targets. Now take a look here. For 47 days from July 5th through September 8th, there were 47 trading days. These are the numbers for crude. And if win rates matter to you, all 47 days reached either the daily level up, the green line, or the daily level down by 100% of the time. All 47 days, you got to that level. The prices reached the daily target up, the pink lines. Let me show you, going back here, pink line right here, pink line down here. It hit either the top one, the one up or the one down, 34 out of 47 days. That's 72% win rate. That's 72% of the time you can feel comfortable. You would be comfortable trying to get to that target. Now the price reached within 7 ticks of closure on the daily target. That's the pink line, 7 ticks of at an 85% win rate. Now, why is that so important? A lot of the time, these come straight up and they stop dead right at that pink line. And then they start pulling back. Whenever you are trading, there has to be 2 people in the trade. There's the guy who is getting out because he thinks it's overpriced, and the guy who's getting in because he thinks it's underpriced. I call it the greater fool theory. I need someone who's dumber than me to buy that from me while it's at a high price, at a higher price than I paid for it. So this is the way it works. We look for these as our primary targets to hit each day. On the way, there are several other indicators that we use to get there, other ones that we look for to give us resistance and support, and to give us our, direction and indication. Now, if you go out on YouTube and you go to our Buy Side Global channel, I have a video that I did on, let me see here, July 24th. I started trading. I trade Sunday nights at 6 p.m. I stop. I trade for about a half hour usually. Grab a couple trades, usually make some money. Sometimes you get nothing. I trade then, and I trade at 3 in the morning, then I trade the room during the day. I traded during the day. I traded, this is my 24 hours of trading. I use the OSB software so I could pause in between each trade. I explain each trade that I make. I show you the trades that I make, and I do it real time. Just with those pauses cut out when we're in chop or when we don't have setups. And it shows you, look for the item that says $1,860 made in 24 hours. Watch our trader walk through each trade and the entry and exit strategies. Every one of them, you see it. The other thing about our room is different than a lot of rooms. A lot of other rooms, they always show you their good stuff. You're going to see obviously our good trades here. And good setups here, because that's what we're looking for, is teach you setups. We also, in our room, I show you all my bad trades. As a matter of fact, I always show my bad trades. If you miss seeing a good trade, that's fine, you do, but I always show my bad trades. I want to make sure that people see it, and we are trading in the room, and I'll explain at the end of this how it's going to work for the next couple of weeks. Now, here's a setup. I was trading crude on July 27th. What happened? We had a move to the upside. Here's our first indicators all lined up on the left. I've already explained how that works. I'm not going to belabor, but we did have the strength line. Trend lines are working. The pulse lines are all working. Our histograms are working. In the room, I'll explain the difference between the yellow and the blue and how they work. We're green on ours, and it's up and it's running. So we did have an entry in here, but then we went into chop. Now, I put a little box around my chop every day. And whenever the chop moves to a lower level, higher level, I just put a little box around it, and it reminds me to stay out of it. You'll notice here, we had histograms to the downside. We had a little move down. I'm not going to try and grab that little scalp because we still had histograms on the other indicator to the up. I want these in confluence. Now, we did have a little bit of a move to the downside, but I wasn't really out of my chop. It didn't come back and confirm it and then continue down. So this kept me out of chop right here, even though it was outside my little chop box there. We came up, same thing happened here. It came up, but it didn't confirm it. And we were doing the same thing. We were coming up here, coming up, broke back down to our little side. We're into this no man's zone, very small histograms, not really messing with it. We're still in the chop. What got me out of the chop? Everything finally lined back up. The little light blue line came above the green line. We had the crossover again come up. We got our histograms back. And if you look really close in there, you'll see we came back and we wicked off our cloud right there. And then what I waited for, I mentioned on the final thing on that little checklist, what other indicators, levels, anything might stop me from making the trade. I just waited for me to get by this little previous breakout there. And I'd like you to notice one very important thing. This is 3 contracts. I'm in at 80.24. It's trading at 80.51. I put a target in just a few ticks before getting to the daily target because I need someone dumber than me to buy that from me, or someone more adventurous. But there's our daily target. And you see it headed right up. By the way, yes, it did head up and it broke through it and it kept going. So whoever bought that, they could have made some money off of that. That's our system. I repeat it and you'll see it 100 times. That's what I do all day. And that's what we teach in our class. In our classes, that's how we use our indicators. Let's take a look over here. Same situation. Do you see? This is a little wider. This is a crude trade again. I do trade a lot of crude. It's I'd say 95% of my trades are crude. We will analyze anything you want in the room. So we have we had the crossover way back here, but it wasn't really taken off. Also, remember down here, our strength indicator is telling us we're still in chop. We're between these 2 red lines. Our indicator here, the line is just chopping back and forth, so we don't have it. Until this strength histogram starts moving higher, I'm not willing to take a trade. Now, this started to separate the green and the yellow and the white dash. This began to separate right here and move higher. The histogram did. We came up to that line, that dash is the 5 on the 30, which I use every day a great deal. We came back and we wicked off the VWAP and another indicator that I use, and we wicked off the 18 EMA, and we broke through. And I happen to be very comfortable with getting in earlier on this trade just because we had tried one, we had found some, we had come down here a couple times, we had been down here a couple times, this was chop. I just happen to know the way the market works. I knew that the reasons that we had been down here, and I felt very comfortable. I hopped in early at 86.54. It's still 86.92. I had 2 contracts running. That's another $780. And I just put my trailing stops on to just follow them, and I let the trailing stops do the work at that point. Now we're coming up to a shadow box that'll be explained in the room also, but that's also part of the indicators to go, you know what, I'm gonna get a little bit of resistance right here. We broke through the daily level up. If it stays there, it has a high probability. We're gonna make it up to where the target was. That's how we make our entries. I know I spoke very fast, and I haven't broke out and looked at questions. So again, right here, our trend line, the strength line is this line right here. The other one was dark blue. On this chart, it happens to be light green. I change them now and then. And our goal is to get this white dash above this green and then have the histograms, everything lined back up for you. Let me give you one more quick trade. Let me give you one more quick trade. There we go. Okay. Now, this happened the opposite direction, came up. We had 1, 2, 3 times it attempted to get up. We were in chop. This was chopping away in here. This was up at the top. You can see it was just sort of dying off. So I threw a little chop box up here at the end saying this is our range. We wanted to break down below. Had chop right here. See, empty, no histograms. We broke to the downside. You'll see that the green started breaking down. I don't like, if the histogram and the strength is on my side, I'm not going to do it. I'm not going to take the trade. This was on 9/12, so it was earlier this week at 11:32.50. It broke to the downside, and we also had the line break. You can see it went very lightly down there. We had come up. That was our third time up here. The one thing that got me in, number one, we wicked off the cloud again when we were wicking off the 18. But also, you'll notice we had 1, 2, 3 of our strength lines being lower and lower, as these would not go any higher. That's as close to divergence as I'm willing to call that divergence. It broke down. I took it with 4 contracts because I thought I saw it going down. I knew it had already had a good run. This right behind here is the buy side global level target up. So that it had gone through the target, already been through there. I felt good that we were done. And then you'll notice I put my Fibonacci's on here when it topped out. And we'll talk about that in a minute. Because once we hit our target, I want to get money on the other side when it starts reversing. Now let's look through. Now, what I look for is I want to have first my 240s and my 30s in confluence. I will show that to you in the next chart. We want them in the same direction. We want to have them all working in the same direction because that's when you're going to get your biggest, best moves. Now, we were in chop through here. We're popping around in chop, had a little up and down here with the indicators. Didn't really have it. We're between the lines here, between the lines here. It finally broke when we had a support break. And there was a slight, almost a wick off the cloud, just missed it by a tick or two. We had that break below. We had this bar. This one happened to run from 75.21 entry all the way down to 72.86. Now, these are the order flow indicators are what are coloring this, that are coloring the bars. So the way it works with us is we were chopping. You see red, yellow, blue, very close together. Until I broke it, I got all red. That's when we get short. And until you get a blue one, and you're also getting we have 8 minutes left. Okay. A lot of material. Let me run through and get to where we're going to be. So you can see how these work. So we have a support break, works here. You can see how our system works. It works the same time every day. Again, these are our 240 and 30-minute charts, are in confluence, both to the downside. That was for that previous trade. That trade right there, that's just showing you again. Now we have a reversal trade that we do. We had strength confirmation, pulse confirmation, we had a wick off the cloud, and it had been coming down, came up, pulled back, wicked off the cloud. We had our entry right at this light blue line. This is how we trade every day. We use this to stay out of the bad stuff only looking to take the best trades we can. Does it work every time? Of course, we get bad trades, but we are trying to minimize them. This is same basic concept, so we're just gonna move on. Let me move over so we can get a little closer. Again, a wick out of the cloud trade, same setup. See how we were in the chop right here. This will keep you out of chop. This keeps you out of your chop. Our other rest of our indicators get you back in by using the checklist. So let's move on to the same checklist, the strength, the pulse, our histograms above or below the cloud, what targets, indicators, resistance, support. What are those? We talked about all of that. And when you hear the offer after this, I think you're going to be thoroughly impressed. Okay. Here's what our trend does. We focus on our daily current buy and daily and current bias. We look for the best setups possible, our highest probabilities. We do consistent and repetitious entries. We look to do our trade management, and we talk a lot in the room about trade management, exits, levels, and targets. We focus a lot of energy on those. What is the level? Do you really have to get out yet? Can you hold through that pullback? And we work on staying out of chop. These are going to be a few testimonials. I may not read them all because of our time constraint. First, from Andrew, this is finally a system I trust. The indicators are incredible and they work really well. They really work. The teaching is unlike anything I've ever seen. Thank you so very much. These are the best indicators I've seen, and I paid for a few. These are simple enough for a new trader, but still have enough detail to be very useful for a seasoned veteran as well. That and an unusual combination I have not seen elsewhere. The room is excellent. Mark is very good at running a room and handles the monumental task of educating and showing potential setups at the same time. It works on all futures, by the way. We do use these they can work on any of the futures that you trade. I have some ways that I do use it for swing trades, but that's for another video. Best room I've been in, and I've been to quite a few. Candidly, this methodology is very simple and effective, just a matter of timing entries and management. So yes, our trading strategy, planning, our trading plan, our coaching process works. BSG has helped hundreds of beginners to begin full-time traders, and we would like to help you. Now let's take a look at what the package includes, and mine is showing that we still have a little bit more time, but not a lot. Okay, the package includes the 6 items that I told you, the levels, the trend pulse, trend strength, pro bars, trend cloud, price markers, which we didn't even show you yet, and we didn't go over the 2 of those yet. The trend trading, the masterclass videos, we made multiple videos for you to understand how they work, how they trade. Also, remember, you go to the YouTube, take a look for that I had already shown you. That's a $3,700 value. Now, this weekend we are doing something special, and Rob and I went back and forth about this quite a bit, as a matter of fact. And it would be $199. The special at the end of one of these presentations be $199 down and $99 a month after that. We are going to do something incredibly unique and special for this that I don't want to sound like the car. This is a deal that I don't believe you will ever see from us or anyone else again. This valid is you got to sign up for this weekend only. Here's what you get. Your first month is only $19.90. You get use of all the indicators for $19.90 for the first month. On top of that, and the most important part, we have a training room that runs, okay? The training room runs from 8:45 in the morning till 11:45 in the morning. We do 3 hours. For the next 10 days, you have 10 trading days, you have access to that. So this coming week and the following week, you have access to that room. Plus you have the indicators. During this time, usually I'm trading and I'm doing some teaching. I'm going to focus more of my energy on the teaching and working with everybody on really understanding how we selecting, identifying, and getting our trades. There you go, Rob. You can finish it. I think is Rob here?
Oh, I thought you meant your Rob, not me, Rob.
My Rob. I did mean mine, Rob.
Yes. Well, thank you, Mike. So amazing presentation. First thing first, the product, the setups, and then the indicators is used by the room, Mark, and the team for such a long time. It perfected, working very well. You will see live in action in the room. This is the best offer we ever had in terms of the lowest cost possible. You have the full setups, all the indicators. If you look at, even if you go to the website to buy the indicator, it will be $4.95 per indicator. For this weekend, you're going to get all the indicators for everything you need for the setups. Not just that, the biggest bonus is you're going to see live in action for 10 days how the team logging in the morning, 8:30 Eastern until like a noon, how they're using these indicators, how they're using these setups, how they are trading every single day on these setups. Most of the time, tools doesn't matter as long as you need to know how to use it effectively. That's the purpose of we want to give you the full suite of products and then the full all the master classes, also show you live in action in the real account how it's being used to trade and make money. So this is the best chance you can have for a long time. Hopefully you can take this offer right now. Please take a screenshot, take a picture. This link, buysideglobal.com/trend trading. You will not have that on the website. You will not find the link or anything on the website. So I would recommend you take a picture of this slide right now. You will have the link, code, details, everything. That's all I have. Thank you so much, Mark. That's a great presentation. Thank you so much.
I'm happy you enjoyed it. I was looking for I'm going to pop it in here to the entire audience. I'm throwing the link in there in the chat section. It should go.
Yeah, one other question is like, will it work on all the features or just crude? It works on all, but Mark, you want to expand on that question? Will it work on just crude or any other features as well?
No, we use it on, it works on other, we trade it with gold. We trade them with, I trade it with, I'm not a big I trade 95% of my stuff is gold, crude, just because I know it so well, but it does work on all the different futures products. Yes, they work on all the same way. It's the same setup, the same design. There might be a couple settings that I would work with you on to change, just because you need a slightly different size candle if you're doing ES or NQ, because obviously they're more volatile. But we will work with you on that.
And other
we
question
also,
is,
you can do any analysis. Ask us about anything that you want analyzed in the room, and we'll do it.
The product works only on NinjaTrader 8 platform. We are not in TOS, we are not in TradeStation, only on NinjaTrader. And the pricing, this pricing 1990 is only for the first month. The reason is we wanted to feel and then test and watch how it works. After a month, it will be $99 per month. This 1 month, you're going to have a lot of value, training, live in action, everything. The lowest price is for the only one reason. We want you to have the access to the lowest cost possible, so you will appreciate what it can add a value to you. Yes, it is after a month, it will go back to $99 per month subscription.
One last thing I want to mention. That's 10 days, 3 hours in a room. That's 30 hours of training with people who have been doing this successfully for a lot of years. I don't know where else you're going to get that in and of itself. On top of that, you get the indicators.
The room that we're talking about is a bonus. That is $195 per month we charge for the room. But we are giving you with no cost for this weekend if you purchase the indicator subscription. So $195, that's what other members pay to be in the room right now, but you're going to get access for 10 days. Again, the reason is tools doesn't matter until you know how to use it effectively. That's the whole purpose of you to come to the room, the 10 days, watch it live, ask questions, see in action, so that you'll be able to A room schedule. Mark, can you elaborate on the room schedule? What time starts? What time ends?
We started at 8:45. I do a review of everything. I started at 8:45 and it finishes at 11:45 Eastern time. And I believe we've hit our time and a little over.
No, you guys did, and wasn't going to say anything, but I can't believe the offer you're making our audience today. I mean, 30 hours of training for under $20, and that's less than the cost of a losing trade or maybe commissions round trip on one futures trade. And so what if it goes up to full price afterward? You'll be paying for it with money that you're ahead that you've made on your trading. It's a brilliant offer. The software looks incredible. I was sitting here watching. I was like, oh my God, look at some of these moves. Ladies and gentlemen, if you're looking for a system that will identify perfect trade entries with minimal risk, and you've seen how big of runs Mr. Mark Conlon of Buyside Global has a solution for you. We've put the offer in the box multiple times. You can always find them at buysideglobal.com. Mark and Rob, I want to thank you for joining us today and wish you a great rest of your weekend.
Rob, it was a pleasure being with you. And thank you, everybody, for sticking around and listening. Look forward to seeing you in the room.
I almost look forward to coming into the room myself, but I don't have a futures account yet.
You can always watch with an account.
You're welcome. Come on in. You'll enjoy it.
It would just aggravate me to watch like all the profits being made and not be cashing in on it. But we might talk in the near future. But ladies and gentlemen,
Rob, you're always welcome.
Thank you so much. I may be in touch if I get a futures account open, or I definitely will be. It's a matter of if I get the account open or not. But ladies and gents, I mentioned at the top of the show, we had a great lineup, and I hope everyone is listening closely because our last presenter is a graduate of Syracuse University, and he's been trading the financial markets for the last 15 years. He wears several hats over at Right Line Trading. He's a trading coach, assists with the optimization of trading strategies and indicators, provides logistical and technical support, and is always ready and willing to assist the Right Line trading community. Here to present AI Auto Trader, powered by next-gen technology, is Mr. Rory Powers of Right Line Trading. Welcome to Traders Corner, Rory.
Hey, Rob. Thank you very much. Okay. Somebody had a mic that was open. So I want to thank you so much for having me today. What a great presentation. Thank you for the nice introduction as well. I just want to make sure that everybody can hear my voice and see my screen. Okay. Let me check my audio. Plugged in. Testing. All right, let me check the questions panel.
Test passed.
Okay, thank you, everybody. Now I can see your answers. All right, so you can see my screen and hear my voice. So, wow, this has been a great event, and I respect everybody's time, so I'm going to keep the ball rolling. I've got really an exciting presentation to show today. It's on our AI Auto Trader, which is based on mathematical modeling combined with artificial intelligence. And it's really a very exciting system. Before I get started, let me just satisfy the CFTC requirements regarding their risk disclaimer. What I'm about to present to you is for educational purposes only. I'm not a licensed trade advisor. There's a substantial risk when trading the markets. You could lose your entire account. Who knows? They might even come looking for you for more. So with that being said, let's keep the ball rolling. Rob did a beautiful introduction. I just want to show a little more about myself, my beautiful family. My wife, I'm blessed to be married to a beautiful Haitian American woman, and we've had two beautiful children that are really such blessings in our lives, and they mean the world to me. And one last picture, I had to do it. This past week, we did a little fishing, and this is the mahi that we caught down here in South Florida. And I am an avid fisherman. I love to go fishing at least once a month, weather permitting. And it's always a lot of fun down here. I live in the Homestead area, right down by the Homestead Air Force Base. I want to take a few seconds here just to acknowledge that I'm really part of an incredibly talented team. It's just not myself alone here pulling all the levers. I'm part of a tremendous team, and I'm not going to take a lot of time because I know it's been a long event. But listen, Right Line Trading, we're software developers who also has live trading rooms and alert services that leverage the trading systems that we develop. And our vision as a company is to develop innovative trading strategies that help predict the future direction of price. Wow, what valuable information that could be. And there's so many different ways that we can leverage that information. And our traders, who I'm going to introduce first, kind of exemplify how we use that information to monetize that information and to extract profits out of the markets. And I think right now the craze has been the prop trading, where it's really opened the floodgates without putting any of your own capital at risk. You're able now to get into the game and trade 5 contracts, 10 contracts a trade, well, for just $100 or a few $100, and you don't have to worry about losing your own money. So we happen to have a professional prop trader on the team. His name is David Kushner. We endearly call him the Kush. Kush trades 8 funded accounts with a few different prop firms. And he developed a winning strategy that he repeats day in and day out. He's one of those guys that could sit on his hands and just wait for everything to line up perfectly. I don't know how he does it, but he does. He's extremely consistent. When he takes one trade, it goes into 8 different accounts, and he treats it as a business with very little drawdown. So he leverages our software to trade his 8 funded accounts, and he does it very consistently and successfully. Listen, it's one thing to get funded. I think, with as inexpensive now as these prop accounts are, you can just keep trying and trying until you get it, and you may finally get it. But then the important thing is staying funded. Once you get funded, we want to keep you funded, and we have a couple of different ways to do that. Our other futures trader is down here in the left-hand corner, Mr. Craig Emery. A lot like the previous presenter, Mark, was a client of Right Line Trading. After trying numerous different systems, buying many different indicators that just never worked for him, he did finally find a home with Right Line Trading. And with his many years of experience, he has a live trading room that mentors new traders and advanced traders alike. And he trades our system every morning, Monday through Friday, with his primary focus on the NASDAQ and the EMINI. We also have a few options traders. Down on the bottom right-hand corner is Mr. David Wyse. David is a professional options trader. He's been trading for 13 years full-time. He doesn't have any other employment. That's how he makes his income. And he has a Reddit verified performance. If you've ever heard of the Reddit community, it's a community of, I think, around 30,000 members. And there's power in numbers. And to be able to publish articles and contribute to their community, they want to make sure that you have the credentials, that that you have a verified track record. And David Wyse has just that. For the few years that he's been with Rightline, he's had over a 90% win rate trading our Compass trading system. If you ever get a chance to jump into his room for just to take a look, options trading is extremely exciting. And David, one thing I could say about him, his demeanor is people. I've heard other people say, "Hey, come join me. It's stress-free trading." This guy doesn't sweat, man. He has nerves of steel, and that's what it takes to be a successful trader. So options trading is a great revenue stream for our members, and David is a great trader. On the top right, we have Mr. Mark Sachs. Mark Sachs founded Rightline Trading, no longer owns the company. However, he still contributes. He's an extremely intelligent guy. He's a great trader. He has several options alert services with the biotechs, with credit spreads. He's extremely intelligent and a valuable member and contributor to our team. Then I want to get into kind of behind the scenes. We have Mr. Brock Miller. He's kind of a new addition to the team. He's a college student. He's studying computer science, and he also is doing some digital marketing. And he offers tech support for our members as well. Mr. Charles Sider, who's right down next to him. Charles Sider is a graduate of UCLA, and he's the engineer on the team. And God knows we need him. He makes sure all the I's are dotted and the T's are crossed. I can't tell you how many meetings in the morning that he seems to find a lot of I's to dot and T's to cross. But he's extremely talented and smart. He's been in the software development industry for over 30 years, providing global client support and service. And he's also a very active trader. He loves trading, and that's really his passion. Then we have Mr. Sergio Rodriguez, and I call him Luque. Luque, we've been working together for about 10 years now. And Sergio, a lot like Joe Wise, he's one of these guys that with NinjaTrader, they can make it sing and dance. And I'm sure there were other presenters before me that can do the same. It's a very talented lineup. Sergio, though, let me tell you something. If you have a question regarding NinjaTrader, this guy will, if he doesn't know it, he will find it, and he will dig for it. And he's extremely intelligent, and I enjoy working with him. And he's a very talented member of our team. Our team is led now by Mr. Mark Miller. Mark Miller is a U.S. Army veteran. And I got to take a second to give a shout out to anybody who served in the military. Man, you're a better man or woman than me. Well, in my case, a man. But it takes just a tremendous commitment and service, a sacrifice, really. So I really respect that. Anybody who serves in the military, thank you for your service. Mark has his MBA from Cal State, and listen, he brings those core military values to our team: honesty, integrity, transparency, and good old-fashioned hard work. And he's all of those core values have found their way into every department of Rightline Trading. He's a spiritual guy, and he's a personal friend of mine, a great guy. And he right now is the owner and leads the team here at Rightline Trading. So our goal as a team has been to build a community of traders that collaborate and support one another on this trading journey. And I've had the privilege of probably over the last 10 years, 6 days a week, talking to hundreds, if not thousands of traders. And listen, we all share, in our journey, there's roadblocks and pitfalls and highs and lows that we all experience. And it's an amazing journey. So there's power in numbers, and we want to put together a whole community of traders that all share and support one another in this great journey. I wanted to give a shout out to Brock. Brock Miller is he just started trading, and I'm not knocking Brock. He's just not very experienced. He's a young guy. He jumped in with the prop trading firm, and spent a few bucks, and with very little to no experience trading, uses the automated strategies. I'm going to say semi-automated, because there are times that he'll maybe manage to trade some and keep an eye on things. But the important thing is that he was able to pass these evaluations on like his first couple of tries. Once or twice, I think he had 2 or 3 prop accounts, and on the second or third try, he was able to get funded. Okay, so I always have traders ask me, hey, does the AI auto trader, does it work on prop accounts? The answer is a resounding yes. It absolutely does. And I'm going to really I'm not going to talk a million miles an hour, because I want you to comprehend and see what I'm talking about. But towards the end, chances are I'm going to run out of time, and I don't want to keep you. It's a beautiful Saturday afternoon, and I want you to share, the quality time with those that you care about the most. But as I'm talking, if you have a question, please post it in the questions panel. If I don't have time to get to your question, just put your name and phone number in the box. Rob and I have a nice relationship, and he shares the chat box, the information that's in there at the end, and I could see it myself, and I take a screenshot, and I'll call you back and answer any questions that you have. Okay. So with that being said, our journey as traders, let me tell you, as humans, and I learned this in a Trader's Corner presentation. One of the presenters mentions, and now I always bring it up because it sticks in my mind, that humans have 16 different facets to their personality, and I think there's only 3 or 2 out of the 16 that lends to being a good trader. It's our human nature, these emotions that we have, that sabotage our own results. Listen, I personally, I like to get out of a trade too darn early. And if I'm up on a trade, I'll squeeze my stop. I'll bring my stop up too tight. I won't let the trade develop naturally, and I won't let it mature. And I can't tell you how many times that I've gotten out too early or squeezed my stop too tight, only to watch the trade mature and leave hundreds, if not thousands, of dollars on the table. And I know that I've spoken to a lot of you that share the very similar emotional issues. Or listen, we all buy indicators, the next shiny indicator that comes up. A lot of the indicators that we use, they lag price, they don't work. A lot of trading systems lack a proven trading methodology, but it all leads to the same frustrating place, which is blowing our trading accounts, saving up some more money, and throwing it back into our trading account and starting over again. But I want you to know that you're not alone, okay? And it is our team's commitment. I know my slide says it's my commitment, and it is my commitment, but not only is it my commitment, but it's my entire team's commitment. And I know that for a fact because of the hours and the time that we put into this. And it's really our number one goal, is to bring it to an end. And we want our team and we want our members, because we actually do consider you part of our trading family here at Right Line Trading. We want you to be successful. So on Monday through Friday, when that opening bell rings and we're looking at the right edge of the chart, listen, what the talking heads say and or what our biases are really doesn't mean a thing, because price can go either way and we just don't know which way it's going to go. And what we rely on, as David Wyse always says, is we rely on the technicals. We rely on our indicators to signal us in to the future direction of price. So we've narrowed it down to two things that we found it will take to create trading success. Number one, we have to have the tools. We have to have the tools. If you're a carpenter and you're going on a job to put in a door and you need a nail and hammer, you're not going to take out a screwdriver. You have to have tools that are going to identify risk to get you into the trades at the highest probability entries to become winners. And ideally, we want software that can automatically get us in and out. Listen, a lot of us, are just not that good when in a fast-moving market to make split-second decisions on a platform that's not very easy to navigate. Let's be honest, NinjaTrader 8 is an extremely powerful platform, but it took me 5 years to learn to navigate it. It's not simple. It's not a simple platform. So fumbling with the platform and in a fast-moving market, making split-second decisions with thousands of dollars on the line. Listen, these banks, these hedge funds, they're all using super automated systems that get them in and out of the trades. So what are the benefits of using the AI auto trader? Well, those emotional mistakes that I alluded to earlier, well, they kind of all disappear. Again, I recommend really leaving it alone, because I still want to jump in and help the robot. And at certain times I could see where, there are, times that you maybe want to move your profit up or down or just a touch if you see you're moving into support or resistance. But for the most part, leave it alone. Just let it run. So there's no more overthinking, over hesitating. In my situation, there's no more cutting my winners short or mismanaging my trades. All of the profits and the stop are entered on your trade for you and sent to your broker. So it's going to get you in and out without having to stress over it yourself. So I want to go ahead and jump right in and go over the portfolio of different strategies that come with the AI Auto Trader. And if you decide to come aboard today, you're going to get the full portfolio of strategies. The first one that I want to cover, we like to refer to it as the golden goose. The golden goose trades gold on a 2-minute chart. It trades gold on a 2-minute, and let me just pull up my notes. And I wanted to give you the risk to reward ratios on these, because and I'm not going to go into any depth on this, but we know as futures traders that that's what kills us. We can win 2 or 3 trades and then take a loser, and it wipes out 3 winners. So what I love about the golden goose strategy and all of the strategies that I'm going to go over with you are the risk to rewards. The golden goose risks 24 ticks to make 45. So it's a 2-to-1 risk to reward in our favor. It uses our signal B entry. Our signal B entry, our system looks at the market internals. We want to follow with our signal B entry. We want to follow in the direction of large institutional money. They're the ones that create the trend. How do we do that? Well, what we do is Sergio developed an indicator called the Market Internals Indicator that looks at numerous indexes and some declining ratios that looks for a disparity between uptick and downtick. Retail traders really won't create a huge disparity. When it's only us involved, we create chop, disorder. When they jump in with those, huge orders and tremendous amount of money, that's what's going to create the trend. And our system, our market internals indicator sniffs it out very quickly. So when that money's being driven into gold and driving the price of gold up, you'll see those green triangles on our charts. And part of our trading system does include all of these chart templates. And you could see some long entries that it took. The trade was entered and the profit target was hit on the first target. It got stopped on the second. The market kind of went into chop and it stood aside. As soon as institutional money came back in, there was a large disparity of uptick versus downtick, and we jumped back in and we were off to the races. So the golden goose does a great job of stepping aside and dodging losers and getting into those high probability trades, following in the same direction of the trend. This was the equity curve last month, was up about $3,200. So let's go ahead and take a look at our next strategy. Our next strategy we refer to as the Nighthawk. And they all have different names because they all have different personalities and different strategies and different data series. They all run just a little bit differently. We try to capitalize on any type of market condition. So the Nighthawk strategy runs on a NASDAQ 1 minute. 1 minute, it can really fly. This strategy has a 3-to-1 risk to reward ratio in our favor. Okay, we're risking 50 ticks to make 160. Let me say that again. We're risking just 50 ticks to make 160. So one winner would wipe out 3 losers. All right, so that makes a huge difference in our equity curve. The Nighthawk strategy is really one of our most popular strategies with the prop traders. Not only because of the risk to reward ratio, but it can really run up the score quickly. It used to be the single day record holder. We had the one strategy that recently passed it. But let's keep moving. DB are his initials. And and what I really like about DB is in our Discord chat group. And if you do become a member with us today, you're going to become a part of our Discord chat group. We have hundreds of members that all support one another. They all answer each other's questions. They share what's working, what's not working. And that strength in numbers, that information, not only is it a huge money saver, but it's really a great money maker. So what I like about DB is he says right in his comment, for those interested, he used only the Nighthawk in the evaluation account. He pauses the bot once it makes $500 a day. Okay, so once he makes 500, he cuts it off for the day and he locks in. It's capital preservation. There's no need to risk it after he's got 500. He'll live to trade another day and he'll redo it tomorrow. So that's a really great practice in capital preservation. And he moves the bot to another eval so as not to lose profits. That eval is getting close to passing also. And it took him about a month to pass the first one, but now he's went on to pass 2. this past week. And he posts in his Discord his daily results every day. But that's the type of information that you gain by being part of a community. The Nighthawk is really an interesting strategy because, you know, I always refer to it. I don't know if you ever watched Jerry Seinfeld, the Seinfeld episodes, but George Costanza, there's an episode where, you know, he finds everything he does is wrong. And he comes to the conclusion, if I just do the opposite, then I'll be right every time. So that's kind of the strategy with the Nighthawk. The 1 minute, you can see in an uptrend, the trend goes up, it heads into an area of support or resistance. So what do we do while it's trending up? We take a short trade and come down and get both targets. And let me tell you, those are not small targets. I believe they're 40 for the first and 80 for the second. So you can see it repeats the same thing, and an up move, it gets overextended, comes down and takes out both targets. And it does it over and over and over. And it's an extremely exciting strategy that trades in a way that I don't think many people have that style, but it's very successful. And you can see the equity curve from last month of the Nighthawk strategy. So that brings us to the retirement plan. And if the retirement plan keeps trading as it's trading now, that could be you. It could be me on that boat sailing off into the sunset. The retirement plan trades on the NASDAQ or the micro. Now, all of these strategies that I'm going over can be traded either on the mini or the micro. I get that question a lot. It can be traded on the micros or the minis, okay, depending on your risk tolerance. The retirement plan uses a signal A entry. There's two entries, a signal A and a signal B. The signal A looks at the Laguerre oscillator along with the market internals for its entry. And it has a 2.5 to 1 risk to reward ratio. These are a few of the trades that it took on the NASDAQ on that 2-minute chart. You can see on the bottom of my chart where it has my Laguerre oscillator, it shows the RSI line, which is the one that's turquoise blue, crosses the 20 line, and it immediately pops us into the trade and shoots up and hits our first target. So when that is, the entry is fired when the RSI line comes through the 20 or the 80, and we have market internals and our bias, our background bias, all together in combination to take those entries. And you could see here when it came out of this was a losing trade. And I put this slide here on purpose because I wanted to emphasize that, listen, we're not going to win all of our trades. With these risk to reward ratios, it's okay to lose a couple of trades. It's okay. It's not going to put us out of the game. But because when we come back and hit a winner, it's going to wipe out 2 or 3 losers. And that's what I love about these strategies. You can see on this third trade here, it took the long entry, the RSI line breaks up over the 20, and it shoots up to the upside, and we get 80 ticks on the full winner. Okay. And this was our equity curve. So you can see that we have a really nice portfolio of strategies. I always have traders that love to trade the ES, the E-mini. And the E-mini, and this one trades, the Hungry Hippo trades on the ES10 range. The Hungry Hippo uses our signal A, which is our Laguerre entry, and it's risking 22 ticks, okay, 2 contracts with 11 tick stop, to make 60 ticks, which is almost a 3 to 1 risk to reward ratio, okay? So the Hungry Hippo, when that one gets a winner, And you could see this slide here exemplifies our risk to reward. My average losing trade for this strategy is around $191 trading two E-mini, E-mini contracts. However, when it hits a winner, it makes $439. Big difference. And you could see these entries. I mean, these are big moves on the E-mini. These aren't, I wouldn't consider those scalps. Those, they're day trades, they're intraday trades, but they're, they move quite a big distance for the ES. So the Hungry Hippo is really a great part of our portfolio of strategies. And you can see the equity curve, very little to no drawdowns on these strategies. And last but certainly not least, and I'm going to play a video in just a moment that I know my prop traders, I know you guys are going to want to see it. Even if you trade a live account, you're going to want to see this video. And I've never played a video during the webinar like I'm going to try to today. So with all the tech issues, I hope I'm not jinxing myself, but I got a great video I'm going to show you here with the haymaker. The haymaker is our knockout punch. Our haymaker is the Mike Tyson. This thing is incredible. This past week alone, it made $3,300 running on my computer. And it's a very exciting strategy. It trades on the NASDAQ on a 30 range chart, And you could see the entries that this thing takes. It gets into the moves very early on that signal A. The RSI line crosses. We're, price is way below the 50. In the past, we would have never gotten into a trade trading into the 50. This, we've got momentum and market internals and our background bias and our direction. And you can see this thing goes all the way up to our second target. Our second target on that is, I believe, also 80 or 90 ticks. So those are really big moves that it's making. It will take a loser. It looks like it took a long and got a stop. And then it jumps right back in and gets a home run. And those home runs add up quick. And I'm going to show you this video that's, it's going to show the success that we're having with this haymaker. So let me give this a try. It's only a 2-minute video, and if it doesn't work, we'll just keep going. Okay, let me try to come back. Okay, I just want to confirm that you guys can hear me again. If you could see my screen and hear my voice, just please give me a yes. Okay, thank you, Lawrence. You can see my screen and hear my voice?
Confirmed, Rory.
Okay, great. All right, so what Mark showed was he's running a $300,000 prop account. He was trading 10 contracts at a time on the Haymaker, and he was able to make $11,000 on that particular day using the Haymaker strategy. What you may not have noticed, because it went very quickly, was underneath or above that $300,000 account, there were 5 $25,000 accounts that he had passed all 5 of them. With a $25,000 account, the profit goal is $1,500, and he had reached that profit goal on all 5 of those prop accounts. So he got a really good jump on the $300,000 account. I think he needs 20,000, and he's at over 11. And then he had 5 more $25,000 accounts that he had reached the funding goal of $1,500. So he's having a lot of success with trading the Haymaker. So let me show you my offer. I want to go ahead and do the Traders Corner special offer. The Traders Corner special offer, what it does is what we do is we double the coupon code. And instead of saving 100 for the monthly and 500 for the annual, we double them. For the first month, you'll save 200 on the monthly, bringing the price to $299, or you'll save 1,000 on the annual, bringing the price to $29.99. And what it also includes, and we include all of the strategy templates for the for the entire portfolio of strategies. We also include all of the strategy templates that go that go along with each strategy, all of the chart templates that go along with each strategy. So you have our full indicator suite on your charts. If you wanted a discretionary trade off of the signals, you're more than welcome to do that. So you get both components, the discretionary component and the automated strategies as part of this special offer. What I think adds the most value is if you come aboard now, in the future, you'll get all of the future markets and strategies that we have coming. And let me tell you, we've got one coming next week on a 5-minute time frame on the EMINI. That's just incredible. The numbers were insane. But we still want to test it and make sure that it's consistent before we release it. So probably by the end of next week. But come aboard now, you'll get all additional markets. You'll get the discretionary system, the automated system. Full tech support is included. And you'll have access to our Discord chat group. And let me just talk very briefly about our tech support. I mentioned Sergio and Charles. These guys, man, they'll get on your machine and they will hook you up, install the entire thing. And in our Discord chat group, we have a channel where it's called the technical help, or help in technical support. You just put a message in there and these guys are going to jump right on it and get you fixed up. So in our Discord chat group, which is kind of the hub where everybody meets every morning, we have a general chat channel. We have our resources channel, daily results. If you're having a problem, a solution, all of that can be found there. And people post at what's working, what's not working. And it's really a great portal to see exactly what's going on with our community. And this is a live shot of it here. of the general chat, of the resources channel. You can see in resources, we have really a number of great videos that go over we have a spreadsheet of all of the settings. You're never going to be lost or in the dark. You're going to have access to everything. So let me just take just a second here. If Rob or my associate Brock will put the link for the special offer in the questions box or the chat box, you'll be able to access this special discounted offer. The system runs real briefly because I have run out of time, but I'm going to answer just a few questions. Yes, the system runs on NinjaTrader 8. NinjaTrader 8. Once you have the software, what's the next move? Thank you for asking that question, because I think that's important to know. The next move, Lawrence, is what we do. Our tech support team is going to set up a separate SIM account for each strategy. Okay? We're going to run it for the first week. So listen, if you get started now, don't worry. We're going to run it in SIM. Your subscription's not going to start until after we got you up and running and everything's working properly. For the first week, we're going to run each strategy in a separate SIM account. This way you can see what the performance is, how each strategy behaves. We'll make sure that everything's working correctly. And then you can make a more informed decision as to which strategies you want to trade on a live or a funded account. Okay, so that's what the getting started looks like. You'll get a Calendly link. You'll have instant access to the trading systems, instructions for third-party licensing. With the Calendly link, if you're one of those people that are good with NinjaTrader, then you can install it yourself. It's not difficult. We have a great video tutorial on how to do it. If you're not very good with NinjaTrader, you basically have no idea how it works, don't worry. That's the beautiful part about this. We'll set the entire thing up for you. The only thing you'll have to do is check a box, okay? And it will run for you. It does everything for you. And man, it does it good. So I hope that answers your question, Lawrence. The automated part of the service tells you when to enter and exit. Ryan, the automated feature actually not only informs you by showing you on the chart the cross, but it executes the trade on your behalf. Here you see the long entry. On a discretionary basis, you'll have this template, okay? If you have your strategy enabled, when that cross comes in, telling you that all of the conditions have been met, if your strategy is enabled, you need to do nothing. It's going to enter the trade for you. However, if you don't have your automated feature enabled, which is only a check of a box, it's not difficult, then you can actually hit your chart trader and buy when you see that signal come up. Okay, we do share the ATM strategies with you. Albert asked if you could use Thinkorswim instead of Ninja. Not for the automation. We do have indicators that are very similar to these on Compass, but we're talking today about the AI Auto Trader, which only runs on NinjaTrader 8. Okay? Ken said Charles is outstanding. I really appreciate that, Ken. Listen, if you have any other questions, please, I've run out of time. I want to respect everybody's time. Put your name and number in the chat box. I'm going to grab a sandwich right after I'm done eating. I'll give you a call, if not today, then later on this evening or perhaps Monday. But I will call and I will answer any questions. Manusha, the answer is yes. My email is, one last thing, Rob. My email is support@rightlinetrading.com. Support@rightlinetrading.com. My phone number is on the screen now. Thank you so much, Rob, for having me. Thank you, everybody, for your time. God bless you. Have a blessed weekend.
Thank you, Rory. The automated AI strategy looks amazing. I've been hearing that it's been crushing it lately. That's so exciting. I could sure use a retirement plan strategy, and you may hear from me to set it up in my 401k. Congratulations to you and the team over at Right Line Trading. Ladies and gentlemen, if you struggle with human error, over trading, inconsistent results, and blowing out your prop or live accounts, Mr. Powers over at Right Line Trading has a solution for you to get funded and stay funded. You can learn more by clicking the link in the chat box. I am going to leave the chat room open so that Rory can see all the names and numbers that get typed in. Rory, thank you again for being here. It's always a pleasure to have you on Traders Corner, and we hope you come back and see us again soon.
Thank you. Thank you, Rob. I sure
You're very
will.
welcome. Ladies and gentlemen, that will conclude our online trading summit. The staff at Traders Corner wants to thank you for joining us today. It's been an information-packed event, and we hope you all enjoy the rest of your weekend. The replay will be available in our YouTube channel, which I will place in the chat box momentarily as well. Have a nice evening. Thank you all for being here, and have a happy and safe Labor Day weekend.